Herzlich willkommen, bonsoir, bienvenidos, benvenuti. Welcome to day 2 of Fintech Europe Expo 2021. Now, after a great and successful day 1 yesterday, we're looking forward to experiencing yet another brand new day here at the Expo with a lot of panel discussions, reports, keynotes, and future prospects. Now, whenever you want to participate in the online conversation, make sure you use our hashtag PNP Fintech, especially on Twitter. And if you want to participate in the conversation on YouTube and Facebook, type in your messages into the chat window and we can make sure we answer all your questions you may have. Now, topics that will be discovered and covered today are customer experience, real estate, sustainability, payments, future of banking, and the Deutsche Bank APIs. But before we dive deeper into day 2 of Fintech Europe Expo 2021, let's watch a short video we've put together about day 1. Here with me today is a former member of the European Parliament with focus on legal and economic issues. And only to mention a few of the positions he's currently holding, he's board member of the Deutsche Bundesbank and member of the supervisory board at ECB. Please welcome Professor Joachim Wuermeling. Big applause, Mr. Wuermeling.
Good afternoon.
We have to imagine the applause here. Great to have you here. Mr. Wuermeling, 2020 and 2021 have been impacted, of course, by COVID-19. But can you actually tell us how has COVID impacted the financial sector?
Well, it's not the financial crisis, but 2020 went quite smooth. There were no big losses. There were even some more revenues from investment banking. But 2021 will be tough because we will have loan defaults. We will have even more problems from the enterprises. So I expect a hard year for banks 2021 and a hard year for supervisors as well.
And actually, you've prepared a few words from the central banks to our audience. Feel free to take it from here.
It's a pleasure. Well, I'm delighted to be taking part in the Plug and Play Fintech Europe Expo today. For me as a central banker, it's a unique opportunity to liaise with you. To me, this event is my, let's say, first highlight in 2021 indeed. A warm welcome from Deutsche Bundesbank. I wish you a good afternoon and an inspiring conference. Well, by the way, it's not the first highlight which Plug and Play offered to me. Some years ago, I was lucky enough to visit the headquarters in the valley in Sunnyvale. The innovative spirit wafting through the premises really made a lasting impression on me. And it is this spirit, financial technology has become the main driver of the transformation of finance. It is now an essential part of banking. So it is for central banking. I take a virtual look into the audience. Startups, venture capitalists, consultants. Be honest. When you think of central bank, innovation might not exactly be the first thought that springs to mind. Instead, your first thought should hopefully be stability. But take it from me, stability and innovation do not contradict each other. Instead, they go hand in hand. Technological progress has always shaped tasks and activities from central banks. Fintechs and central banks do cooperate already, but should cooperate much closer in the future. And this is why I'm so happy to be able to speak to you here today. My appeal to you is watch out for the digital activities of central banks. Here are 3 points why you should. First, all fintech innovation is in some way or another connected with the activities of the central banks. For centuries, central banks have been the backbone of the financial system. They have been issuing currency, providing payment infrastructure, and ensuring that banks are stable. Digital transformation is relevant to us in 2 regards. One is that we need to understand the technical progress in the industry when using our tools, be it in monetary policy, be it in banking supervision. The other regard is that we make use of new technology ourselves, be it in analytics, in processes, or in products. What we do might be highly relevant for you, your products, your business cases, your ideas. Would it matter for you if we issued a digital currency? If we based cross-settlement on a ledger? If banking supervision would restrict the use of machine learning? Oh yeah. The impact of central banks on innovation is particularly valid for the large Eurozone, which today sets a frame for 19 countries and 350 million people. Bundesbank, as a central bank, the biggest central bank in the bloc, tries to play its role. We are an integral part of the euro system. Second, besides the stability of the currency, central banks' main task is the stability of the financial system as a whole. I hope everybody agrees when I say new technology can at the same time promote stability and bring about new risks. We have to play a dual role. On the one hand, we want to enable digital innovation in the financial sector, harnessing its potential for financial stability. On the other hand, we have to keep an eye on potential risks arising from digital transformation. It is our job to supervise all risks to financial stability. Be aware that central banks are looking after this, globally, in Europe, and in the nation states. Looking to digital innovation, my wish would be financial stability by design. The COVID-19 crisis is certainly providing an additional boost to digitalization, particularly in the financial sector. But let me be frank, increasing use of online banking, digital payments, and conversations with clients by video are by no means the digital transformation of the future. It is not more than the adoption of technologies invented in the last century. But the pandemic might encourage all players in the financial system to innovate more quickly and more radical. Yes, the digital revolution is still to come in finance as well as in other industries. Artificial intelligence, machine learning, cloud, distributed ledger, quantum computing, an ever-growing volume of data, whatever buzzwords you name, all have the potential to disrupt each and every business model. And as we central bankers learned recently, including that of central banks. I believe we are at the beginning rather than at the end of digitization of the financial system. The magic moment for financial technology and fintech companies may still be to come. New technologies also have the potential to make the overall financial system more resilient. For instance, financial institutions can use AI to better detect and ward off cyber attacks. Early warning systems for loan defaults based on automatically evaluated economic news could improve risk management. Digital innovation can enhance the stability of individual institutions and of the entire financial system. If we manage to strengthen financial stability through digital innovation, this could make supervision and central banking more effective and more efficient. Third, central banks are themselves innovators in the financial system, but we need your imagination. A digital approach to finance is not merely limited to private actors. It extends to the entire financial ecosystem. Central banks are joining in as well. All around the world, we are exploring the risks and benefits of issuing central bank digital currency. The euro system is looking into different concepts for a digital euro. Real-time monitoring of the financial system is a fascinating vision for central banks. Just recently at the Bundesbank Innovation Challenge, 10 startups pitched for the most innovative solution for risk monitoring at our institution. Innovation needs space, mental space, yes, but also physical space. We are currently building Innowerk, a collaborative workspace in the city center here in Frankfurt, not only for our staff, but also for the international central bank community. Together with Banque de France, the Bank for International Settlement and the European Central Bank, we are establishing one of the 9 global BITS innovation hubs around the globe. But Innowerk will not be limited to the central bank community. We wish to involve the broader ecosystem with you, the startup scene, experts from academia and other creative minds. Our offer will range from open discussions and talks to joint workshops and hackathons. We want to make this a win-win situation in which the Bundesbank benefits from technology and creativity from outside, while startups become familiar with the world of central banking. It is safe to say that we are not and we will not become a fintech ourselves, but we are constantly expanding our network with the digital finance community. To conclude, now you might be wondering, what's in it for me? Yes, central banks are relevant to digital innovation in finance. That was my first point. Yes, digital innovation fosters financial stability, my second point. And yes, central banks innovate themselves, my third point. Beyond, I hope you all agree that digitalization is not just about making money. It's about making the world a better place too. For me as a central banker, a better world means a financial system which is ever more stable. I'm convinced that by digital innovation we are able to better contain the threats and vulnerabilities in finance. All of you can contribute to that. Please do so. Transformation of the financial system may not only make finance more digital, but also more stable and more resilient. To that end, cooperation between central banks as Bundesbank and the fintech community is key. We are interested in establishing close ties to the digital financial ecosystem. We might come from different worlds, but we can learn from each other and should collaborate. Let us bring together stability and innovation. I'm looking forward to an inspiring event today with insightful panel discussions and many shared ideas. And I hope to see some of you at Innowerk soon.
Thank you very much, Mr. Wuermeling. What an inspiring talk, and we'll be right back just after this clip.
Connectivity,
artificial intelligence,
trust, customer journeys, institutional capital,
digitized cross-border transactions,
customer centricity,
Now, as fintechs evolve and change, you can see our studio evolved and changed as well. And I'd like to welcome my next guest. The LinkedIn description and the LinkedIn profile of my next guest came in pretty handy when preparing his intro today. Now, he's very passionate about the city of Frankfurt. He's very passionate about being an entrepreneur and Asia and finance. And he's a lifelong member of Eintracht Frankfurt, the local football team. And he strongly believes the finance industry makes the world go round and entrepreneurs move the world forward. He has more than 30 years of experience working in over 15 countries all around the world as a leader in marketing and communications for the financial sector. And in 1996, he founded his agency, Newmark Finanzkommunikation. He's been promoting the Financial Center Frankfurt and created networks between international financial centers and therefore traveled the world and the globe for more than 12 years already. Please welcome, with a big virtual round of applause, Hubertus Felten. Hubertus.
Good to see you.
Great to have you here in the studio. How did you get here? All right? Everything good?
All set. We have snow outside,
but I refrain from skiing here.
All right, so how did 2021 start for you, Hubertus?
Pretty much like 2020 ended. We had, as you know, on the end of the year, the Brexit, which was something I was working on for the last 4.5 years, promoting Frankfurt, what's going to happen, how much people, how much assets, how much businesses are moving. So everybody wanted to have, so to say, the last update and at the end of the year and the beginning of the year. So it's been pretty busy.
So it started busy as it ended busy, and I think we carry on busy because you've prepared a few notes, a few words for our audience, and feel free to take it from here, Hubertus.
Thanks, Felix. Pleasure. Pleasure. Ladies and gentlemen, a very good afternoon from my side, and thank you to Plug and Play having me here today to open the second day of the Fintech Exhibition 2021. Ladies and gentlemen, I know the entrepreneurs, the Fintech entrepreneurs, have been worried when COVID-19 started, how eventually the situation will evolve. Will it accelerate like we see it in the payment space, or will it funding dry up like we've seen in Q2 of last year? So pretty much my take on that is, if you hear anybody complain about COVID-19 holding him back or her back, I would say it's probably something else that is amiss in this situation. It's now or never when fintechs will have to show their worth. It's now or never when they will have to step forward, show that they can handle the distance very well, that they're geared to have customer-centric products and services out in the financial space. I was not surprised when PricewaterhouseCoopers came up with their FinTech radar for Germany. What you've seen there is pretty much that fewer companies went out of business and the number of corporations increased significantly, be they banks or be they insurance companies. So it's been a good years for FinTech. And I believe that right now you're at the right time and the right space. So I very warmly welcome you digitally to Frankfurt. And that's not least because of Brexit. 1,000 billion additional assets, banking assets, have been moved to Frankfurt, and so have close to 4,000 additional jobs. So when I was starting that campaign in 2016, I was considered nuts. How the hell could Frankfurt compete with London, with Paris, with Amsterdam, with all those financial centers? You've seen we've done pretty well. And it is something which I believe is not by accident. Because I know when you come here, when you feel and when you see and when you sense the vibes in these cities, you will know that something is happening here. And I pretty well know that you can feel digitally as well. What you see is central banks, what you see is regulators, what you see is banks, tech companies, and all that. And on top of it, of course, obviously, Plug and Play is here. TQ is here. The Green and Sustainable Finance Cluster is here. SDG FinTech Initiative is here. So the next thing that's going to happen is the tokenization of securities trading is going to move forward with a very innovative legislation. Already companies from the US exploring that new space, so stay tuned. It's the right time to be in the right place. And Frankfurt is going to be the place to be in finance in the EU 27. With no further ado, I would get back to you, Felix.
Thank you very much, Hubertus. That's a great outlook into the future. We're really excited, and thank you for being here.
Thanks very much, and see you in Frankfurt.
All right. And after a short, tiny break, we're back with Deutsche Bank API. Welcome back to the presentation of Deutsche Bank API. Now, banking is evolving and we have new innovations coming in almost every single day. We're now going to look into the future of banking, the future of APIs, and of course, how fintechs can find the right partner with Deutsche Bank. Please welcome Community Manager at Deutsche Bank, William Powell. Hi, William.
Hi, how are you doing?
I'm good. How are you, William?
A bit nervous being here. This is why I brought somebody. I'm not here alone.
All right.
I brought my colleague, Thorsten Gruenheit.
All right.
Who's much more into details and everything. I mean, I'm talking a lot. No, he's not, but he knows a lot.
All right, gentlemen. So whatever we've heard about API, well, what I heard about API might be redundant because you're presenting some new insights and facts.
It's not that new. It's maybe new to some people. Maybe it's new to you because it is new technology. Okay. But with the fintechs out there, I'm pretty sure most of them have heard of APIs and maybe heard of some things that Deutsche Bank is doing. But yes, we will try to present some new stuff.
All right, we're excited.
That's why we are here, and we want to have you fintechs out there bringing us the innovation and working together. So that's
True.
why we are here.
Maybe they can tell us some new stuff.
All right, perfect. Take it from there. Thank you. The stage is yours.
So, where are we starting? I should have a presentation somewhere, but I do not. Maybe I should. There we go. How did we start? How did we get here? A couple of years ago, people were thinking about how would it be to open up the banking. And how would it be to share data within the bank with people outside of the bank? This was, at the beginning, it was a bit of a whisper because you couldn't do that in front of data protection people and in front of kind of old school bankers, but within time it evolved. And the idea became stronger and stronger. And then even politicians picked it up and lobbyists picked it up, took it to the European Union. And they've been doing something that is called PSD2, the Payment Service Direction 2, which is basically that every larger bank within Europe has to open up their accounts, their data to third parties, which all of you, I guess, know because you were the drivers of these. And while this was happening and APIs were kind of being created there, Deutsche Bank was working on that by itself already, had picked up the idea a bit earlier. And at the beginning of 2015, we created our own team. It started with 2 people within Deutsche Bank, pushing it forward and spreading the idea within the bank first. And we kind of had a very big hackathon a bit later, and then it became clear within the payment system that this was a good thing to do. It was the thing that people were waiting for, that the big companies were waiting for, and so we pushed it forward a bit more. And from that first internal hackathon, we went out and had a very large hackathon in 2016. And the winner of that, we will introduce those later on. That was Finanzguru. That was the first fintech that worked with us. It was the first startup that worked with us within the API group, within the API team, and we got bigger and evolved around that as well. We learned a lot from working together with the Finanzguru. They learned a lot from us, and we got bigger and bigger. And now we got, I think, 35 people working all together in the API team itself with the developers. And all the teams that are surrounding that and working together with us. We're coming to that in quite a second. That's then even more because we realized we cannot do all the work by ourselves. And we realized we cannot come up with all the ideas all by ourselves because some of the fintechs, some of the startups that we've been working together, they came up with completely different ideas that we had for the APIs. And we thought, well, why not? Let's try that. And it was a success most of the time. And I think now we're up to 26 API products that we have. And some of them are for the corporates, some of them for smaller third parties, some of them are for e-commerce, and some of them are especially for fintechs, of course, so we will come to that a bit later. Open banking, something that I already said was something that people thought was this when you kind of open a vault and then you close it again, because banking and open, that could go together for a long time. But now banks are opening up, so do we. And we really appreciate it when fintechs come to us with ideas, come to us with new ways to do stuff, and new ways to embed banking products via API within their landscape, within their thing that they do for their customers. And we really are here not only to present ourselves as, hey, we're doing a lot of stuff, but hey, come and work with us, because this is what we need. Working with APIs and having a platform thing that we're trying to create, this is nothing that is kind of witch work. It's nothing magical. And what we learned that right in the beginning when we took a look at Uber. Uber was a new hype thing back at the time, but when you look at it closely, it's just it's a map, and it's a payment system, and it's a messenger system, all brought together in one platform. And that was new, and that was kind of sexy because it worked. And this is where we want to go. Maybe we just skip the sexy part, but this is where we're going to go. And as I said, we're not going to do that, and we're not doing it all by ourselves. We're not doing it alone. We have a lot of people, not only within the Deutsche Bank working with us, but within the Deutsche Bank digital team, the digital, I don't know, offensive, I would call it. And I would say Torsten takes over from here because he knows a lot of more people.
Yeah, exactly. So we are directly coming from the API program, as said, with around about 35 people. But around us, there's the new ecosystem team, and further on, you will hear more about that, what they are doing, especially connecting with you, startups, bringing your products in the realm of Deutsche Bank. Then there's startups at Germany, that's especially for you, someone you can talk to, and Christian, who will later on tell you something about that. What they are doing, if you need an account or if you need funding or whatever, there is they are your guys. And at last, as I said, funding venture capital team is also there, who can discuss with you options Deutsche Bank has to fund something. And yeah, starting with a startup team, Christian
Klaas joining us now from Hamburg.
Hi, William. Hi, Torsten. Thank you. Hello to everyone. So my name is Christian from the DB startup team in Hamburg, Germany. I'm very happy to be here connected with you today. So I want to introduce you to our startup coverage from the Deutsche Bank. I want to start with our approach. So what is our approach in the Deutsche Bank startup and tech coverage for Germany? So our local presence enables us to be very close to our clients, and as a part of our corporate bank, we are focused on a client relationship, and the regional approach is still a benefit for us. And in addition to that, we have the DB industry experts, which are our kind of USP, who help us to much better understand especially complex business models and different industries. And this is also very helpful for us and as well as for our clients. So we are offering across the whole bank suitable and specialized contacts and solutions on all aspects of banking and beyond that. So maybe we can move to the next slide, where I want to introduce you to our heads. So who are we? These are our regional heads, based in very relevant hubs in Germany, who are coordinating our regional and also cross-regional startup and tech activities for the Deutsche Bank. As I said, we are represented in all relevant hubs in Germany and benefit both all from exchanging ideas with one another. As I said, this cross-regional. So I'm based in Hamburg, and I'm also benefit from the input from Berlin, for example. So in addition to that, we are supported by Jana, as you see from our headquarter, from our head office. And behind these heads is always a great team. So I would like to introduce it to all of the teams, but I think it will go beyond the scope today. So maybe we can move to the next slide, and I would like to introduce you to our team here in Hamburg. So as I said, my name is Christian, and I'm here based in Hamburg. It's in the northern of Germany. So maybe, by the way, who's not familiar with my personal opinion, the greatest city of Germany, please feel free to contact me for any information and tips also beyond our content today. So I'm mainly responsible for as I said, for the client relationship with our startups and growth companies, mostly in the tech sector. So we had a rather broad approach than not only the collaboration with fintechs. So I work very close with our head Timo, but our team consists of employees from all relevant divisions from our bank. So this enables us to offer our clients suitable solutions and valuable network partners as well. And in every stage, in every single situation in that journey. So we see ourselves more as strategic partners than just banking experts. So maybe we can move to the next slide, please. So as I said, we accompany our clients along the individual life cycle. And at the bottom of this slide, maybe you can find the typical needs of startup in each stage. And some example of our solutions to match them. So it starts with basic account services, go to access of our startup ecosystem, over to initial working capital solutions, as well as global banking services, cash management, trade finance solutions, and finally also to capital market solutions. So we collaborate very close to our corporate finance expert as well, especially for the growth and later stage companies. So since needs can also change very quickly, and especially in this special client group, we always take an individual approach to find very suitable solutions for our clients. And I think this is very helpful also for both sides. So I think we can, on this stage, we can also move to the next slide, please. So this is the last slide from my side. So beyond this typical banking product, the proximity to our clients enables us to connect them with each other, as well as with important partners and teams of our entire organization. And for example, as you heard, the DB API team, the DBVC team, the new ecosystem team, and much more partners that we are collaborating with them. So that's why a diverse network is key for our startup and tech positioning. And it starts within the bank and goes beyond that. So as well as with, or only with the help of many great companies and partners. So, and I think with this holistic approach, we are very happy to be a part also as a startup at Germany coverage as a part of the whole entire ecosystem on the Deutsche Bank. And that's from my side. Thank you for listening. I think we should go over to Gunnar, right?
Thank you, Christian, so far. Torsten, I think you're gone now.
Yeah, so aside from Christian, there are other teams I told you about earlier. So there's the new digital ecosystem team headed by Sven. Yeah, Gunnar will later on show you some things, what they're doing and how to contact with them. So if you have a nice product and have a good product for our clients, contact them and discuss what you want to do, and they will together with you discuss options that there are and perhaps even in the future we will see each other closer again. Because I'm and we are from the API team itself, connecting partners out there via APIs. If you have a new solution, a new product, and want to connect data into Deutsche or out of Deutsche, whatever there is, like you want to have your product enhanced with Deutsche Bank personal information of customers, like that simple case, or you have a more complicated one, contact us. So Joris, who you will see in the panel later on, he's the one of the two founders of the API team. I'm heading the product management, and there are more product managers and community managers out there who can support you if you want to discuss connecting API, everything new and old. Well, old, everything is new, but there are more innovative things and some things that have to be there. And yeah, then if you want to contact us, the simplest way is the developer portal, developer.db.com. All contact information is there, email addresses are there, feedback forms are there, and all our APIs that are public in simulation or even in production when you want to directly connect. Log in there, feel all our APIs, how they work, how you can connect, and then start and yeah.
That's the next part.
and onboard.
That's the next part, because we only gave a kind of a quick overview. I think you grasped that already. And our two colleagues, Gunnar Stamer and Johannes Felten, they're here to give you a bit more of a deep dive. We talked about Gunnar. He's from the new ecosystem. And he will tell you all about partnerships, what you can do, and how you can connect to us. And we have Johannes Felten, who's one of our developers, and he will give you kind of a quick stroll through the developer portal. So thank you so far, and with this, over to Gunnar and Johannes.
The rise of the platform economy is relevant to literally any incumbent industry. The financial industry will change dramatically, and this weekend forms for us an important part of our own transformation towards a technology company.
And it's me again, and I told you already before that I didn't come here alone because I'm a bit afraid, and the thing with talking people like I am, we're big when it comes to the overall picture, but when you have to dive into the deep and really transfer knowledge, I need experts. This is why I brought two teammates and team colleagues. We got one, Johannes Felten. He's one of our developers, and he will show you a bit of the developer portal. And talking about the partnerships that we have is my colleague Gunnar Stamer from the new digital ecosystem team. So guys, stage is all yours. Have fun.
Thank you very much. Thank you. Nice. Comfy. Yes, thank you very much, William. As you said, my name is Johannes. I'm a backend developer with the DB API team. And I will give you a quick tour over our developer portal, which is basically your first stop if you want to learn about our APIs. It has lots of technical documentation, also non-technical documentation, but I will get into that when I demo the developer portal.
Yes, and I'm Gunnar. I work in the new digital ecosystem team. I'm responsible for the corporations or partnerships, the scouting, and I will tell you more later.
All right, let's just deep dive into the portal, I say. Okay. So the portal is, you find it under developer.db.com, and as I said before, it holds all sorts of information that you might want to look up. It has our blog up here. It has non-technical documentation as well as technical documentation, and of course a description of all the API products. So we have around 30 products, I think. That includes the end customer APIs as well as the PSD2 and corporate APIs. I will get into I won't cover everything here, but I will get into some that might be of special interest for fintechs later on. Suppose you have found an API that you want to try out, or maybe you have an app that is already live and you want to provide it to the Deutsche Bank customers. You basically need to know how to talk to our APIs, and that is what you find under the docs section here. Just in a nutshell, we talk HTTP on the backends, and with JSON going in and out. Authentication is OAuth 2. I won't cover that in detail because it would be, I think, another hour talk. But I would like to show the API Explorer, because that's like the next thing you would do. I pick one from the banking, it's the H certificate. But just to get a feeling for the API, the endpoint, you can head over here. And if you're familiar with the Swagger UI, this might feel actually pretty familiar. Up here you can download the Swagger file and put that into your favorite tooling like Postman, create collections from there, or put it in your IDE like IntelliJ to create your model classes from it. If you scroll down here, you get information about the endpoints itself. Here it's pretty straightforward, because what the H certificate does is just give you an answer to the question, is the customer older than a given age? Yes or no? So it's a nice example for data minimization, and that was what it was designed in mind with. So you get information about any parameters going in, the type, if they're required or if they're optional, and how a response would look like. As I said, just yes or no, true or false. This is nice. Docs, we all love docs, but we also have a thing that we call the simulator. Others would call it sandbox or playground, and that is behind this try it out tab. Because that lets you play around with the APIs without the need to program something like a prototype or something. So you just hit execute here. And the nice thing is it behaves just like the real thing. So you get a little curl representation of the actual call if you need more details, and you get an actual server response. And in this case, it's 4.1 unauthorized, because in real life you wouldn't want anybody accessing the APIs without any authentication. So I need to authorize first. And that brings me to the part of the dashboard developer portal that you only can access if you have signed up. That is easy enough. You just sign up, you need an email address, and then that's it. And if you log in, you find two important parts on the so-called dashboards. One is the apps part to the left here, and that is where you create apps. Creating an app is basically establishing the trust relationship between you and us in a technical point of view, and it's also mandated by the OAuth 2 standard. I already did that, so I won't go into here in detail. Creating an app is pretty straightforward. You just hit create new app, and the rest should be self-explaining. The other thing is the test users part, and that's what I need now for trying out this API. We have a bunch of test users which cover different scenarios, like a single student, lower income. We have families in here, also small companies, and you can use them to test the APIs on the API Explorer here, or if you have a prototype or a working product. The test users have basic infos like address, date of birth, stuff like that, what you would expect. One thing that I would like to mention is the accounts part or the transactions. Here you can actually create transactions and stuff like that and fiddle around with, I don't know, your business logic if you filter on certain text or stuff like that. What I need now is basically this information up here, the FKN and PIN. That's what Deutsche Bank customers use to log into their online banking, and that is what they also use during the OAuth flow to authorize your app to talk to our backends. So you can write it down or just copy FKN PIN here. This is basically like logging in as an end customer into your app. And here I can give consent that I want your app to be able to access this information. So what falls out here is the JOT token, which you could now validate sorts of interesting information in there. Okay. But if I now I'm authorized, and if I try that endpoint again, I will get an actual answer. I'm not sure how old the test user is. It's definitely older than 14. And basically now know that the customer is somewhere between 21 and 25. It might be interesting if you have certain services that you want to provide based on an age, on a minimum age, like give them a discount if you have car insurance or something like that. The other APIs are a little bit more complicated, but basically it all boils down to the same way that you can fiddle around with them without the need to actually program something. With that, actually you know everything that should get you started. If you want to play around with our APIs, next step would be probably to create a prototype of some sort and hook that up. One remark: if you are confident that your app is ready for the world, you enter the so-called go live. What you actually do to enter the go live process is you hit go live here, and then you need to fill out a questionnaire that is from a non-technical point of view. Getting it live is just to swap the base URL from the simulator URLs you are using in here or when you're testing your app by the actual live URL. Okay, coming from this rather technical developer-driven approach, leading over to the more business developer, which will be covered by Gunnar later. Maybe a few words. What we call API products is actually a bundle usually of a couple of endpoints. You see some that might be of special interest for fintechs. I won't go into details, but feel free to reach out if you have any questions. And with that, I hand over to Gunnar. He will tell you about a little bit about collaborations.
Thank you, Johannes. Yes. So, in our new digital ecosystem, we are very much focusing on the customer needs, and we are scouting demand-driven from the inside. And as we look into the pain points of our customers, we try to find solutions and fitting products that the banks usually do not offer, but are bank related or financially connected. So like getting clarity on all your existing contracts, or finding the right real estate, or having a better transparency on your financial health. So these kind of solutions are very relevant for our clients, and we are trying to get this connected with third-party solutions. What are we doing? Basically, the new digital ecosystem is your single point of contact, and we guide you through the bank internal ecosystem. We help you deal with all the internal processes. We help you coordinate with the relevant functions, evaluate the options for product bundling with existing banking products or identifying cross-selling opportunities. On the other hand, we also, together with you, target the right groups within our customer base to scale the solution. Generally, we love to co-create together with the third-party providers and get our customer needs satisfied and work very close with our collaboration partners. So just to mention the successful partnerships we have so far, and it's not a complete overview, but those 4 are the ones we are very proud of to partner with. We focus on revenue generation, and just like the RP team, together with Johannes, we would like to increase the number of successful partnerships for the bank. So if this was of any interest for you and you're now keen to work with us, here is how.
Yeah, the first step would be to sign up as a developer. That's basically what I showed just a couple of minutes ago, and start hacking. And once you are ready for the world to show the app out there, you go into the live process, and then you become an API partner of ours. If you want to take that a little bit further, you can even become an API network partner. That is to work with William closely to even deepen this partnership. Or you could even go for collaboration, which is
That's it.
Even more.
Thank you.
Thank you, guys. If you have any more questions for those 2, then you can reach them later when we have our socializing part. Oh, I'm sorry, I'm in the way, Johannes. Sorry for that one. And if you want to know if I could answer all these questions or could come up with all these things that they just rattled down, yes, of course. Test me later when we see each other in the Remo part, when we see each other in the socializing part. Now over to something completely different. So thank you, Johannes. Thank you, Gunnar. Now we heard a lot about API products. We heard a lot about the developer portal, and we heard a lot about the partnerships that you can have. So let's jump into a discussion with one of our actual partners, the first one, not one of the first one, the first one, the one that we learned a lot from. And here is the co-lead, my boss, to be nice. From the API team, it's Joris Hensen and Benjamin Michel, the co-founder and CEO, CTO, see everything O of Finanzguru. Welcome. Guys, feel free. Thanks.
Yeah, thank you, William, for this very kind introduction. Good to have you here, Benjamin.
Thanks.
Maybe let's, for the very few ones out there who don't know your product yet, could you tell us more about your product in a few sentences?
Yeah, so my name is Benjamin. I'm one of the founders of Finanzguru, and with Finanzguru we help customers to get the best out of their money. It's based on open banking. You can connect any bank account, and it's that easy to really get on top of your finances.
And also, William mentioned that you are the very first partner.
Yes.
And I remember that we had this hackathon in Berlin, and we had this idea of building an API so that everyone can access our data out there and work with it to build new products. And we went through this collaboration from the very beginning until the very first investment into a startup. So how did you experience this collaboration? And I will add a few sentences about how I experienced it.
Yeah, I think it's a very special collaboration because actually we built something together from scratch. So back then when you had your hackathon, which was a competition where 150 companies from all over the world were invited to really work on the future of finance and to really realize ideas how the future can look like. It was a challenge which caught our eye and where we said we want to be part of that. Yeah. And so I think it was very exciting to be in Berlin and to have 42 hours to actually develop the first version of Finance Guru, where you can actually connect your bank account and then we analyze your transactions. We identify that you have an electricity contract which is too expensive, and it was a big vision where we wanted to go, and we were looking for a very strong partner, not only on the technical side but also on the business side, and I think this is what was actually a perfect match for Finance Guru as well as Deutsche Bank, because we are like the young, very agile startup in collaboration with a business partner who has the trust out there in the market, a very big brand which has a lot of trust with customers. I think this was like a perfect fit where we were able to learn from your experiences and also the knowledge you had about IT security, for example. How do we cope with or how do we take care of data privacy? Big questions for a startup. Yeah, you know, you have like 6 people, you have this big business vision in front of you, but you don't know how to get there, and all the expert advice we were getting from Deutsche Bank. I think this made the whole collaboration very special in many different or from many different perspectives.
I gotta say, we also learned a lot. No,
yeah, of course.
You just mentioned a small team, 6 people.
Yeah.
So one thing I really learned how precious the time is, because every minute you spend with us, the corporation, you cannot invest into making your product better, develop it further, right? So
absolutely.
You have to keep that in mind. That's something I learned. The other thing I learned is about how careful you have to be with these partnerships, because maybe not you, but other startups, they already made their experience with corporations where their point of contact changes all the time, where decisions can take a very long time. So that's something, for instance, we handled like an egg, you know, like very careful about this partnership.
I think that's also something where we went through the learning process together. So I think at the beginning, it was also like, okay, there was a big corporation and there were like 1,000 people and you don't know who you actually have to talk to, who actually does who takes the decision, and questions like that, which were very big for us. And I think at the beginning, there have been many open questions, and I think which was really cool that you had like a dedicated team who was really committed to find solutions. And I think this is very important for a startup, because if there is a will, there is also a way. You just have to figure it out. And I think this was where we both learned. So I think not everything was smooth. So I think if you remember, we both know it was not everything smooth, but the process and how we learn from each other and also doing the on our way. I think this is important, and I think nowadays it works quite smooth. We know who we talk to, and now also the processes are much more structured compared to the early days, because now it's more like we have been the very first partner. Of course, it's like pioneer work we had to do, but now I think all the new partners who will join in the future, the way is much more smoother for them compared to for us, probably.
Yeah, and I mean, you're right. The road was a little bit bumpy, but at the end of the day, I mean, this cooperation helped everyone to understand what open banking is, right? Because we knew, okay, this is what we aim for, but what actually is open banking? So they could all download the Finance Guru, and they started to understand, okay, that's the potential you have with open banking. So that was great, and now we have more partners. And talking about these partners, and maybe talking about partnerships at eye level, what would be your recommendation to the audience out there in terms of recommendations as newcomers or old hands of fintechs to work with us and partner with us?
With Deutsche Bank.
With Deutsche Bank, yeah.
I think first of all, you really have to think about what is your goal. So, and I think if you have a common goal, and if you think of how can we achieve this goal, can we make this goal bigger, or can we achieve this goal in a quicker way, then I think it really makes sense to partner up with a partner who can help you doing this process to achieve these goals better and quicker. And I think this is, at the very beginning, that's the most important question. Yeah? And then I think it's also about how do I get in contact with. I think it's very important to get to know the people you will work with in the future, because if you don't connect on a personal level, I think it's also quite difficult to work together on a professional side, on a business side. And so I think there are many questions you have to answer. First of all, you have to know what do you want, and then it's more about an iterative process. Yeah? It's like with anything you build from scratch. It's like, okay, you have to try something out, you have to build the first product, then you have to learn from the data, from the feedback you receive, and then you have to continue and improve every single day and find out where you want to head with your product, with your vision. And this is something which you don't know at the beginning straight away, but it's something which evolves over time.
And talking about people, is there anything you said like, okay, it's important to connect to people, and we already met a few of them about you, but is there anything you have on your mind? What made it easier for you, or what is it that you think is important with regard to the people and the teams you work with?
Yeah, I think which was quite cool, that it's not purely like a business relationship. It was also like, I remember that we went out together and we had some food, and then we kept going, had maybe 1 or 2 beer, or officially water.
Officially water.
Officially water. But I think that's also how you get to know people, you know, and it's quite cool that we also had workshops at the beginning. So we really sat together at the table, we threw down what we wanted to achieve, and then we put our heads together and did a brainstorming together. So I think it was a very intense process at the beginning, and I think that's also very important to really spend time together, do the thinking together, and go through all possibilities so that you can actually also identify for yourself what need do I actually have. And this is, I think, something important where you're looking for sparring partners, which we had so many in the early process. Yeah? So from your business side, yeah, we talked a lot. Then you also had people from the business departments, from privacy departments, also from the technical side. And so we were able to create the whole picture with so many people, and it was very a process which added so much value to our early days.
And I can still say, no, it goes both ways. So I still think asking you for advice, also like talking about stuff that we have on our plate, this is very useful. So it always works the other way around. So absolutely. I consider that.
And still we're in the product development phase, right? So it's like, okay, you put out the first version of your API, and then we, for example, we identified there were special types like VIPs who couldn't access their accounts via your API. So that was very valuable feedback we gave back to you. And now it's about we want to provide some insights into brokerage accounts. So this is a new product which we are developing on our side. We're giving you this feedback back, and I think this is like how this collaboration works, and in general how you grow together. Because at the beginning it's about the very basics, you want to access the current account, but then once you see, okay, it's somehow it's very successful, and then we also receive feedback from Deutsche Bank customers who say like, hey, I want to also access my saving account, my brokerage account. And so this is how we forward feedback from your customers to your business department, and I think this is also how we grow together over time, and I'm very eager to see what will happen in the future, because I think there are many possibilities and opportunities we want to we want to realize in the future as well.
Yeah, same is true for us. So I'm glad that you help us growing our API. We're making our API better and better every day. So thank you for that, and also thank you for being here with us today, Benjamin.
Yeah, thanks for the invitation.
And thank you all for listening and watching.
Yeah.
Currently, there are trends and challenges shaping real estate like never before. Trends like IoT, smart home, automated home valuation models, AI technology, and many more. Let's take a closer look at the future of real estate.
Real estate has been slower than other industries in the adoption of new technological trends. However, it is gradually adapting to the new times, and now PropTech is reshaping the industry as we know it. To emphasize the current size of this ecosystem, PropTech today has the same funding size as Fintech did back in 2013. Promising, right? We're going to talk about the latest trends and the way in which innovation is changing real estate. We will also analyze the current situation of residential and commercial real estate, and we will go through the markets that are leading the way internationally. Ready? In real estate, a growing number of deals rely on data. Using it can lead to smarter decisions, and data has become the most important asset for many companies. With the new technologies being adopted, personal data and building-related data are growing exponentially. Those who can use this information in a profitable way will have an advantage positioning in the future. There are challenges though. The main challenges that the industry is facing are all centered around data. That can be data sourcing, data quality, data privacy, and data preparation.
Well, I think the challenges at the moment are exchanging of correct data from the source to the user of that data. And what you see is that the value of data is actually availability times quality times the usage of that data. And what you see now is it's really inefficient, stored everywhere, with all different parties, and causes a long time of timelines and overuse, inaccuracy, errors, and that's why also the real estate industry is quite transparent, and because there's a lack of good data. So that's a challenge that I see at the moment.
First of all, we find that a lot of our clients, they are not sure where they can source the data that they need in order to do the analysis that they want. And then once you do source that data, you need to make sure that it is of a good enough quality to use, because all of our solutions are obviously based on the data that is fed into them. So if the data is not of a good quality, the solution is not going to be of use for you. So once you find that data, you make sure that the quality is sufficient. You then need to make sure that it is compliant with all of the regulations that we have around data privacy, personal identifiable information, GDPR, etc. And then you need to prepare it in such a way that it is ready to consume. We have seen that data analysts and data scientists typically spend up to 80% of their time in this process before they actually can do their job and before they can begin the analysis. What we are currently seeing is a huge growing interest in location intelligence. And actually, not very long ago, research was showing that although 80% of all data that is generated by companies across the globe actually has a spatial element to it, whether that is the location of a person or a shop or where even a transaction takes place, for example, just 10% of that data is actually leveraged to make business decisions. However, I think we're seeing that in the last few years, especially, that interest is growing and growing all the time.
The Internet of Things refers to all of those smart devices that are digitally connected to the cloud. They consistently receive and send information. IoT helps real estate professionals grow and manage businesses more efficiently than ever before. Through developments in AI, agents can save time, eliminate error, and more productively analyze automated data. It also allows for intelligent building automation. These devices can alert owners or property managers to potential problems and even allow for predictive maintenance. They can help with energy efficiency and create real cost savings. Let's see a few examples. For instance, an intelligent climate control system might also detect debris and deploy housekeeping robots for cleaning. Sensors in potted plants could communicate with automated watering systems. In fact, according to the IEA, IoT technology could lower the energy consumption of residential and commercial buildings globally by 10% between 2017 and 2040.
I would say that one of the biggest challenges the industry is facing in adopting new technology because of the lack of infrastructure within it, as well as legacy equipment and interoperability has been the biggest challenge in making systems, devices, equipment web-enabled and interoperable when they were never designed for it.
This is why they are creating a universal translator to enable equipment to become web-enabled and all to speak the same language so that they can understand each other.
The goal of the solution is to digitally connect the world's infrastructure and commercial real estate so that it can be more energy efficient, more sustainable, and really prepare for the future. The main benefit that we're providing is the capability to affordably connect commercial real estate and to devices, systems, equipment with an all-in-one platform that brings siloed equipment together.
Those investing in real estate usually look at the condition of a property, its square meters, or if there's a good school or supermarket nearby. However, there are a lot of parameters that are harder to find and that can be game-changing for someone investing in real estate. And that is where automated valuation models come into play. Automated valuation models use vast amounts of data that a human being would never be able to process. Property records, property listings from online platforms such as Immobilien Scout or Immobelt, indicating the attractiveness of the area. Using analytics and machine learning models, they predict the property's current or future value. Real estate agents certainly benefit from automating home valuation. While inspired by the human brain, the sophisticated algorithm examining homes is more accurate. The use of AI tech during the home valuation process helps to eliminate human bias, automate routine tasks that are tedious for agents, and make searching for a home more sophisticated than ever before. Lastly, the data determined by the intelligent algorithm helps agents and homeowners get a better deal since there's more information to consider.
Back in the day, or how things have been done before, pretty much it's been really important what is the market value of a property now, for example. What is it now? But now it's much more interesting what is going to be in Q3, Q4 next year. How will in the next 12 to 24 to 36 months, how will the values and risk in my collateral portfolio, how will they evolve? Obviously, humans cannot predict, for example, what is the value of an office space in the outskirts of Berlin Q3 next year, because nobody knows. But models know, because they take these non-linear components and value drivers into account. Obviously, this is useful when you do property-related lending decisions, but also when you do reporting and report your collaterals to the financial authorities.
Artificial intelligence is revolutionizing the real estate industry. For some, this may seem daunting, but the opportunities that accompany AI are already helping lenders, agents, and brokers better understand and dissect data to assist their clients in secure sale. AI technology is enhancing the home buying, selling, risk prediction, and valuation of properties. Some artificial intelligence applications can answer detailed questions about a home, like whether or not it has a pool or a backyard. The extra detailed AI tech provides potential clients with improves the processes of searching for a home. It also helps agents and ideal clients, thus increasing the odds of selling a property. To do this, some agents use natural language processing to establish high-value touchpoints and then determine the people who fall into the niche pool of their ideal client for a specific property. Real estate agents that are successful in this will quickly see the benefit of a good reputation and continue to sell properties, a win-win. Indeed, 2020 has been quite an active year in terms of real estate investment. With 22 billion invested, London is the first market for real estate investment in Europe. However, even if there is a common agreement on London's resilience in the mid to long term, fund managers believe that a hard Brexit might hurt the market in the coming 2 years. London is followed by Paris and Berlin in this ranking, with respectively 13 billion and 11 billion of investment. Germany's capital is the city investors want, especially its offices. Moreover, Germany's 3 other major markets, Frankfurt, Hamburg and Munich, remain firmly cemented in the top 10. Germany is perceived to be in a better shape than most of the other economies, and fund managers keep being bullish on the German market for this reason. A first strategic issue that had to be addressed during COVID-19 is that of space management and repurposing. Investment managers are not concerned anymore with what to buy, but what to sell in terms of office spaces. They are trying to assess which assets can be future-proof in terms of location, design, or ESG quality. The game going forward will be to make sure that whatever you invest in can be reposited and repurposed.
It's quite a challenging time for the real estate financing industry, as well as for many other industries. Without COVID-19, the main topics at the moment would be probably climate change, it would be geopolitical shifts, it would be Brexit, but now it's all about COVID-19.
From the landlord's perspective, COVID-19 has led them to take on more operational risk. Indeed, a new set of skills is now required to operate in this space. Real estate owners are compelled to use technology for the management of buildings and to secure the health and safety of others.
COVID is accelerating existing trends, but it doesn't change the human behavior in general very much. In fact, we even now in the middle of the pandemic, we see transactions where prices are barely affected, where prices are even higher than before the pandemic. With all the liquidity inflows, with the prospects of long-term, very low or even negative interest rates, will probably even benefit from what is happening at the moment and emerge even stronger out of the crisis.
One last key question to be answered in 2021 concerns the recovery of the hospitality sector, in which COVID-19 had such a sudden and devastating impact like no other. Many hotels have seen their occupancy and income fall to a fraction of pre-pandemic levels overnight. However, the shock to the sector has not been symmetric across Europe, given the high reliance on southern economies and tourism in terms of GDP. However, significant the effect of the hospitality industry, many people believe the hotel sector will come back. This will not be an existential crisis, but a question mark remains on the speed of the shape of this recovery. Some hospitality assets are likely to recover more quickly than others, like beach and resort hotels. Institutional investors predict that the recovery in business travel is expected to lag the leisure trade.
So in a unique business environment, real estate finance providers are under pressure to innovate more than ever. Digitalisation offers the potential to optimize along the value chain while actually staying in control of the customer interface. Join us now for the upcoming panel, Digitalisation, Who is Driving Innovation? And please welcome the moderator of the session, Managing Director at IREBS, Immobilienakademie at the University of Regensburg, Tobias Just.
So thank you, Felix, and welcome to the next session. This is a panel on real estate. It's about digitalization, who is driving innovation in real estate and real estate finance. And I'm very happy that I have the best panel that I could imagine on exactly this question. I welcome Alexander Betz, member of the Management Board and Chief Digital Officer of Patrizia Immobilien. I welcome Michel Spiegel, Head of Digitalization at Deutsche Pfandbriefbank, and Philipp Kaiser, who is Managing Director, Geschäftsführer of Helaba Digital GmbH. It's a daughter of Helaba startup, and he is also Head of Corporate Development and Digitalization. And finally, Gerald Kramer, who is the CDO Global Real Estate for Credit Suisse. My name is Tobias Just. I'm the Managing Director for IREBS Immobilienakademie, and I hold a chair at University of Regensburg. So actually this is a difficult topic at first glance, because real estate and digitalization seem to be like the antipodes, what I could imagine, very tiny bits and pieces, and then the bricks and pieces that are very large to invest in. So maybe we start with how to get close to digitalization in real estate industry. So the title this time might be considered different. Already 20 years ago, we published papers on .com boom and bubble, and everybody is now referring to that as the .com bubble that burst. And now we are talking about a mega digitalization cycle, and hopefully this lasts longer, and hopefully it's not going to burst. So let me start and asking Alexander where is actually digitalization starting in real estate industry, and where does it end?
Yeah, so Tobias, happy to answer. So first of all, I think, as you already mentioned, the situation is completely different from 2000. Okay, maybe some PropTech startups are hyped currently, but for a real estate industry in total, I would call it the other way around in terms of this is a late wake-up call. So it really means who doesn't digitalize effectively now, will soon no longer be competitive. So it's really about the entire digitalization process, what now should take place within the real estate industry, from my point of view.
Thank you. Maybe that brings me to the next question for Michel. We all hear in our real estate session that real estate is lagging behind, that we are slow, that all the other industries seem to be ahead of the curve. Even carpenters and hairdressers seem to be ahead of us. So why is real estate so lagging behind? Or is it actually true, Michel?
Yes, I think we are not the early adopters in the real estate industry, but on the other side, also as Alexander said, I think we are speeding up nicely at the moment, and you will see significant improvements in short time. And perhaps one of the most reasons is due to the complex nature of our business. If you look at PBB, for example, even if we're doing 8 to 10 billion new business a year, this is only 200 transactions a year. So main topic, having a standardized business and high volume numbers, which is one of the drivers for some automation, machine learning topics. That's what we are lacking. But as mentioned, we are speeding up, and I think this will change in a few years' time.
Joris, do you subscribe to that view that we are first lagging, and why is that? And are there special segment pockets within the real estate industry or real estate finance that are lagging particularly, and where will we catch up and where won't we catch up maybe?
Yes, I think
sorry. I was asking Gerard, sorry, Miguel. Of course, you can jump in later.
Yeah, I think actually, if you refer also to the first .com bubble, I mean, 20 years have gone by, and we practiced and learned a lot. And I think even the real estate industry is now speeding up, as the other colleagues said before. And I think obviously the crisis that we have right now is again something which is speeding up this process in general. And we see that major things are happening. So almost all of the major real estate companies really have digitalization now in their strategy, in their business strategy. They have departments, they have people and processes ramped up. And this is much different to when I started in the digitalization area in real estate like 10 years ago, where we were far away from where we are now, and we probably could not even imagine that we would be at this point of time. But still, there's a lot to do. And I think the most important thing that we see is that actually the mindset somehow has changed in the industry. And yeah, so on the operational side of the real estate business, I think we already see a lot of changes, and there will drastic changes also in the future. If you talk about a pocket which will not change so much in the next months or years maybe, is I think these one-off major deals, major joint ventures. This is something that still needs to be built on a personal level and can then be elaborated and implemented later on.
When you talk about these ventures, can you give an example where you see these issues?
So, I mean, right now I was talking about like these classical real estate joint ventures. I mean, when you have a major real estate development, or when you have the setup of a new fund or things like that, then actually this is something that needs to be developed on a personal level first and can then go into the digital production afterwards. And I think in the productions or in the operational state, we see already, and we will see more drastic changes. And but still, as I said, the personal level, this is at least what I see from my perspective. This still remains and still will be important for quite a bit of time.
Yeah, we will come back to that actually later on. Michel, do you have anything to add, because you were trying to jump in?
No, just for the former question, where we start with the digitalization, where we speed up, and these are, I think, around documents, customer interfaces, and these points I wanted to add to the former question. Thank you.
Okay. When we look back in the last 5-6 years, when innovation and digitalization was gaining traction within the real estate industry and the conference agendas, there were, in my view, there were several waves when the real estate industry had was peering Google and then PropTechs and then back Google and then back PropTechs. So Philip, what is your view? Is the disruptors more the big corporates in tech, or is it the small, vibrant reps?
Well, I think as the colleagues already mentioned, it's high time for digitization. If you look back, what happened during the last years, the big corporates were pretty happy how business went so far. New deals were coming in and everyone was making money. And then suddenly all the startups and small, innovative speedboats came on the scene and then tried to step in where the big corporates were lacking. And so I think the small speedboats really act as a catalyst when we're talking about innovation and digitization in the real estate business. And pretty much as Tesla was like kind of an alarm bell to the old-fashioned automobile industry, it's pretty much the same in the real estate business. So the small startups came in and then really focused on where the big corporates were lacking behind, but now everyone woke up, and I think that it will be kind of a symbiotic development, what we'll see right now and also hopefully in the future, where the big corporates and banks, of course, are really trying to innovate or to improve the business they're doing right now, and the startups are giving a helping hand and starting with joint ventures and platforms. And as Michel already mentioned, you know, when we're talking about real estate business in the financing area, a lot of banks have huge volumes, but in numbers of transactions, they're pretty little. So scaling, which is one of the major topics when it comes to digitization, is much more difficult. And going to a higher level where you were talking about joint ventures and platform approaches, it will be more easier to really scale volumes, not only by euros, but also by transaction numbers.
And maybe,
Philip, just Tobias, one comment, Philip, because I completely agree what you said, but what I want to emphasize, the development, in my experience, always starts with a very holistic approach within the big corporates. And then, of course, it's a great strategy to add what you call speedboats and so on, so PropTechs and more innovative stuff. But in my experience, it starts with a more holistic digitalization, end-to-end approach within the big corporates. And I think there is the main challenge in the beginning.
Now, maybe we're getting closer to that when we talk about the value chain within real estate finance and real estate development, maybe. Where do the speedboats enter and where do the holistic giants enter? Philip, maybe you can dig a little deeper within the value chain of real estate. So where do the speedboats go into, and where is the game maybe for the bigger corporates? What to do yourself, and maybe we can get to that a little closer.
Well, you know, looking to Alexander, who is in a company owning real estate, is one of the first steps in the value chain. And then suddenly when Alexander and his colleagues decide to sell the property, the other three of us are entering the scene and then trying to finance this transaction. So this is one of the next huge value chain steps. And the interesting thing about this value chain is that Alexander and his colleagues are doing the management, the day-to-day management of the property, basically on most of the same data that we require to evaluate whether the transaction would be a good deal for us or not to finance. And this, of course, is a very special topic to enter as a speedboat, or where digitalization itself really makes sense, because all the data that is required is going to so many hands and so many partners and players in the real estate business are handling data, that is, of course, one of the absolute hotspots to talk about digitalization. So that is the main area where we are focusing on. But there, of course, there are a lot of other ones when it comes to deciding which partner to contract with for, I don't know, the property management, for housekeeping, for whatever kind of technical support you might need. And of course, also there is a lot of information that has to be collected, has to be analyzed, and then the transparency is another big topic when it comes to all this information. So that, of course, is something that is one of the key areas that we are looking at and what is super interesting.
Yeah, so where do you usually start? Maybe is it a product, is it a process, is it a new business model of kind of innovation? Michel, how do you approach that when you look at the different topics of where a digitalization process can enter?
As Alexander and Philip pointed out already, I think you need to look at 2 points. On the one hand side, the holistic, as Alexander put it, to look at the complete value chain. And in this area, PBB, we are currently working on a customer portal or building up a platform so that we can also interact with our clients, but also with the ecosystem in a digital way. So to open ourselves, so to say, this is on the one hand side, looking at the value chain. And the topic with the speedboats, they are quite interesting PropTech and FinTechs, which can take over parts of processes and do they more efficient, perhaps more sophisticated, so that we integrate them into the value chain. So both aspects, on the one hand side, going closer to the customers, going closer to the ecosystem, but on the other side, also using these new possibilities within our own value chain, within our core processes.
And for investment companies, Alex, and how do you go into that?
Yeah, I think there's not really much to add what the colleagues already mentioned. So as we all agree, we have to look at the, I think before it comes to innovation, to the existing entire end-to-end value chain and make sure that there is a process where all the needed data, let's say, runs through well-defined processes, centrally stored, touched once, and not several times, using for each way of working the same application, things like this, and really to run this value chain. And then you can go on innovating it, but I think it starts just to digitalize the data flow within the existing value
but
chain.
Let me get back to that. I mean, if you have the digitalization process within your own company, and talking about a platform as Michel was doing, what about all these asset managers and property managers and facility managers? How do they need to cope with different platforms then?
Yeah, so you're completely right. So what I mentioned is the first step. The second step is to interconnect this value chain on both sides. On the one hand side with what I would call our providers. In our case, these are, for example, property managers, local accountants who have to feed in the data of our properties and so on. And this is, let's say, the input to the already mentioned digitized value chain. And on the other hand side, then the data goes via a portal or an API to our investors, to the clients, in our case, our investors. And this should become end-to-end seamless value chain. But as you mentioned correctly, Tobias, including the providers of the one hand side and the customers on the other hand side.
Is there some sort of cooperation between the different banks and the different investors? Not that we are simply multiplying different platforms and we are getting lost in various systems. So are you cooperating and providing a seamless system then, or?
Yeah, I think this is really the challenge. You're completely right that you're challenging this point. I would really welcome that the industry stands together to agree on one standard. As you know, it's a hard thing to do. However, we have already collaboration with, you would say, competitors, but to agree on the same format of a rent roll and things like this. And I think this is really something we should work on, to set one standard and not too many different standards.
Yeah, thank you.
Maybe if I can add to what Alex just said, and so our companies are actually always talking and collaborating. So I think this is an important first step. But setting these standards, I mean, there have been initiatives in the real estate industry for, I don't know, 5 years, 10 years. So all these working circles, Arbeitskreise, where we try to define standards and everything. So this is a very cumbersome process if you are sitting with like 10 or 20 different parties at the table and try to define the standard for a rent roll or so. So I think this is something very useful and very important, and everybody would benefit of it. But let's not forget, it's a very cumbersome process, but somewhere you have to start. And I think it's good to also to start with smaller initiatives where maybe not the whole industry, but some of the major parties collaborate and try to establish such a standard.
Yeah,
because I mean, anyway, for these APIs, what we are talking about, in the end, we are talking about data exchange, and that needs to be in a certain format, because otherwise these interfaces are never able to talk to each other.
Yeah, I would like to get a little closer to real questions. A smart person told me that his customers have problems, and smart objects or digital companies enter exactly where these problems are biggest. So what are these crucial points for either investment companies or banks? So where do you see feedback from companies where digital entries are most likely or most challenging, or around the corner?
So I would say, I mean, first of all, we have to understand who's our customer, and who is it that we are really serving. And I think there was a lack of understanding somehow in the industry that the customer is not only the investor, but it's also the people who are living in the buildings that we are managing. So it's also the tenants, especially. But anyway, I think one of the challenges that we see now is that everybody's working with Apple-style applications. I mean, everything is somehow easy to use, but still, when it comes back to real estate, everything is quite cumbersome. It's pen and paper. It's not integrated. You have to use a variety of systems. You have many channels, and it's not really synchronized. So I think this is one of the major challenges that we have, and this is not something that you can solve with one approach or one application. It's rather the combination of a couple of different applications and solutions, and this is the big task for all of our companies, to combine those different small solutions to a holistic package which is working then.
Yeah, so putting the customer in focus, and I mean, that is always right, isn't it? Michel, how do you do that, putting the customer in the innovation process?
We try to bring the customer in two ways in. The first way I mentioned already is building up this client portal. Gerald just mentioned this painful topic with exchange of documents. At the moment, most of the exchange of data is done via email or telephone and stuff like that. So having a customer portal, what is used by retail customers, this will ease these processes a lot, and this will also be for benefits of the customers, having simpler, easier processes with the banks. And on the other side, it's also what Gerald just mentioned, very important is listening to the customer. So asking them, what's your pain? Where can we help you? Also in developing this customer portal, which functionalities do you want? So not only looking and thinking from the bank's perspective, but really bringing the customer client's perspective into these processes and look for the best solution. These are the two main aspects we follow.
Let's get a little deeper and even more practical. So maybe each of you can give the audience one good example how your company is really managing digitalization. How do you save costs? How you can make processes more efficient, or whatever. Maybe we start with Philip. How does Philip is working on that? Give us one good example how you are coping with that. A real life.
Alexander already mentioned earlier at the beginning that it's also important to really work on internal processes and the holistic view. So what we are doing right now is we are implementing a new workflow system for the the whole data and information flow within our credit approval process. So as soon as the client or the financing seeking investor is approaching us and giving all the information to our relationship manager, of course, our risk management department also has to be involved. And all this information has to run through the bank, through the different departments, through the appraisal departments, through risk management, etc. And for that, we're also implementing right now a new workflow system with integrated data and document management as well. So that is to really ensure that not only the client-facing interface is also digital, but also the process beyond that point is also more digital and transparent for us, but also speeding up.
Okay, thank you, Michel. Maybe without pointing to the customer interface, something that is still beyond that, something else. What are you working on?
Of course, we try to enhance our business model. Here we build up platform. It's not directly in the commercial real estate industry, but in the public sector industry. So this was a real disruptive approach to bring this public sector financing to a platform solution and acting as a platform developer. And that's not only by investing into a startup, but having an own corporate startup. And this is also an area where the bank learned a lot, starting from technique, which is cloud-based, up to regulatory questions, but also how platform economics work, for example.
Okay, thank you. And the investor, Patricia, Alex, how are you doing? Give it one example, one good example.
Yeah, so let me raise two different examples to show what area we are acting is about. So one is the same. Sorry if I repeat the investor, because you already mentioned it's the most important stakeholder, isn't it? Yeah. So we have developed ourselves. So let's call it Make Nor Buy investor portal. What really makes sure that all our investors get access to the information across their investment portfolio, and really from a individual point of view, not just a fund reporting, but really a individual personal investor reporting. So this is something we think it's so important that we develop it ourselves. And then I would like to give you, Tobias, a buy example and a speedboat example at the same time. So we invested into Ivana to help us with handling documents using artificial intelligence in doing a much more efficient but also more user-friendly way in handling of documents, specific property, fund and real estate industry documents. And both approaches work really well.
Thank you very much. So nice that you touched on the make or buy decision. Gerald, how do you do Credit Suisse in a real life example?
So a real life example, I mean, many of the ones that have been named before. So I think the industry is pretty much using in a similar direction. So we all identified similar things as being important. Maybe on top of that, to give one which is a bit more, let's say, forward looking, is what we're trying to do with all the data that we are collecting in our databases. We're trying to work with it in sense of analyzing it, but also trying to do predictions. So we're trying to predict the behavior of our tenants, for instance, or of our vendors, trying to minimize the risk of, for instance, a tenant leaving our buildings based on the data that we have. So that would be a bit more forward-looking example. But one thing that I would like to add in this discussion, so I think what I have seen now in the last years is one thing is to making these plans and implementing these systems, but probably everybody can confirm that the biggest part of the work, so it's like, what are you doing in digitalization, is not the fancy stuff implementing all these systems, but I would say like 70 to 80% is just like communication and change management and these things.
So thank you very much for raising that. We're running out of time, so I'm glad that you at least dived a little bit into the change management issue. If you are standing now at the end of 2021 and try to look back, what would you imagine is the biggest change that took place or will have taken place in 2021? What is the big chances that we have, or challenge that we will face in this year. So there's just a last round, a quick question, quick answer. Alex, do you want to start?
Yeah, I would like to add on what Gerald just said. The most important issue is really the people topic. So we have maybe discussed a bit too much about processes and technology, but in the end, digitalization only succeeds when all employees are involved and really you run effective change management. So I think this is the most step, for example, also for us within 2021. One thing to improve the processes, to introduce technology, but even more important to involve all the colleagues to really get a more modern, more digital mindset and way of working. This is what I would point out.
Philip, what is your view looking back on a potential 2021?
Well, I would be happy if our colleagues or the industry would really judge digitalization as a chance, not only as a threat. And we have a lot more colleagues within our group coming up with new ideas and the power and fun of working on digitalization projects.
I think that is an important point because indeed in the real estate industry, we're talking about threats and issues and problems when we think about digital. Michel, what is your view looking back on potential 2021?
Besides what was mentioned already, a big chance would be that we learn from the COVID-19 crisis. We were forced, especially regarding ways of working, using new methodologies, new technologies, like this via Zoom and not sitting on a panel, so to say, that we find out what is working, what is helpful, and what can we keep after this. Hopefully the crisis is ended soon. This, I think, is a big chance, but also a challenge.
Thank you. And Gerald, you are opening the human capital issue, so you can close the group.
Yeah, I think looking back and building on what Michael just said is that we will see that the biggest challenge that we had in our digitalization efforts will be that we needed to work still digital. Because I think the coordination of so many stakeholders only in a digital format is a real challenge.
So thank you very much. It was very interesting listening to your viewpoints and where you add and where you still see fraction. And I'm very glad that you managed to raise the human capital issue. Well, we are the International Real Estate Business School. We are educating people. So if one of the audience needs something, we are educating. Look at our webpage. And I thank you very much for the great session. Felix, it's back to you. Have a nice session. Thank you. Farewell.
The payment industry is greatly emerging. After the already large changes in the past years, the corona pandemic gave the last push to the movement of more digitalization. How this and other factors are influencing the industry and which innovative trends are on the horizon will be discussed by speakers from JP Morgan and Plate.
Thank you, Felix. It's an absolute pleasure to be invited. And wow, have I got a great panel to host. For those of you that don't know me, my name's Helen. I'm the co-founder of Open Banking Excellence, OBE, as we affectionately call it. It is an amazing global community of banks, fintechs, big techs, regulators, and service providers. So it's an absolute privilege to be around the virtual table with some other people from our amazing sector. And without further ado, what I would like to do is introduce you to them. So Jake, please say hello to everybody and let them know from where you're talking from, please.
Thank you, Helen. It's great to be here with everybody. My name is Jake Hirschman. I joined from JP Morgan Merchant Services. We are one of the largest acquirers in the world, and I'm from our client engagement team. So I sit in between our field relationship managers and sales teams, as well as our product organization, really representing the investments that we're making in our products and our expansion into new markets.
Thank you, Jake. Keith, absolutely wonderful to see you. Keith, a few words about yourself and Plaid, please.
Absolutely. Great to be here. I'm Keith Gross. I lead Europe for Plaid. And for those unfamiliar, Plaid is one of the largest open banking platforms. We like to think of ourselves as the easiest way to connect your bank account to an application, supporting both financial data and payments use cases. Thanks for having us, Helen.
Superb. Gert-Jan, please round this introduction section off. Where are you from and what do you do, please?
So I'm Gert-Jan. I'm joining from Amsterdam, where I'm leading the solutions and innovation team for Worldline, which is offering payment solutions and terminals for banks and merchants worldwide.
Brilliant. Gert-Jan, thank you very, very much. So, as I said at the top of this session, I'm a co-founder of a global open banking, open finance community. So Keith, let's jump straight in. The UK created the blueprint, as we know, for open banking. And this week, we've celebrated our 3rd birthday. So 3 years since it was a regulatory requirement. So this session is all around the trends in payments and the future horizons. So it seems a very appropriate place to start. So payments is a strong use case for open banking. What I would love, Keith, is you to share how you see the trends, and particularly in open banking, open finance, and linking that into payments. So a bit of a tall order, but I am dying to hear what you have to say.
Yeah, absolutely. I mean, as you said, it was the 3rd anniversary in the UK this week. I think it's been an amazing journey thus far. If you think about how open banking got started, most of the first initial use cases were actually around the account information side or the financial data side. But then as that got adoption, open banking payments, as those APIs matured and the partnership between third-party providers and institutions matured, you really saw 2020 be the year where open banking payments took off. And so I think you're going to continue to see that acceleration. And part of that, I believe, was due to COVID and the adoption of Fintech, which we'll get to later, that accelerated there. But I think you're going to continue to see that trend into 2021, where the value of having instant settlement, API-based payments, with limited chargebacks, lower costs, like that value is going to continue to increase into 2021. Along the way, what's happening is the recognition of there's a lot more to someone's financial life than just their payment account or their current account. And so that's where open finance comes in, which is how can we make sure that people can get a holistic view of their financial life? And so when you think about savings apps and investment apps, there's a ton of work going on around designing the API specs. And I'm really excited to see the UK taking a leading position in this space as well. So I think you're going to see both the continued acceleration of open banking payments this year, as well as the emergence of financial data APIs around open finance and the beginnings of regulation in that space.
Thank you. Just to linger a little, if we may, on this topic, one obviously very close to my heart. Are there any use cases that you would like to throw into the mix, really? It's all about the use cases, we both know.
Yeah, absolutely. I think the 2 use cases today that are still the best fits for open banking payments are account funding and small business invoice payments. And I think you're seeing amazing uptake in both of those, right? Because now you have fintechs for the first time being able to create this onboarding flow where a user can sign up, KYC, deposit money, and then use that money all in the same 5 or 10 minute experience. And it's happening because open banking exists and KYC APIs exist, and all of these are being put together by fintechs to create amazing experiences. It's the same thing on the small business side, where invoice payments and the years of trading around paper PDFs, it's so exciting to start to see open banking payments take off there.
It really is, and I think this year is a year where the figures are just going to grow and grow. There's going to be a huge growth trajectory. I would definitely concur with that. So Jake, over in the States, jumping to not over the other side of the pond, but to the other side of payments. Payments itself is a vast subject. But if we look specifically at e-commerce, which is something I know that you are a specialist in, how have you seen the space evolve over the last few years would be my question. And how have other financial institutions, how are they attacking the subject?
Absolutely.
High level overview, please. Sorry.
Yeah, sure. So I think it's certainly no news to everybody, especially in the world that we live in today, that e-commerce continues to rise. I think from JP Morgan's perspective, we've really heavily invested in those capabilities first and foremost, but without neglecting the broader in-store, retail, omni-channel, point of sale experience as well. And so when I think across the landscape of the way that fintechs, financial institutions, and the like are continuing to invest in the e-commerce space, I think that they do take a little bit of a different approach. And so the way that we think about that from a financial institution perspective is unifying all of the offerings that we have between simple and easy ways to connect into us. And so we mentioned things like open banking, which we enable through our treasury services business, through an API connectivity layer, in the same way that we're investing and modernizing our merchant acquiring platform through a single API integration as well. Our goal is to unify both sides of that. So both the receivables, the payable sides, the management of a client's cash and liquidity, to unify and create the best in class experience for e-commerce end to end. I think the way that might be a little bit different, maybe from a larger scale financial institution, or maybe a fintech, is maybe fintechs have traditionally specialized in one piece of that value chain. So enabling a client or a merchant or a firm to go quickly live into a specific method of payment, or to a specific country, or to a specific functionality that we've focused on. Whereas maybe financial institutions historically have focused on resiliency of platforms and the financial side and the economics. And I see what we're seeing is really symbiotic partnerships across the ecosystem. So as we go on our modernization journey and we think about the future of e-commerce, we're actually partnering with many fintechs in some of the markets that we enter in, where we can enter quickly and leverage some of those partnerships. And I think on the other side, the fintechs are looking at the power of a JP Morgan or other large financial institutions as plugging in some of the missing pieces of where they're at today, either through regulatory or compliance point of view. And I do see that continuing to grow on the e-commerce side, both with fintechs, large-scale financial institutions, and continuing to grow in addition to everything that we're seeing in omni-channel and the retail space. I think last but not least, when we look at that as well overall, we don't want to neglect the physical and in-person experience. And so while we all might be in a virtual conference today or into our homes, that continues to be important. And I think you're seeing a lot of innovation in that space as well.
I would agree. Some great observations from you. Gertjan, the same question to you, because you have a slightly different take on it. So on e-commerce, how have you seen the space evolve? I'm really interested in your insight there.
Yeah, I think maybe 2 points there. I think first of all, we're living in a very interesting time today with the COVID-19 pandemic, is that a lot of businesses for whom e-commerce traditionally might not have been a focus, might have been sort of a secondary part of their business, or might never even done e-commerce. And think of restaurants, which are sectors where e-commerce never really was even a consideration. They are now dipping their toes in the water and forcibly have to try things like online ordering and delivering, pick up and go, etc. And so what you see is that a lot of these industries, hospitality is another big example, are really making that shift towards digital payments and accelerating a lot of technology investments there. So obviously a lot of that is crisis management, but I really believe that some of that will stick, partly because merchants are now seeing the value of having these new ways of interacting with customers, but also because consumers just generally are asking for these more innovative, more omni-channel use cases. So I think for the e-commerce space, this is going to get quite interesting in that there's just more different type of businesses making that step to e-commerce.
Interesting. Keith, I see you nodding your head. Please share your views here.
I think I would echo what Gertjan had said, which is I think the adoption of e-commerce from these stores that were brick and mortar and had been forced to go online or accept online payments because of COVID 2020, I think that has accelerated the adoption of payment innovation in the e-commerce space. And I think it has set a new watermark that we may not go back to the way things were before COVID once we come back to the normal world. I think the other thing I would highlight that I've seen a lot of is there's a lot of new innovative use cases around credit as well. You've seen a lot of buy now, pay later uptake over the past year. And so I think what's going to be key is figuring out how those new payment methods all work together and making sure that they're being applied in a way that still protects consumers as well.
The protecting. Yeah, sorry, please go on.
Yeah, and I think to avoid also the rising complexity for consumers, because there's more and more of these different type of payment methods. There's the cards, there's open banking, there's indeed buy now, pay later. There's a lot of that diversification happening, which is good for the consumer because there's choice. But ultimately, it's all about speed at checkout and having a fluid experience, and helping merchants deal with that and make sure that it still remains a simple experience is, I think, going to be one of our tasks going forward.
The point Keith made about protection, Keith, are you implying there needs to be slightly more regulation there, I wonder?
I don't know if there needs to be more regulation, but I think it probably has gotten faster uptake than I think regulation has kept up with. And so it just needs to be done in a responsible manner, but it's clearly a space with a lot of consumer demand.
Agreed. Okay, thank you. So Jake, before we move on, is there anything on this topic? Because I want to sort of touch on some others. Is there anything you would like to share?
I think I would just add that the way we think about alternative methods of payments and customer choice is, I think Gert-Jan hit on it, really well, which is that we don't want to confuse consumers. And so I think where merchants, have traditionally viewed the acquiring landscape is they might conduct an RFP and ask how many alternative methods of payments that you have. And so you might compare 2, 3, 4 acquirers in that response and then look at the check marks and see who has the most offerings, right? I think what we found is you want to avoid that NASCAR effect at checkout. For the non-Americans, that's all of the logos plastered onto a car or to a side of a building or to a billboard, right? And oftentimes that just creates a lot of customer confusion of what is most important to me. Is this going to actually add value to my business or to my checkout experience? And so the approach that we take is to offer the most relevant methods of payment in each market. Maybe that's not all of them on day one, or we continue to prioritize and evaluate, what makes most sense to offer to our merchants. But as we enter each of our new markets, we're first and foremost focused on offering what's most important to our merchants and what's most relevant to consumers. And we don't, think necessarily to make sure we have the largest number of check marks, on a spreadsheet.
Interesting, very interesting. Gretchen, back to you now. So how has client demand, I'm curious now, how has client demand from businesses and from merchants evolved over time, and what are the customer expectations when it comes to payments? So what's your take on that for the future, please?
Yeah, I think there's definitely more demand for these omni-channel type of use cases, and where you're linking in-store payment and online payment. That's something we really see top of mind with a lot of clients, and something that we're heavily investing in. What you also see is indeed that step towards internationalization, and not just offering 300 payment methods, 200 payment methods, but really getting help to localize payments deeply and in a very meaningful way. And that can be typically in the more exotic markets. But I take Russia, for example, where really local acquiring can make a very much a difference in your bottom line as a merchant, but also where you need to support a government-backed scheme like a Mircard, and really helping these businesses to go into these markets and to localize their payment setup is becoming more and more important. Because I think more and more businesses are realizing that payments is not just a financial function, but it's really the last step of your customer experience. It's where your customer ultimately puts the money on the table and finishes the interaction with you. And you need to treat that as part of the customer experience.
So a follow-on question then, Gretchen, would be, which payment methods do you see emerging in the e-commerce space? Do you see any big change there? We're looking to the future on this panel.
Well, I think definitely open banking is one in Europe, but also beyond Europe. Brazil, for example, has launched a very similar open banking-like initiative called PIX. So that's definitely something that we see with the banks organizing these alternative open banking type models. Definitely also the mobile wallets from, for example, the WeChat Pays and the Alipays in China, to then similar local initiatives in Southeast Asia. Something that we see growing and also getting a lot of traction with consumers there, because they build on top of typically the massive user bases they already have as a social platform or a ride-sharing platform or a shopping platform, etc. So that's something definitely we're gonna see more of, I think, as well.
Keith, it's a question begging you to answer. Come on, what would be your insight on this one?
I mean, one, I would definitely say open banking is an emergent payment method in this space and will continue to, I think, gain share and adoption, especially just given the instant settlement and the biometric authentication. It can be a really great user experience in Europe. But I do want to point out and double down on the last comment that Joachim made, which is I think of this as embedded finance, but I think you're starting to see a proliferation of people bringing financial services and payments into applications that you wouldn't have traditionally thought of as a fintech application or even a payments application. And I think you're going to see more and more of that, almost a modularization of financial services showing up in, to the point, social network apps, gig economy applications. I think that is going to continue to accelerate as well.
Well, we're both seeing that in open banking, that whole embedded finance. Your credit card as a service is embedded into that app. That's the whole sort of banking as a service, isn't it? Which isn't white label banking. It's a completely different product, which open banking is part of that. That is exciting. Gurchan, I'm curious about QR codes, because when we had our prep session, you mentioned QR codes. Before we move on and get Jake to chime in a little, is there anything else you'd like to say around QR codes?
Yeah, that's I think that's what you see in a lot of these wallets, right? They use QR as a way to communicate. And what it's nice about, what I think is an interesting trend to watch there is if we're going to see a degree of standardization. Because now it's very much wallet per wallet, which is where they need to start and which is obviously a lot logical. But then what you get is sort of the effect if you travel to China, obviously when you could still travel to China, you saw already businesses having a payment terminal for the cards for the tourists, an Alipay QR, a WeChat Pay QR, a few other local payment method QRs. It's becoming again very complicated in store, but also online. So what I would find very interesting to see is if there's going to be a degree of standardization where you can use these interoperably and again make that consumer experience a bit smoother.
Interesting. Yes, interesting.
Chiming in there for 1 second, I think the other thing to note there around QR codes, which is super interesting, is I think they had been relatively ignored in some Western markets, and COVID totally changed that. I know at least in London, almost every restaurant now that they've reopened now, you don't have a physical menu, you scan a QR code to download a menu, and you're starting to see that, tagging into COVID tracing apps. I think the QR code adoption more generally has definitely increased, and I think that will have follow-on ramifications for payments as well.
I would absolutely concur with that. So we have a QR code at Open Banking Excellence, and it is on our LinkedIn page, it's on our live streaming page. It is, you lift your phone, you scan in the QR code, and through Open Banking Payments, you can make a charity donation. So it's our way of demonstrating payment initiation. We don't charge anybody to, it's a big giant family, and you wouldn't charge your family to get around the campfire and talk. It's not a members organization. So if we wanted to demonstrate payments, it's an absolute privilege to be able to do that and to make some pretty sizable charity donations as well. So it is that, and I have to say, Keith, to your point, the uptick in that has been since COVID. Yeah, people are just more comfortable. Yeah, or more familiar. Yeah, incredible. Jake, before we move on to talk around collaboration, which is a question we've been asked to discuss, is there anything that you would like to add in terms of the emergence of new payments and where you think the market will go?
Sure. I think for me, and I think the way that we see it in merchant services is less about a specific QR code or a specific way in which that credential is being relayed to a merchant, but more about the conversions of taking what is, by fact, an e-commerce transaction in the digital wallet, and then bringing that into an in-store experience. And so, for example, we're enabling payment methods like OXXO, the convenience store franchise in Mexico, and Konbini across Japan. Right. So this might not be a QR code. It might be a two-dimensional barcode or a PIN that's shared, but it's really the same format, right? Which is enabling an e-commerce transaction in a way that a customer feels most comfortable paying, also throughout an in-store experience as well.
Okay, thank you. Thank you very much. So as I touched on before, we've been asked to talk about collaboration, which is a big part of what we do at Open Banking. I believe that will help the growth trajectory of the sector. So one that is key to our values and very close to my heart. So we see financial institutions and payment firms and fintechs both as complementary and competitive. Where do we see that the areas of partnership and collaboration make sense? I think this is a panel session all on its own. So Keith, I would like you to lead on that. Compete or collaborate, that age-old chestnut.
I think it's definitely collaborate in the sense. I'm personally a big believer in the concept of core competency, and a startup in particular or a fintech focusing on what is the thing that I do really well, and then partnering for things that you need to add on in addition to that. And I think some specific examples around collaboration that you're starting to see emerge, at least in the European fintech scene, that I think are really exciting is this concept of marketplaces where financial institutions or fintechs are starting to offer all these new experiences like investing or getting a mortgage or something else, and they're using partnerships to do that. And typically it's not just one partnership, it's multiple. You have an open banking provider to connect the bank account and do some identity checks. You have a KYC provider, then you have the mortgage provider, and all of that packaged into a module that's then in another financial institution. That's 4 or 5 people collaborating to create one experience. I think another example that you're seeing is banking as a service, where you might have, again, individual infrastructure players supporting specific use cases, put in a white label platform, which is then used by institutions for their mobile applications. All of those are very successful models and are gaining more scale. So I think collaboration is the name of the game right now in fintech.
I think that should be the quote we all put on LinkedIn after this panel. Collaboration certainly is the name of the game. Gertchen, I would love you to share how you collaborate with your ecosystem, please.
Yeah, I mean, for us, definitely, it's ultimately it's about making that experience for the consumer, the merchant experience for the consumer as good as possible, right? And so a lot plays into that, and I think it is something that no company can cover on its entirety. So the broader we work together, the more we pool our resources to help the merchant give that better customer experience. I think the more value we're creating. And the nice thing about the payments world is that ultimately, if you help the merchant make more transactions, make the consumer go through the checkout process easier, if you make the conversion rate better, everybody benefits. So I think as an industry, we're very naturally set up to work in that collaborative model. And so I'm a very big believer of that.
Jake, are we going to get 3 out of 3? Compete or collaborate? Keith says collaboration is the name of the game. Gertchen is right behind him. What's your take on it, please?
We're all going to fight it out and duke it out, I think. Just kidding. Absolutely, collaboration is the name of the game. I think that's a good line as well. And I think some of the topics that I spoke about earlier around how we're collaborating with different fintech players, different regional partners as we expand, different technology enablement partners is really important to what we do. And I think he also really hit on that idea of core competencies. JP Morgan Chase has been around for a long time. So we do have some core competencies on core banking, on cash management, on things like that, but also on payment processing and on merchant acquiring, and we look at our role in that ecosystem. And so that field in and of itself continues to grow and to expand and look different in each market. And we are really first and foremost putting our clients first. And the way that we do that is through striking the right amount of partnerships and collaborating across the ecosystem.
Keith, is there anything on collaboration? I mean, it's as you say, it's the only game in town, and this panel is around looking at the future trends on the payment horizon. So I wonder if we can link that into what your predictions for the future would be.
Ooh, that's a great one. I think if I had to nail down one, I think you are going to see an increased proliferation of this embedded finance topic. So what I would mean by that is any application where you have hundreds of millions of users already, you're going to start to see payments and financial services show up there, because I think there's mutual benefit. Users want that, they trust that application, and that application can also see the value of adding in financial services as another business line. I think that's one where that's going to be done through collaboration and partnerships. And I think it's just the beginning of that wave going on right now.
A new way of working. So the question was, compete or collaborate, but what we're saying is that is sort of yesterday's last conversation topic. It's got to be banks and fintechs even collaborating together, and we both see that in open banking. That is the whole David and Goliath, and that speeds up the market. Gertchen, same question to you then, sort of future trends, where's it going to go? What's your whole take on it? Your wise words, please.
Yeah, so for me, what we try to look at from the innovation side is always start with the customer experience. And so there's two things I really see evolving nowadays. I think on one hand, what we're seeing is the rise of basically other channels to do commerce. Before it was all, you have the store and then you have a web page or maybe a mobile page. And now we're starting to see things like chatbots, voice assistants, maybe augmented reality setups, etc. So we're seeing a lot of retailers and merchants all around trying out these new technologies, and customers really jumping in on those and starting to see adoption there. And so for the payments industry, figuring out how you can put a smooth payment experience inside a chatbot, inside a voice assistant, etc., is going to be, I think, a challenge for the future. And I think, secondly, is that you're also seeing a big evolution in how we authenticate customers. And next to open banking, there's also this strong customer authentication part of PSD2. People don't like to talk about it too much because it strikes fear in the hearts of many. But ultimately, it's about making that authentication experience safer, but also smoother for the end consumer. And now that we're sort of stepping past the implementation hurdle, I think you'll see a lot of evolution there in terms of adding biometrics, or even behavioral metrics in that authentication experience, and making that a lot simpler than before with a one-time password or inserting your card, the little machine, and generate a code. So I think there you'll really see an evolution towards a simpler, smoother, more invisible way of securely authenticating a transaction.
You say people don't like to talk about it. It's actually SCA, Secure Customer Authentication, is one of the hot topics we have for this quarter OBE. It is a hot topic, and we are privileged to have some of the best experts to bring to the table. I see Keith nodding his head. Before I go to Jake, Keith, is there anything else that you would like to add on SCA as we're now talking about it?
No, I don't think so. I think Gertchen hit it on the head. I think it is a massive topic. And I think it's one where open banking helps level the playing field there, where again, being able to make payments with just pressing an accept button and using your Face ID or your fingerprint is best in class authentication experience at this point.
Awesome. Jake, future trends in payments, what do we need to look out for, please?
Sure. I think, we spent some time talking about the collaboration, and I think that maybe historically when the rise of fintechs and the rise of technology native players started to disrupt the space, I think what we saw from merchants and consumers and the people that we here on this panel serve, was an immediate flock towards the ease of doing business and the nimble players, and really to the degree the rejection of traditional financial institutions as outdated and unneeded and completely going to be disrupted and disintermediated. I think what we are starting to see in the payments world is a move towards that collaboration and a recognition of the way that both can coexist together. And I think we saw that first and foremost, in the COVID-19 pandemic. And so, where many of our clients and many of our, friends in the payments ecosystem were quick to look to fintech players and to more modern enablers of payments as maybe where the future was going. But when the waters got choppy and the ship started to have issues, they looked to players like a JP Morgan or large financial institutions as a port in the storm. And so I think what we found to be most impactful was being able to stand by our clients, to offer faster access to funds, to look look at liquidity solutions, and to look about how the full end-to-end value of payments can drive change for our merchants and for our clients. And I think that our clients and players in the payments ecosystem saw that and looked and saw the efforts that we were doing with our fintech partnerships and how we're working together. And I think hopefully this forum, is preaching the words of collaboration. And I think that we've started to see that in the ecosystem as well, from our merchant clients and from consumers. And I think that will continue.
Well said, thank you. Gentlemen, we are very nearly out of time. Half an hour has just galloped by, which says it all really. So I would like to literally in 30 seconds from each of you, this panel is all around the future trends of payments. And we've already agreed that it's use case, use case, use case. So in terms of future use cases that we need to look out for, Keith, your wise insight on this one, please.
I think the first one that I would say here is seeing cross-border open banking payments where you're combining FX and open banking in the same one. I think keep an eye out for that. I haven't seen it cracked yet. I think it is going to get cracked.
I will actually. I will. Okay. Gertjan, same question to you. The use case that we need to keep an eye out for.
For me, it's everything around invisible payments, where you really make the process so smooth that you're not even consciously have to take a payment action anymore. Just like you step out of an Uber and you don't have to realize, you don't have to pay anymore and get out the cash anymore. The transaction just happens. I think we need to see that happening in a lot more industries and a lot more use cases.
More embedded finance, that gets a thumbs up.
Absolutely.
Jake, thank you. Jake, the one use case that we need to keep an eye open for, please.
For me, it's the concept of having a global presence, but with local expertise. And so what we're seeing is a lot of clients continuing to localize their collections, their payment strategy, utilizing local entities, utilizing local acquiring, local methods of payment, but while looking at the ecosystem to provide them that global coverage and unify that experience end to end.
Thank you, Jake. A lovely way to finish. And gentlemen, that it has been an absolute privilege to talk with you and to listen to your wise words. We have covered a full spectrum of payments and looked into the future. So an absolute masterclass. Thank you very, very much for your contribution. Thank you. Felix, back to you.
Now let's hear about the key trends in the cybersecurity and knowledge management space, the trade-offs between privacy and a good customer experience, and how enterprises can unlock their full knowledge potential.
In today's world, every company is a technology company, but many of them don't know this yet. And enterprise technology plays a key role in this landscape. But enterprise tech is a wide-ranging topic. Today we will take a deeper dive in two hot topics that are shaping the industry: cybersecurity and knowledge management. These two together account for a $300 billion market potential and saw a significant spike in demand during 2020 and the COVID-19 pandemic. Let's take a closer look at how enterprises can better serve their customers, protect their data, and prevent frauds, phishing, cyber attacks, and create more resilience. Nowadays, many enterprises rely on poorly written and outdated code. During the upcoming years, much of this code will be removed and replaced by more secure alternatives. Even passwords could become obsolete and slowly disappear, being replaced by biometrics. By 2022, passwordless authentication in the enterprise sector will be adopted by 60% of large enterprises and 90% of SMEs.
The challenges the industry is facing, in particular in the context of authentication and identity management, is that long-lasting trade-off between user experience and convenience on the one side and security and privacy on the other, where we've come from passwords over hard tokens to soft tokens and SMS 2FA to biometrics like Apple's Touch or Face ID systems that come with their very own limitations around interoperability, reach, and thus penetration of these solutions, to a future that we see centered around privacy, where we are introducing the world's first zero-knowledge biometric authentication platform that eliminates the need for businesses to store and manage passwords, cryptographic keys, biometrics, and other sensitive personal information without compromising on convenience and privacy for the end user.
The current challenges the industry is facing today are really related with the massive adoption of digital services and technology. especially in these pandemic times. I mean, this crisis, this global crisis, what has done is increased extremely the path of adoption, the rates of adoption. So what we had planned for maybe the next 3 years has been accelerated a lot in a few months. So to deploy massively the technology capabilities, the digital service, and that adoption is a really, really big concern in terms of cybersecurity for the next years. In this moment in this cybersecurity space, what we are dealing with or facing right now is more or less the same concerns we had in the past, but accelerated by the new need and the new normal capabilities we need to deploy. Those are really related with, first, massively cloud adoption, because cloud gives the companies and even individuals the elasticity in terms of digitalization that we need. And this adoption has involved and need to involve culturally changes in the IT, in the business, and especially in the security teams.
And that would be a real game changer. But the real question is, are financial institutions ready to implement cloud-based technology solutions?
Many large and established banks are running on legacy infrastructures or legacy technologies, which requires a very individual or custom approach to integrating cloud-based solutions. In our view, what incumbents need to achieve their digital transformation goals and move to a cloud-first paradigm where solutions are accessible from anywhere at any time. Users can instantly use their services from all the devices and update their legacy infrastructures, which makes it also much easier to work in an ecosystem of various vendors and solutions in an integrated fashion that will drive innovation and thus impact to the end users who are actually consuming these services.
But not everything is lost. Cloud adoption within enterprises is increasing, and the biggest driver for it is IT agility. By year's end, artificial intelligence and machine learning applications will be at the top of the list. Another driver to adopt such technologies is cost. A simple password reset costs enterprises about $70 because it accounts for about 50% of all internal help desk calls. It's also the reason for 80% of all data breaches that we see, and an average data breach can cost about $4 million.
So eliminating passwords through something that's simple, private, and secure and unique to an individual that you can use across every device is something that we're trying to achieve.
New developments in technology can also generate new risks. For instance, if passwords are substituted by facial recognition, criminals could try to trick the software with deep fakes, digital doppelgangers. Deep fakes are videos or images where a face is replaced by someone else's face using machine learning and AI. Let's dive a bit deeper into deepfakes. What is the potential threat? Do they benefit companies in any way? With the rising adoption of biometrics, deepfakes could become a real security threat. That's why it's crucial to combine traditional biometrics with new biometric modalities that protect users from fraudulent biometric attacks. There are 3 main ways to make sure that users are who they say they are: asking them for something they are, for something they know, and for something they own. These 3 factors are called knowledge factor, possession factor, and inherent. Multi-factor authentication is much more secure than single-factor authentication. At Keyless, for example, they combine physical biometrics like facial recognition with behavioral biometrics, such as swipes. Further to the multimodal biometric factors, Keyless authentication involves a trusted device of the user, so inherently performs strong multi-factor authentication. But back to deepfakes. On the positive side, deepfakes can be used to generate biometric training data in a privacy-preserving way. While the risks of deepfake tech are certainly worth preparing for, Keyless is leveraging technology to train our machine learning algorithms. By using generative adversarial network, they can enhance the reliability of their product in ways that were not previously possible. For example, they can ensure their algorithms are able to accurately detect and verify users from a more diverse landscape. This is especially important as facial recognition machine learning systems have previously proven to be ineffective and biased in identifying users when only trained with datasets from limited demographics. But deepfakes are not the only threats in the cybersecurity realm. A lot of them are going undetected, and if you analyze all the different attacks that were discovered in recent years, only few of them were done by sophisticated actors. And with the growth of cyber attacks and seeing how valuable data is for so many third-party operators, it really is just the tip of the iceberg. Newer technologies can detect a lot of these attacks and guarantee protection. To the defense industry, governments, politicians, journalists, or VIP researchers that are being targeted on a daily basis. It's not a trivial task, though.
So in general, the approach of the industry in cybersecurity is to capture attacks or to try to see the traffic or to try to have something present on the device. We're taking a different approach. Our approach is to look for attackers' mistakes. The assumption is that all attackers make mistakes given enough time and enough opportunities to attack. So it makes our job a bit easier because we can focus on what they're doing wrong. At the same time, it's really not so easy to differentiate between what an actual mistake is, whether if your phone rebooted because of an attack or if it rebooted because of a software bug or even if your phone is broken. So that's a lot of the efforts are going into that. And that's the reason why in the first place we even released our solution for IT and DevOps.
It may seem trivial to handle on a daily basis, but if you are a large institution, a cyber attack can become a costly issue.
So if you have a large organization and 5% of your employees have a blue screen once a day, you may not necessarily even know about it until a few months later when people start to complain and even tracing it back to the original issue, what's causing this issue and things like that.
And in a world where speed is of the essence, that time gap could be decisive in terms of cost. But fortunately, attackers and cybercriminals do make mistakes.
Yeah, attacker makes a lot of mistakes. And over the years, it's becoming harder and harder to do a flawless attack. And it doesn't matter if you're amateur, of course, you're making mistakes, but even nation states, even governments are making a lot of mistakes. The thing is that these mistakes are not trivial to spot, and you would usually suspect something else. So for example, if your phone rebooted in the middle of the night, you may not even notice. Sometimes you need to type your PIN code again, and people may notice that, but they wouldn't really think, okay, there isn't anything weird here, just the face recognition is not working properly. Or if you see your phone rebooting in front of your eyes, you'll be like, did I click the power button? Maybe it was clicked in my pocket. Or if you see a blue screen, you ask yourself, is it just a random blue screen or is it an attack? So most of the people would not suspect when they see those things unless they're really cyber aware.
So attackers make a lot of mistakes, but that doesn't mean that staying secure is easy. Companies should be focusing on protecting themselves. However, investment in cybersecurity is not as high as it should be. Why is that?
Cybersecurity is very asymmetrical, and it sometimes can be very cheap to develop something that will be very hard to defend against. And you can basically purchase an attack on an iPhone that works on 1.5 billion devices in $2 million, but you can also spend $50 million just to try to understand how to defend against these types of attacks. And it may still not be sufficient if the budget is not properly managed. And sometimes it's just limitations that you cannot overcome.
Usually, financial institutions are more secure than other industries, but attacks happen anyways. How should they adapt to this new landscape?
So the features on cybersecurity specifically for financial institutions are coming crucial from three different aspects as well. The first one is the need to provide our customers with trusted channels and trusted services massively based on digital interaction, while keeping an appropriate user experience. The second key point in cybersecurity is protecting information. The personal data that isn't massively under the scope of privacy and the transactional data. I mean, to protect the operations our customers are doing, to follow all the channel and to have enough traceability of what the transactions our customers are done. And in the third part of the cybersecurity aspect in financial institutions, it's the awareness itself. So we need to keep our internal awarenesses at the highest levels.
2020 was a very complicated year and no industry remained untouched. What was the impact of the pandemic on cybersecurity?
The impact of COVID, especially in the cybersecurity sector, has been very positive or provided tailwinds in the sense that protecting a remote workforce has become more and more crucial. Protecting access in a remote setting is more and more important, and uniquely authenticating or identifying users who are consuming services in sectors like education or healthcare.
Most aspects of our lives are affected by the changes in the digital world, and many of these changes bring with them new cybersecurity challenges. So there's going to be a lot of innovation in this field during the upcoming years.
There's a strong theme of zero trust networking, which puts the identity at the core and front in terms of how we authenticate and secure applications in the enterprise context versus the old paradigm of securing through a corporate firewall. Looking into a 5-year perspective, we're seeing decentralized to user-centric identity models emerge where users are in control of their own personal data and can selectively disclose this type of data in a more personal, private and secure way.
Trends that we're seeing in the industry include anything from increase of mobile attacks. It's definitely happening. People are more aware of their phone that can be used to spy on them. And it makes sense because these devices are so powerful and they have so many different processors, and they have a camera, microphone, GPS, text, voice, everything that attacker would ever want. And that's one trend. We also see a trend in increase of phishing in both computers and mobile.
At the same time, privacy has become a really, really big issue today, because people are still, and is going to be in the next months, the weakest part of cybersecurity. So awareness and the privacy concerns are massively confronted right now from the security aspect.
We benefit greatly from embracing advances in technology. However, for all the positive experiences we gain, there remains the prospect of threats from cybercriminals. At a time when there are queries regarding how tech and the rise of AI could disrupt industries, the cybersecurity sector is able to benefit from our widespread adoption of information systems. Over the years, innovation has become more and more collaborative, from the creation of the wheel to smartphones and smartwatches. These innovations are a combination of the application of multiple people's knowledge into one creation with a common goal and objective. In the work environment, we share our knowledge on a daily basis with coworkers at a simple coffee break to a project or board meeting. These social interactions are fundamental to the development of our skills, products, services, and most importantly, our knowledge base. But in a world where enterprises need to innovate at a very rapid pace, knowledge sharing is key. The whole organization should move together and not just the R&D team locked up in a lab. In 2020, these interactions were disrupted and went virtual due to the COVID-19 pandemic. With this new landscape, new challenges arise. And in order to face these challenges, startups are created. StarMind is one of them.
So the first challenge that StarMind would like to tackle is the highly diverse access to knowledge within big organizations. So what we would like to achieve is not only giving access to documented knowledge, which as we know is 20% of the knowledge in general, but also giving access to the undocumented knowledge, which currently reflects 80% of the knowledge within big companies.
StarMind is a company helping enterprises create a corporate brain. They use AI to identify subject matter experts, give access to undocumented knowledge, and automatically create skill profiles in real time.
That only 25% of senior managers believe that their organizations describe their company as effective in sharing knowledge internally. So if you look, for example, at Fortune 500 companies, we know that those companies lose an estimated 31 billion per year due to failed sharing of knowledge, which results mostly in terms of lost employee productivity. So what we have learned is that, quite surprisingly, many companies already deployed AI within their core HR processes, but nevertheless, what most companies are lacking is a holistic view on the skill set of their employees. And that being said, I'm not only referring to on skills being visible, for example, on CVs, but also on hidden skills such as hobbies, experience from previous jobs and projects, and so on and so forth. And I would apply AI in getting deeper a little bit into this.
And talking about the future, 2020 brought with it an important shift to the way we conceive work and share our knowledge with internal colleagues.
It's a very, very interesting sign that big organizations are very much looking forward to future of work or enterprise 2.0. And that those companies are demanding new technologies and ideas in order to transform business, both business model and employee models, to transform employee productivity and customer retention and satisfaction. And I believe instances or models such as plug and play is highly supporting this, and we are very, very much appreciating it for being part of something like this. We see currently a huge motivation to transform both as well business models and internal processes in order to provide a best employee experience and B, best customer experience. So if you look at the COVID-19 crisis, it forced organizations to send more or less their entire workforce to the home office with a one-day notice or less. I mean, everybody knows how quickly it went with a lockdown in Western Europe, at least was it March or April? And right now we are facing more or less the same challenge with the second wave in the fall of 2020. So many of the organizations we are working with were very surprised and did not have the internal processes set up.
Having processes aligned and well drawn does not necessarily mean success. It all comes down to two words: talent and diversity.
We believe that having a very sophisticated picture of the skills of employees within organizations is absolutely critical to ensure future success of business. The war for talent will be even worse from a company perspective. And so companies need a much clearer picture of the skill set within their workforce on the one hand, and existing skills of the workforce on the other hand, to be able to adjust both hiring and recruiting and training strategies, as well as and upskilling programs and so on and so forth.
The advancement of AI in different aspects of our society might be a double-edged sword, like in cybersecurity. In other areas, such as knowledge management or other enterprise technology, its application does not have the same ambiguous impact. If we look at the growth of agile teams within all sectors and industries, the lone wolf attitude in enterprises will not prevail anymore. But in order to grow, enterprises still have some way to go, and they do require the application of their employees' knowledge and skill sets to drive innovation and move the society forward.
Join us now for a live keynote all the way from Denmark. Joining us now, Torsten Hagen Jorgensen. He is CEO of Nets Group, Issuer and eSecurity Services. Torsten, hello to Denmark.
Hello, Felix. How are you?
I'm great. How are you?
I'm also good. We are seeing the challenges and opportunities in the current COVID situation here, with volumes being low, but also all of this pushing further to the digital transformation agenda. So also seeing the opportunities in this.
Perfect. Sounds great. Now, Torsten, if you're ready with your keynote, take it from there.
So thank you very much for the invitation to speak as a keynote speaker. I will talk about the topic of digitalization in post-COVID banking. And if you will bear with me for a minute and two, I will shortly introduce Nets and why I think our experiences being the paytech of the Nordics are relevant. So Nets has a 50-year-long history of being the paytech player in the Nordic. We are serving the majority of banks there and have been part of their digital payment journey. We are also serving public entities in a number of countries with providing the single log-on and EID solutions. So we are truly in the center of, you can call it the Nordic ecosystem of payments and digital transformation. So and Nets is a company of a size of more than €1 billion of revenue. So we are a sizable paytech player. And what I will share with you the next 15 minutes is some of our experiences from the Nordics and some of the key themes we think will play out post-COVID also in a European context. So why is the Nordics interesting from a digitization point of view? I think that it's probably the key differentiator here is the level of adoption we have seen in the Nordic. And the journey started quite some years ago. We have more or less converted to cashless societies, to paperless societies. We will soon even not have, the traditional plastic credit card or debit card. We will have most of engagement, whether or not it's with a public entity, it's with a corporate, it's the utility, an insurance company or a bank, or with Nets, it's digital engagement. So we have seen over the years more and more development of more and more digital use cases, or as I prefer to call it, all kind of customer journeys where you have somewhat payment related is becoming fully digitalized. So I think that not only the adoption level of digital, but also the wide area of customer journeys, relevant customer journeys being digitalized. And they're not only digitalized, they are easy and relevant for the customer, and they are cost efficient for the provider. We are talking about that most customer journeys, including log-on, authentication, reviewing and signing and archiving, can be done between 25 seconds and upwards. But for most, it's in the level of seconds, meaning, of course, that this is a truly digital penetrated market. And why has that been possible? I think the reason why the Nordics have ended up here is due to the size of the countries and the markets. And this very much talked about ecosystem has actually materialized. So we have in most of the market a situation where banks, with the Nets in center, with Nets as the paytech in the center, and public, have teamed up quite a lot and co-created single solutions. So in a number of the markets, we have very strong single domestic scheme. We have a single log-on component. We have a single way and the same way of doing EID. So meaning that we have strong common infrastructure enabling all these digital journeys. And I think one of the key words here, which I will come back to later, is the notion of co-creation and building these seamless journeys across different, you can say, entities. And as I said, we have probably now in the Nordics a situation where we are far into what I will call the second wave of digitalization. And let me describe a little bit what I mean by first and second wave of digitalization as we will look into Europe to see what I think will happen there based on our experiences at least. So the first wave was very much about going from physical to web to mobile. And I think that we have more or less seen all banks, both in Nordic and Europe, ending up providing mobile as a key channel for interaction with customers for a lot of basic services. A lot of that happened with increased speed, but it was also to a high degree driven by banks, supported by partners of different kinds. Partly fintech players for the most developed that added certain features, and of course more for the traditional providers of tech services. The interesting part of the first wave is, as I said, that I think we more or less ended up the same place. The journey, of course, for each of the different banks, I think have been somewhat different. And that's probably key to understand what I think will now play out and what will be the true challenge, but also opportunities of the individual issuers in Europe. So if you look what will happen going into the second wave, for me, the second wave is where you will see a much higher adoption rate in all of Europe. We are still talking about a card penetration in a number of European markets that are in the low 20s. The Nordic is in the 80s plus. We will see contactless. We will see digital customer journeys. We will see far more use cases becoming digital. And it will push a lot on the efforts required to keep pace. Because as the speed was accelerating in the first wave, for sure, speed will accelerate towards this, you can say, adoption towards much higher penetration of digital will be accelerated due to COVID. So I think the speed this time, the speed to market, the market will demand, public will demand an even higher time to market, a faster time to market than we saw in the first wave of digitalization, that after all was more manageable for most issuers. So I think what most issuers will be looking into is a situation where now this will be driven by a strong demand to offer all these new digital customer journeys. Part of realizing that is, of course, happened. So what we see most issuers, how they're preparing for this, is what we have all learned to know as, cloud ready, API everything, building modular, being flexible, building flexible way to allow for engaging faster and better in partnerships with the big techs and with the fintechs of the world. When you engage with the partners, I think it becomes also clear that we will see a bigger differentiation between the paths that each of the issuer will choose. It's not many years ago where it was a little discussion between whether or not you do it in-house or you should outsource. And I think for many issuers, the real trick will be the in-between choices. And increasing what have also happened is that some of the partners, whether or not it's fintech or big tech or pay tech or whatever we call them, are increasingly both a partner and a provider, but also ultimately a competitor. The issue of the gap that needs to be closed with regard to adoption is that from an issuer point of view, as you adopt to much higher level of digital, then the issue of migrations, the issue of integrations will multiply. And that calls for being very specific on your own journey. So it's less about where you want to go, where I think directionally we all can see where it will go. Payments become digital, becomes contactless, become digital customer journeys. But the way to get there, knowing that there's very little time, knowing that you all have unique type of legacy, means also that even though you are applying all the same support in terms of partners providing cloud or API, everything, you will have to find your own way. The uniqueness will be less the offering, but it will be more about the uniqueness of your roadmap towards solutions. We call that in Nets managed innovation. So what we think we as a provider can really do to help is, of course, to have the full suite of solutions, platforms. We have over-invested in the platforms required, in the solution required. We have over-invested in securing cloud enablement, in terms of API enabled, in terms of flexibility, in terms of pre-configuration, so that we are, you can say, we are easy to work with. And this is not the usual that we can make a tailor-made solution for it. That we can do. But more importantly, the key thing will be the co-creation we will do around the roadmap to the to-be state, i.e. allowing, together with the individual issuer, the unique journey, the unique sequence and prioritization of when, what, balancing all the competing priorities that are taking place with the issuers now, where they are put under pressure from the lack of time they have, and the uniqueness of their legacy. So for us, the key is to be able to, of course, provide all the solutions and have the mindset of co-creation. And what we have seen, and just to take an example, even with the neobanks of the world, we see that these co-creation sessions, finding the path for an individual issuer, whether or not it's an incumbent or it's a neobank, is the key to success as the prioritization becomes the key for success. So to be able to compete with the big techs of the world that I soon might also enter fully into payments, to compete on a relative scale with your incumbents, we think that this about managed information will be the key, and we have positioned ourselves for that. So for me, that is, I think, increasingly the key differentiator that we would like to convey the message about. Think about managed innovation. That's the key differentiator in a post-COVID banking world. Thank you very much for the attention.
Moving forward from this great chat with Torsten Hagen, welcome to the panel Disrupting Banking and Payments from Within. Now, the banking and payments space has experienced a high level of disruption in the recent years. Speed, security, and digitalization will be the key trends to follow up and to keep up with the increased competition. Please welcome the moderator of the session from Thomson Reuters, Sharon Lamb.
Thanks, Felix, and thank you everyone for joining the Expo today. My name is Sharon Lam, and I'm the Asia Production Editor at Reuters Breaking Views based in Hong Kong. I'm delighted to be moderating a panel today on disrupting banking and payments from within. Unfortunately, one of our panelists, Jurgen van der Leer from ING, is unable to join, but we do have some really great panelists today who I'll just very quickly introduce. Very happy to have Daniele Gabai, Head of Strategic Partnerships and Alliances at Nexi. We have Haisa Abuno, Head of Digital Payments at ELO. And we also have Andrew Mitchell, Vice President, Development and Infrastructure Support at JCB International. So I guess we'll just kind of dive right in. I guess the elephant in the room right now is that, we're living in a global pandemic. So I guess to kind of start things off, I'd like to ask kind of how has COVID-19 impacted the world of banking and payments? How has the virus helped accelerate a shift towards digital transactions, and how much staying power does it kind of have even once lockdowns ease? And I'd be curious to hear from the perspective of your various businesses and how COVID has kind of affected operations, if at all.
Well, I can start. Sure, I can start. So here in Brazil, we had a really unique situation on the pandemic, as all countries were highly affected. We have here 200 million people in Brazil, and before the pandemic, 60% of all of them were unbanked. And with the pandemic, the government decided to give aid for more than half the population. So since May 2020, we got almost 100 million people out of this unbanked situation. So from May to now, we got 100 million people starting to have access to financial services. And because of the situation and the speed that all of these people needed to receive the aid, The decision was easy. It needed to be digital. It must be 100% digital. So with the pandemic, as we have seen in other countries, we have seen the the speed in the adoption of contactless payments, NFC. But here, due to this need of giving this aid to people, we've seen also the highly adoption of QR code technology. So since we assisted the government on giving help and giving this money for people in a vulnerable situation, they did not have access to cell phones and devices that were able to pay with NFC, because we're talking about people with low income. So QR code was the decision and the way to go. And in less than 10 months, we have gone from 0 to 100 million QR code transactions happening and making possible that these people were able to make purchases and use the aid that they were given by the government. So it really made a shift, and not only towards NFC, as we have seen in other countries, but also with QR code. So this was really, really a high impact in the payments system and industry here in Brazil.
Daniele, did you want to add to that, or for Andrew?
Sure. We actually have a very different scenario in Italy. The COVID-19 has certainly disrupted the world as we knew it. We saw a drastic 40% drop in discretionary spend, the reduction in cross-border payments, and major contractions of revenue in the first half of 2020. In the second half, we saw a rebound with acquiring volumes going back to pre-COVID growth until the latest restrictions were placed. We can highlight different trends in three main sectors. The first one is basic consumption, like groceries, healthcare, where acquiring volumes grew 30% year on year, with a strong acceleration on e-commerce. The second is discretionary consumption, like clothing, beauty care, where we saw a big shift of volumes to online payments. While store experienced a drop of physical payments due to restrictions, e-commerce rose rapidly with growth rates 30 to 50% year on year. And the third is high impact consumption, like travel, hotels, and restaurants, which were the most affected by the pandemic, with losses peaking almost 90% during lockdown. So during the pandemic, merchants had to keep serving their customers efficiently but cost effectively, increase conversion, leveraging mainly proximity commerce, and disrupt their existing business model for survival and adapt to the pandemic. The Italian government has sought support from payment and financial institutions to promote digital payments and educate both merchants and consumers towards digital. At Nexi, we have addressed these needs and delivered the necessary tools really within days. So we basically made omnichannel accessible to small and medium merchants. We enabled every touch point they had across every sales channel to reach their customers, launched several initiatives to support businesses and improve experience both in store and online. So we pushed massive campaigns to drive contactless adoption. We refunded fees for micropayments up to 10 euros to drive adoption. We added to our e-commerce a pay by link, basically enabling remote payment acceptance via email, SMS, or WhatsApp, which really made a difference between staying open and avoiding closed shop during lockdown. And we delivered to merchants a social commerce, which is a very basic form of e-commerce, publishing a product catalog, menus on social pages, receive orders, and accept payments for delivery or takeaway. Because everything we do is customer-centric, and we have a very strong focus on customer experience to really make it as frictionless as possible, helping merchants and consumers really shift to digital. And it's really paid off.
And did you see that, do you see those, both you and how you said mentioned that there's been kind of a rise in e-commerce, QR payments. Do you actually see those trends kind of lasting kind of beyond the virus, or do you see, these things are kind of temporary? Because global payments revenue has also been, down 2020 compared to 2019, drop in cross-border transactions as well. So I wonder how much of this bump that we're seeing will actually have lots of kind of longevity as well.
Oh, sorry.
No, thank you. Well, I definitely think that it's a change that we're not going to come back in the stages pre-pandemic. I think that it was the way the market and the industry was already going, and customers were each at its own time accepting and adopting those technologies. And with the pandemic, they were in need and they were obliged to start using those technologies right now. So now that consumers have learned and seen the benefits of adopting certain technologies, I don't think we're going to come back in stages pre-pandemic for NFC acceptance, for example, or e-commerce growth, or even QR code here in Brazil. I definitely think that those changes are going to keep up and they are going to grow exponentially over the years.
Let me just bring in Andrew here quickly. I don't know if you kind of disagree or agree with those statements, or also what you also seen.
I think, we've followed pretty much a similar path, I think, to both Hagen and Daniele. In terms of the overall trajectory of things like e-commerce, that was always on an upward trajectory anyway. And I think, we've seen even before COVID really kicked in, we still saw a 30% rise in contactless usage. So I think that was already on the upward curve. Perhaps the modality might be a thing for contactless and NFC transactions. Certainly talking to partners, I see a lot of uptake in the usage of the pays. So m-commerce using things like Apple Pay, Samsung Pay. I think people are now probably quite happy to move more towards digitized forms of payment rather than plastic. So I think, we've been very keen to obviously push the issuance of products and then really to kind of push the acceptance of it from the acquiring side, acting as an international payment brand. So I think, that's very much going to continue. I don't think people will revert back to using plastic, and many sort of cashless initiatives already pre-existed COVID. So I think, most governments were kind of moving into that direction. Perhaps it's just more or less really a kind of decision on the banking products that banks wish to uptake. And I think, we're very much in favor of pushing e-com, pushing contactless. I think, the thing is, how do we really keep it relevant and keep pushing it forward? And that really varies country by country. We're operating obviously at a very international level, and something like COVID has been very different actually in some of our core markets, particularly in East Asia. They haven't been anywhere near as affected as Europe. So I think, we're still seeing good face-to-face commerce there, but overall there really has been a dip. The interesting thing for us is obviously where those cards are being used and for what they're being used. I think Daniele mentioned a lot of kind of different patterns of sector usage. So when we look at things like e-commerce, we don't really see a big difference overall. Actually, COVID hasn't really caused any impact, but obviously being sector specific, it has caused a big impact. We don't see the kind of T&E business that we would typically. So I think, there will be an overall improvement in future. I think at the moment things are steady, but once the tourists are allowed to travel again, then I think, we will actually start to see a big upward curve.
Great. And I just want to shift gears slightly. In recent months and even years, we've started to see quite a lot of consolidation in the fragmented sector in Europe. Nexi in November announced that it would buy Nordic Realm Nets in a 7.8 billion euro deal after acquiring CI, I believe, in early October. So I'd be curious to hear from Daniele and others as well, but how has the pandemic kind of added to pressures to consolidate? And also more broadly speaking, what comes next in terms of M&A for payments, especially now that there are fewer or at least not kind of any large companies up for sale now. And I know that certain banks in Europe have also started to sell their merchant acquiring businesses to payments companies. So broadly, kind of what do you think comes next?
So the road to big M&A deals has already been paved in the past 12 to 18 months with Worldline acquiring Ingenico. And we announced, like you just said, in the past couple of months, the acquisition of both SIA and Nets. In the past, we also acquired the acquiring business of a few banks in Italy, like Banca Intesa, Monte Paschi, and others. I believe this is just the beginning of a growing phenomenon towards further important aggregation, creating the necessary scale to compete at European level and globally. Scale effect and strong vertical expertise are fundamental to both compete and innovate. And as our business is bank driven and we partner with banks to deliver our services to the market, we believe in the future many banks will probably sell off their acquiring business or their payment business towards specialized players that will be able to compete in the market and better serve merchants with the time to market merchants really need.
Did either Andrew or Haisa, did you want to jump in, or should I move on? Yeah, go
no,
ahead.
Absolutely. I think it's of obviously big interest to us as an international payment network. Really what we see obviously at the moment is that big consolidation, as you mentioned. There's been consolidation for several years in the acquiring markets in Europe, particularly a number of sort of big American companies moving into the European market and buying up European estate. Obviously, what Nexi have done, what Worldline have done over the past couple of years is really huge for the market. I think probably the key thing for us to really dictate what happens in future is more or less the behavior of banks, whether they kind of use these intermediary companies, whether they try to make the market grab themselves. I think that's very important. So again, it's kind of the rails that this will all operate on, I think is a very broad discussion right now. We see obviously a number of potential players. I know kind of at pan-European level, kind of the governmental structures are more interested in really creating something ourselves as Europeans in the market. But I think people that own the technology probably will be key for that. So somebody like Apple buying MobiWave, for example, is a very good example where, okay, Apple perhaps might wish to potentially control mobile phone market as POS. So, we will start to see, okay, probably a popular technological basis for operation. And then I think, how the banks will interact with that will be the key interest point. I think most of us will still continue to get our salaries paid into our bank accounts, maybe for slightly new players, but how we can actually impose that into real transactions in the market is going to be the key battleground. So I can see the big consolidations in the current European market are very interesting and giving many possibilities to process payments in different ways. But I do think maybe the technology providers will have something to say about that.
Great. Haisa, did you want to jump in here or shall I move on?
No, please move on.
Okay, all right. So there's also been another, widely discussed topic, which is the European Payments Initiative. Just as a bit of context, 16 banks have said that they want to create a truly European payment system, which is expected to be up and running in about 2 years to digitize a region which is still predominantly very cash-based, at least the retail payments are. So how do you envisage that changing the industry landscape, especially given that there is also a fair amount of skepticism, for instance, that this initiative is necessary? In other words, are there kind of opportunities here that you see? Are there other kind of complications as well? And are there other models even that other countries are piloting that we should actually be kind of looking towards as well?
Shall I start on that?
Go for it, yeah. Okay,
so let's start with a cashless plan launched by the government, which is a first step to drive digital payments adoptions. Consumer get a 10% cashback for all in-store digital payments, not on e-commerce, and they get up to 300 euros per year. We have implemented it within our payment apps, NexiPay in the app, to basically allow cardholders earn their cashback through the apps they already have, so they don't have to download anything new. There was a test over Christmas to revive the economy after lockdowns. And I have to say the first results were very encouraging. I mean, in just 4 days, over 3.5 million consumers enrolled, growing to over 6 million in 15 days, with over 10 million cards enrolled. Adoption is expected to grow as more customers and merchants learn the benefits of lack of contact with cash, which is crucial to help contain the pandemic. On an ECB European payment initiative, certainly new initiatives will have to be created at a European level, boosting digital payments. As an example, that has been discussions at central bank level in the past weeks for the central digital currency issuing. We all know that crypto has been creating a great disruption. A strong response from central authorities is crucial to create an alternative as a further tool of European monetary policy. The aim of the European Payment Initiative announced in July last year is to set up a unified and harmonized pan-European payment solution, which incorporate major features like card services, digital wallets, cash withdrawal, online payments, and peer-to-peer services. Italy is not yet part of the initiative because only 16 major banks in Europe from 5 countries signed up. And there are 2 drivers for these initiatives. Loss in market share for national schemes in favor of international ones, followed by a rise in scheme fees. And EU banks need to compensate the loss in future or a reduction of interchange fees, which are expected to get to 0 on debit and lower by 2/3 on credit. And I do believe that we also have a great opportunity with open banking, provided that is played bank-friendly and not challenging traditional banks, because this will not benefit the system.
I think maybe on top of that, I don't know where I'd really bet my sort of 5 digital euro or 5 Bitcoin, but I think the European Payment Initiative is definitely very interesting. And I think it's something, you know, we've seen before. Doesn't mean I'm in any way skeptical about it. I think before there were a number of problems that kind of beset that. You know, there were a number of different initiatives, EAPS, Monet, Payfair, that didn't really work out. I think the main thing was the regulation was thrown out there. And people were asked to investigate how to deliver that scheme. I think now, okay, there isn't broad buy-in at the moment, but there's still significant buy-in of banks that have that core interest to develop that product. And I think PSD2 is a real big facilitator. So I think we can come on to maybe regulation later on, but really right now, the appetite of the banks, I think, you know, within EPI, they've kind of developed their scheme and they're processing portions of that initiative now. Obviously, the next couple of years will be interesting to see if there is a deliverable at the end of it. Really, you know, who's really going to pay for that, I think, is a core thing. So I know there is a kind of existential discussion going on within the group about whether they continue using card kernels, whether we move to a pure, let's say, PSD2 open banking rail, whether the things interoperate. I think the ongoing appetite will probably be the key thing, because at some point, you know, the investment needs to continue to develop that. Let me say, from an international schemes point of view, it's very difficult to build a scheme. Then obviously looking at the global interoperability of it, that's another factor. You know, do you issue an EPI, I don't know, Visa, MasterCard, JCB card that you can co-badge and operate as a card, perhaps in other countries, you know, or do you go pure banking route? It's a really difficult topic to build from scratch, and then to be able to apply with buy-in from banks around the world, because in the end, that's basically what schemes do. We just act as the middle guy that's able to kind of create that flowing interconnected business rule between, you know, a bank in Brazil, bank in Italy, a bank in Hong Kong. It's, you know, very difficult business. Cashless is definitely interesting. I think, you know, we've seen it in Japan. Within, you know, a year, we suddenly have 15 or 16 different QR schemes, which I know this is something sort of very experienced with. And that's something very heavily promoted by the government. So I think, you know, the cashless part will probably be more country by country orientated, depending upon the maturity levels of the market.
Yeah, I completely agree with you, Andrew. I really do think that the regulation and central banks' definitions are going to be a key factor on the cashless adoption. Here in Brazil, we are a highly regulated financial services industry. Central bank is hyperactive, and it really has a strong agenda and have been working for the past 10 years, I think. So in 2020, they launched their instant payments system and have been regulated the situation with cards and issuers, and with all the main focus on bringing people, because I think here in Brazil we have a quite different situation from most European countries, because we are a continental country with 200 million people, but with a low income part of population that is really important, and it's really it really needs to be incorporated by the government. So we see their agenda on adopting cashless and in increasing competitiveness, so we can have more fintechs and more startups offering services for this low income part of the population. So it's all a huge agenda that have been working for the past years. And it's really something interesting that when we discuss the open banking and instant payments agenda for the central bank here in Brazil, what we aim is that in less than 2 years, we have a system as robust as the one in UK, for an example. So I think they're really aggressive with that plan. And I completely agree when Andrew says that central banks and regulation are going to have a key role in cashless adoption around the world.
Thank you. And so I'd also like to ask a little bit about big tech. As you're aware, where I'm sitting in Hong Kong, one of the biggest stories here is the regulatory halt of the big fintech giant and Alibaba affiliate Ant. So what kind of possible futures do you see in the European and US banking payment sector? And do you see a future where, do you see a similarly kind of large technology company take on a role as a dominant interface with consumers? And also slightly related to that, will there be more regulation of payments companies in the West, and how do you see that evolving? I think Andrew had some thoughts on that before, if you wanted to start off.
Yeah, I think obviously probably two big regulations that are kind of groundbreaking in Europe that are really affecting big tech at the moment, I would say, are PSD2 and General Data Protection Regulation. And I think they have very sort of wide-ranging impacts. I sat at an event with the Competition and Markets Authority in UK, which obviously manages competition as a regulator in UK a while back when we were allowed to speak to people. But they basically felt that PSD2 in particular opened up the door to big American tech. And I see this pretty much as a common recurring theme amongst the kind of European super governmental entities, that they feel that, opening banking is probably a key thing for the technology providers. So I think it might be that, to quote Adam Smith, it's a kind of unintended consequence actually of a regulation, that we're probably changing the rails in favour of perhaps a slightly bigger cap in a different region. So I think that will be an important factor, probably is the underlying intention of the regulation and the current status, because these things are moving targets. We will see PSD3 before too long. So if I think it's the consequences of PSD2 are not as wished, particularly in Europe, then I think PSD3 will seek to rectify that. I think we are heading towards a kind of stronger European initiative, particularly some of the recent behaviour in the US, I think, has shown a kind of unpredictable nature. So I think Europeans are probably more than ever keen to try and keep everything in-house as much as possible. I think that will be one important point. The General Data Protection Regulation is another key factor. And I know obviously examples around the world, Californian data protection law, maybe Singaporean data protection law. These are all sort of very important. But I think the GDPR is incredibly wide-ranging, and it's unprecedented in our time. In Europe for a number of years, we were looking to try and knit together all of the European countries' data protection laws, because they were very sparse. Since '95, I think they maybe introduced the first attempt, and it's only really as of 2018 that we really started to enforce that. I think with the General Data Protection Regulation, we've not really seen the full consequences yet, because everybody has a slightly different interpretation. And there are bodies, the European Data Protection Board right now is an important one, that is really determining what the GDPR means in terms of who is a controller, an ultimate responsibility owner of data, who is a processor. This kind of definition, I think, has to be clear, because the financial penalties are so huge. I think that will then filter through to other regulations, whether it's electronic identification, which will really impact, again, it will kind of impact upon PSD2 and how we implement open banking. If you send a payment from bank to bank, even excluding, let's say, a typical card rail, you will still have to authenticate the customers in a certain way. Even money laundering regulation is very important, because now even a Japanese credit card spending in Europe, the acquirer of that transaction has to know that the due diligence of that Japanese card has been performed. They are basically liable for doing that. So I think the overall liabilities in the market are really being given to the kind of end users in terms of merchants and acquirers. And I think that's really going to shift the mentality. You know, if somebody can come in and wave that magic wand to fix all of that, I think that would be wonderful. But you know, I think it's going to be a long road before we really see the consequences.
Thank you. Daniele, how you said, did you want to add to that, or?
Yeah, I would say level playing field. I mean, we're seeing what happened 10 years ago in the telecommunication industries is happening again in the financial industry, but with a much bigger order of magnitude. So if we look at Italy as an example, which is a secular market and a very regulated and a heavily regulated market, big techs will need to partner with local players like we already doing with Google, Apple, and other players in the market to deliver services to the consumers or to the merchants.
Mm-hmm.
But I would definitely say level playing field.
I think making a parallel with the European and US market, with the local market here in Brazil, what we have seen, it's a much stronger attitude from the central bank and regulator towards big techs. So in the past few years, the goal was, okay, big techs, you can come, but you must partner with local companies or international companies that already hold business here in Brazil. Right now, what we have seen is that central bank is actually demanding that those big techs are also regulated. So they are going to be able to provide financial services for people, even though they're only talking about payment services, payment providers, they are going to be part of the financial system here in Brazil. So it's a much higher bar for them to reach for now, that they must be part of it, than before, when they had to partner up with local card schemes and local networks and local issuers. So what we see here in Brazil is that when we talk about fintechs, it's one approach from the central bank and from regulators, because they look at it and see, okay, we're bringing competitiveness here for the market. But when we talk about big techs, what I feel is that they think, well, I cannot have a monopoly coming from issuers and now going to big techs. So they must be regulated and they must work inside, because they bring with this enormous amount of consumers a risk for the financial market and financial industry as a whole. So that's what we have been seeing in the last 2 years here in Brazil.
Okay, wonderful. Well, we're just about to run out of time, but were there any other kind of last minute thoughts or you know, talking points in the last minute that any things that you feel like we didn't mention that we should discuss?
Well, I think that I'm a payment nerd, but I think this is one of the most exciting industry to work. And I do think that we are an industry that it transfers innovation from corporations to consumers in an extremely high speed. And I think it's going to be even more exciting for a few years still. So.
I would say trust. This is going to be a key thing as well. You know, the reason we're here as payments professionals and organizations is we have to keep that trust of the customer. You know, we've been really proliferating chip cards for a number of years as a payment instrument method. You know, the rails of that are changing, and it's very important for us to kind of keep up with the arms race of cryptography. And I think that's going to be a key battleground for us in future. Quantum computing is coming. You know, how we encrypt data and send it, you know, is going to be a very key battleground. And now more than ever, the data must be protected very carefully. So I think that's going to be the next interesting part for us. Should be a thrilling ride.
I think the way we innovate and deliver innovation to the market is really changing the way people behave on a daily basis and make their life better and improve their quality of life.
Wonderful. Well, thank you, Daniele, Andrew, and Haisa for sharing your thoughts. Very interesting, and I appreciate that a lot. So I look forward to chatting with you again soon, hopefully once this pandemic ends. So yeah, back to the studio. Thank you.
Thank you. It was a pleasure.
Thank you.
Thank you.
In our following sustainability report, we'll cover topics like the positive and negative impacts of COVID-19 to sustainability challenges, how startups are better positioned to tackle sustainability challenges, and approaches through which financial institutions are active in the sustainability space.
It will not come as a surprise if we say that our world is very crowded. Nowadays, we are 7 billion humans. By the end of the century, predictions say we will reach 10 billion. And we're consuming natural resources very fast, at a more rapid rate than they're generated. These are environmental and social issues, but they're also economic issues. The financial services industry is a vital enabler for the real economy. It supports economic well-being, which then increases the ability of families and governments to improve social outcomes. The financial industry is playing an increasingly relevant role in the deployment of sustainability. There are mainly 3 ways through which financial institutions can tackle sustainability. The first way consists in sustainable investing. Sustainable investing embraces all those investments contributing to environmental and social issues. They tackle challenges like renewable energy, waste management, greenhouse gas emissions, circular economy, or social cohesion and integration. Sustainable investing is less complicated than what we think, better performing than we believe, and more important than we can imagine. In fact, research shows that long-term performance of sustainable funds outperforms non-ESG funds. ESG factors are not just a nice-to-have, but true determinants of higher success.
Reorienting private capital to more sustainable investments requires a comprehensive rethinking of how our financial system works. And it comes with changing stakeholder demands. Clients are asking for green financing. More and more equity and debt investors only invest ESG compliant. Thus, non-compliance is not an option. Impact investing is a priority for millennials. Here we talk about 40 billion to be reinvested in the next decade. And ESG is forming the basis of a new regulatory chapter in the sector.
Sustainable funds also outclassed traditional funds during the market sell-off sparked by coronavirus in the first quarter of 2020, granting average excess returns of up to 1.83%. This was mainly due to ESG funds' low exposure to oil and gas, which faced steep losses in value during the initial phase of the pandemic. If we look at the ESG funds that existed 10 years ago, 77% are still up and running. However, only 46% of traditional funds still exist. ESG funds have withstood the commercial pressures that forced the shutting down of traditional funds. This is probably due to their niche status and dependable institutional investor base. However, this may change once sustainable investment products reach mainstream status. Still, institutional investors are the X factor in sustainability. Why do they hold the key? This answer is a simple one: they have the money.
Yes, the big tangible and positive effect, the general one for our society and the climate will be the transition to a low carbon or net zero economy. The world needs to shift capital and investments from high to low carbon activities. And the financial industry has an important leadership role in the shift towards a low carbon economy, fostering climate resilient activities, creating a new sustainable economy, helping businesses and society to create solutions for the major sustainability challenges. So financing and fostering innovation and research on, for example, sectors and opportunities such as liquid natural gas, carbon storage, renewable energy, building renovation, and low emission transport.
I think that the next kind of tangible change affecting our society driven by sustainability in the financial industry will be more green infrastructure projects and more green infrastructure technology, especially as these financial institutions divest from fossil fuels and look to more ESG funds. And I think for individuals, you'll start seeing more options to invest in ESG funds or green infrastructure projects as well. I think PwC just came out with a report expecting that 60% of mutual funds will be ESG by 2025, which is really staggering.
The second way financial institutions can have an impact on sustainability is by putting in action a full and transparent disclosure on how sustainable their activities are. The European Commission is pushing an agenda that will guide banks and other institutions toward a more thorough transparency when it comes to disclosing their sustainability policies. The Sustainable Finance Disclosure Regulation will be applicable starting from March 2021. Financial market participants and financial advisors will then be obliged to release details on their sustainability risk policy, as well as adverse sustainability impact of their investment decisions and remuneration policies. Another key issue to keep in mind is how this new regulatory direction is strictly tied to data and analytics. The quantity and quality of ESG data that needs to be consumed should be enough to embed sustainability into decision-making. This is not just a compliance checkbox exercise anymore.
And so if you're thinking about some of those challenges in the industry that they're facing today, I would still say measurement and transparency is a huge undertaking. I mean, even though you have ESG movement and trends, sometimes the data is not always clear, sometimes the data is not always there. And you're starting to see technology come in that is digitizing waste streams, digitizing supply chains, and providing that data that will be needed for financial institutions. But I think still measuring it, capturing the correct data, and then providing the transparency is a whole nother challenge that I think just is a struggle overall in the industry, not only for sustainability.
Stoppable growth of sustainable investments has caused regulations to decide to take the step on designing a legal framework that serves to standardize criteria and also offer more guarantees to investors. And Europe is a pioneer in this field. This year, the European Commission defined a taxonomy and other instruments such as eco-labels or changes in MiFID II to better understand the preference regarding sustainability and to inform the clients about the characteristics of the products they have with respect to ESG criteria. So the industry is facing a huge challenge with this regulation.
The third and last approach entails banks and especially insurance operators to contribute through value-added services to the awareness of society towards sustainability. Financial players can help their customers to transition to greener attitudes. However, while some progress has been made, a 2020 UN report revealed that only 2 in 5 businesses that have committed to the UN goals have sufficiently adapted their targets to accomplish them. Banking and insurance customers are more aware and demanding than ever in terms of sustainability. It's clear that moving forward will need some serious legwork from financial institutions, especially for Gen Z and Y consumers who are leading the shift toward more environmental and social-friendly spending habits. On the other hand, insurance operators are working to enhance their customers' practices through impact underwriting. In practice, insurance players are persuading their policyholders to adopt a greener lifestyle in a number of ways, like by incentivizing the adoption of eco-friendly appliances, buildings, and cars. Besides offering lower premiums for eco-friendly choices, insurers can allow for upgrades to more energy-efficient appliances and machinery, as well as encourage people to opt for repairs instead of replacements.
Sustainability is seen as an opportunity and a risk. Banking plays a key role in financing the transition of the economy to a more sustainable way. So in helping the clients, our clients, in the transition towards a sustainable future, though through consulting and financing their business. The SDGs in the international agenda brings benefits to business development, achieving better performance. They help identify new opportunities, develop new products, and improve relationships with stakeholders, and also converge towards more inclusive and sustainable business models.
Stepping aside from the purely financial context, corporates in many different sectors face risks related to sustainability. We're talking about all the environmental, social, or governance situations that, if occur, may have negative impacts on the assets, financial, and earnings of a supervised entity or even on its reputation. One of the most obvious examples of an activity heavily impacted by sustainability matters is supply chain. There are mainly 2 types of sustainability-related risks that are impacting supply chains. If we consider, for example, a consumer company, the first type of sustainability risk has to do with the impact of providing goods and services to customers, which will often generate far greater social and environmental costs than its own operations. A second type of risk is represented by how sustainability impact can interfere with consumer companies' supply chains. For example, GrainCorp, a large Australian agriculture business, reported that a drought cut its grain deliveries by 23%, leading to a 64% drop in 2014 profits. Unilever estimates that it loses some 300 million euros per year as worsening water scarcity and declining agricultural productivity lead to higher food costs.
Key sustainability risks for corporates, it still has to do with tying to their supply chain, but also just their environmental impact as a whole, especially when you start thinking about scope 3, which is more indirect carbon emissions, which is a risk because it's hard to manage, it's hard to measure, and it's hard to sometimes hold your suppliers or vendors accountable, for example. And I think when it comes to the financial impact of those risks, I think that could impact the company when it comes to how they get loans, how they get insurance, how they have their pricing or their taxes. I think you're going to see a lot of impacts when it comes to financially, right? How those banks are working with these corporations that might have those negative impacts or those risks in their supply chain. I think those two things will be more interconnected in the future than ever.
Everything has been put aside by the global pandemic. The UN announced that to reach its 2030 goals would mean reimagining the way people work, learn, live, and consume, and listening to young people. And we believe startups will play a crucial role in the process, with the advantage of being born as remote-friendly entities. In the rigid financial sector, fintech startups can bring a breath of fresh air. Fintech can have important potential implications for the implementation of a range of sustainable development applications, as the technologies they rely on will continue to develop over the same timeframe as the implementation of the Paris Agreement and SDGs. The future development and adoption of innovative technologies like blockchain, IoT, and big data will lead to a radically different financial and capital allocation system tailored to reach inclusive and sustainable development.
In corporate sustainability, green targets must be met with financial incentives based on accurate data, and fintech is the bridge between these elements. By, for example, combining data from credit cards and banks with data from retailers to calculate a purchase impact on the environment for a client. This is where technology is a key player. A lot of work, a lot of work has to be done by us together. And there is not a competition between banks and fintech, but rather it's a partnership with the aim of becoming more efficient financial services platforms.
COVID-19 has shown the world what a global challenge looks and feels like. Everything stopped, and this gave us the opportunity to perceive the positive effects that it had on the environment. However, during the pandemic, the accent has been put on social initiatives rather than environmental ones. For example, companies' social purpose and their treatment of employees has never been more closely scrutinized. On the other end, back in March 2020, green bonds issuances were only a third in value compared to the previous year. Another key aspect emphasized by COVID-19 is the need to manage reliable data in an efficient way. Data, risk management, and modeling has played a crucial part in the firm's reaction to COVID-19, and now corporates should harness the significant efforts made over the past 6 months. Data capture, building tools, and knowledge to improve risk modeling and stress testing can be valuable allies when building a sustainable policy.
Regarding the UN Agenda 2030, COVID crisis has increased the persistent inequalities. There are pretty negative impacts in areas of gender equality and human rights. And the pandemic has put a brake on the SDGs development, since their achievement depends on economic growth and globalization. And also the investment required to achieve the SDGs and is also threatened by the economic downturn. The other side, the pandemic has had positive effects in the areas of environment and sustainable finance. we have seen that sustainable investments are the ones that have the best behavior in this recession, a more stable behavior. So we can expect that COVID-19 crisis to change customer attitudes to sustainable finance towards a greener future.
Yeah, I think COVID-19 impacted the sustainability agenda in a few ways. I think first off, COVID, I think, increased the awareness of sustainability. In some cases, actually proved that resilience is an advantage. And so now we're seeing a lot of companies try to build that resiliency, try to improve the entire system that they work in, and that impacts their business across the entire value chain. And we're seeing companies kind of use this opportunity to double down and really focus on sustainability, making that a core piece of their innovation strategy and a core advantage for the long term. I think there was definitely a pause at some time when people were still trying to figure out, how to live, how to eat, how to stay healthy, how to care for their loved ones and their family and their friends. But I think pretty quickly, once people adapted to kind of this new way of working, new way of living, they realized that climate change isn't waiting for anyone. And I think the sustainability agenda has now increased, especially recently once people start getting back onto their feet. There was a UN Race to Zero report that said in the last year, net zero commitments doubled. So you're seeing a lot more commitments, a lot more movement in the space, and I think momentum as well.
Mark Twain said, "Plan for the future because that's where you're going to spend the rest of your life." The financial system has worked for long on its own set of principles, focused on attracting clients and maximizing short-term profits. These principles are the fruit of a capitalist and closed economy that is no longer valid. In a circular and sharing economy focused on the needs of customers and the environment, social and governance issues are key. As we have seen, the same financial system that was somehow one of the oppressors of environmental and social development is now at the core of this sustainable transition. By focusing on greater environmental responsibility, climate resilience, low carbon, human rights, gender equality, social inclusion, sustainable economic growth, and many other objectives, financial institutions can thrust for a full-scale transformation that will swiftly spread to other sectors of the economy.
Sustainable finance might be the most important topic the industry needs to deal with right now. Ensuring that financial products and services not only promote economic prosperity, but equally do not harm the environment is key to sustainable growth. Highlighting how sustainable agenda will transform the banking sector, the panel Sustainability, the new battleground for financial services, will focus on the opportunities sustainable finance brings. The moderator of the panel is editor at Finance Business. Please welcome Ulrike Barth.
Hey, hi Felix.
Hi Ulrike, great to see you guys on screen. Now Ulrike, what can we expect today in your panel?
Yes, I think we have some great practitioners here from the industry. You will tell us what they are doing right now to push the sustainability aspects in their business. But also we want to discuss what fintechs and startups can contribute to this. So it might be quite interesting and controversial.
All right, I'm looking forward to that. Take it from here. Thank you.
So thank you very much. So it's my pleasure to introduce you to the panelists. And we will get us their different perspectives on the approaches through which financial industries are active in the sustainability area right now. So first of all, there's Sandra Schoenhoven from ING. She's head of sustainability there and leads a team of sustainability advisors which implement the initiatives at ING. So welcome, Sandra. And we'll have Frank Siebert. He is head of sustainability business Germany in BNP Paribas, and they're responsible for the development of the awareness raising measures. And he's also responsible of the sustainable banking and financial solutions for corporate clients in Germany. Then we'll have Katrin Wagner. She is head of corporate sustainability at HSBC, and there is responsible for the environmental but also the social project HSBC is focusing on. And we'll have Amanda Young. She is global head of responsible investment at Aberdeen Standard Investment, and there leads the responsible investment activities within the investment team. So, hello to everyone. Very fine to see you here on our Zoom meeting panel. Quite a bit different than we planned it to, but I think it's good to have you all here. Yes, I would like to welcome to our discussion and to the field of sustainability, which has been quite a buzzword in recent times, and many banks are embracing the theme at the moment. So we see a little development for sustainability in the financial sector from a kind of niche topic to mainstream topic right now. So my first question to the round is, let's talk about how these announcements and promises are received in practice. So how does every one of you define the topic of sustainability in your organization, and how is it broken down in practical terms? Perhaps, Sandra, you could start and give us an example of what you are doing right now.
Yeah, sure. Thanks, Ulrike. So I recognize that sustainability is something that is becoming more and more mainstream, and maybe used to be something that corporates did a bit of on the side. But now more and more it's being integrated in the way we do business. For ING, it means focusing on two themes: climate action and financial health. For us, climate action is really important to look at not just our own footprint, because in the end, that's really minimal with our offices and business travel, especially now with COVID. No one's working in the office, no one's doing business travel, of course. So for us, climate action is really about what we finance and what we don't finance. And a few years ago, 2018, we made a commitment that we wanted to align our lending portfolio to the Paris Agreement goals, so below 2 degrees of global warming. And since then, we've taken very strong steps in calculating for the most emitting sectors in our portfolio what this really means. So really calculating the CO2 intensity per sector and also setting targets for 2030. And you could ask yourself, isn't that a bit too far away? 2030, still 10 years to go. But of course, we also know that this is quite gradually, and it also really depends on, for example, governmental actions in some of these sectors. So that's why what we're looking at when it comes to climate. So let me pause here to also give the floor to others. Happy to contribute on other teams later on.
Maybe hand over to Katrin. Do you have an example for us what you are doing right now in your business?
Yes, sure, and thanks for the kind invite. So I mean, in the end, the role that banks have are crucial in regard of the sustainable development, and to create a sustainable economy. This is probably the biggest challenge of our generation. So banks are keen to play their part, and obviously a lot is already going on. So to give you some insights on our current processes, it's all about, from my view, first of all, risk management, and to better include climate risks within our loan process. So what are we doing at the moment? So to have a closer look on processes and the role of the banking sector in supporting the transition to a sustainable economy, we try to figure out how our clients and how our, so from a sector perspective, how are our clients prepared to the transition to a low carbon economy. So we started 3 years ago with a small kind of bottom-up project, and set up exposed branches and asked to provide details for a kind of transition risk questionnaire. This is the wording that we internally use for this. And when we take a closer look at the sectors that are most exposed to transition risk, we believe that these are the automotive sector, oil and gas, power and utilities. It's all about transportation. It's about chemicals. So these are nearly 10 sectors. So we try to figure out how much intensity our loan book is currently evolving in regard of carbon. And at the same time, we trained our staff to be able to get into the client dialogue and to start up the conversation, because this is pretty new for a relationship manager to start these kind of conversations, because sustainability itself is very difficult. So it seems to be a quick win and easy, but in the end, you need to have deeper insights on carbon markets, on the way a sustainable development needs to be set up. So to be honest, we are very much at the beginning, and I believe that we need to ask more questions in regard of climate risks. Yeah.
Okay, thank you. Frank, maybe you can give us a deep impact on how sustainability is written in your corporate DNA already.
Sure, with pleasure. So obviously, next to what the precedent speakers have said, obviously risk management is a key focus for us as well. And clearly, I think there are two main questions we ask ourselves: what do we not want to do anymore, and what we want to do more? And I think this is also what we see transformation being done, because I think one of the challenges is that we also will need to develop certain risk appetite for things which are untested, unproven, in order to ensure that transition really can happen, and not just exiting coal like we will do will not help us over to do the energy transition. So that's one of the key challenge, also from a risk management, but also from a capital allocation perspective. But more importantly, I think we have also defined an engagement strategy, because we believe that ultimately it's also a question of just transition. There will be losers in the industrial or technology perspective. And what we try to do is, first of all, given our footprint in certain markets, also to focus on, next to energy transition and biodiversity, which I think is a more common goal, also to see how we can support society in terms of young people and local footprints, which are partly regional also affected. If you think of Germany, there are certain areas which will clearly suffer from exiting coal, and there will be other areas which will be beneficial for maybe startups or new technologies being developed. And then finally, I think, and that fits here into also our discussion, entrepreneurs, because we really believe that in a changing industry sector area, we will need to identify early on those industries and those sectors which will create new companies. And I think this is where the startup and plug and play also comes into play, and focusing also on obviously fintech, which is clearly a core business, but also clean tech, and to see where we can support them. And they're obviously in both, either from a philosophical perspective, the fintech industry is under the same mirror like from the investors, like the normal established financial industry. And then clean tech, obviously sustainability becomes a key question also of the purpose and also the storyline to develop. So therefore we believe that that group of companies which we are here and the plug and play is a very important part of the whole environment to drive the story for, and also to change perception on what and how important sustainability is.
Okay. Last but not least, Amanda, how is your perspective on the topic?
Thank you so much, Ulrike. So for us, we talk about responsible investment, and within that, it's about using ESG factors to understand the risks and opportunities within our portfolios, as well as look after those assets that we have been entrusted by our clients. But within how you apply ESG factors in portfolios, you can have a very narrow focus on what we call sustainability funds. So for us, that's really about creating funds that have a far bigger sustainability focus and a more of a positive allocation of capital towards things that benefit the world in which we operate. Because as we know, we're not going to get the improvements without the investments and the capital going towards these projects. An example of something that we're working on quite heavily at the moment feeds into what Catherine and Sandra both said on climate change, is over the last 18 months, we have developed our own in-house bespoke scenario analysis tools. Now, we've done this for two reasons. One, because, well, actually, there's three reasons. One, because clients are asking more. Two, because the regulation that is coming down the line, particularly for insurance companies and pension funds, are getting them to focus heavily on climate change. And the third thing is because we realize that we need to develop tools that are fundamentally aligned to running our portfolios in the best possible way on behalf of our clients. And many of our clients are now talking about net zero. So how do we construct portfolios that are net zero? And it's not just about taking out carbon intensive industries. You have to understand where the political landscape is, work out regionally what it means for your investments. You have to think about what it means for different asset classes, because buying a bond and giving debt to money to companies for their debt is very different from buying equities. So there's the whole longevity thing. And there are companies out there at the moment, and this comes into the kind of fintech and what can startups do, that are providing tools for asset managers. But we have decided to actually build our own bespoke scenarios. So we work very closely with a scenario provider to work out what we think, as with our economists, with our macro people, to work out various scenarios that you can then apply across the different assets and across the different portfolios. So that is a big project that has been underway during 2020, which will be rolling out during 2021.
Okay. So I heard a lot about like the environmental aspect from you, from your introductions, but how about like social impact and social aspect? How are they included in the sustainability measures you have in mind or you're actually doing at the moment?
Yeah. Can I share something on that, Ulrike?
Yeah, sure.
So absolutely, a social aspect is as important as the climate one, although sometimes we tend to talk more extensively on climate when we say sustainability. Especially now with COVID-19 hitting us, and with that, of course, economic consequences. Already for years, we see that financial health and making ends meet is a big struggle for people. Surprising, around 40% of people in Europe are struggling to make ends meet every month. And that, of course, is different per country. That's on average. I think that's a stunning high percentage. And we don't even talk then about making plans for future. It's just about surviving every month to pay the bills. And you can imagine what it does to even starting to think about your impact on climate, for example. If you can't pay the bills, then what can you do on making your house more energy efficient? Because it also costs money, and next to that money, it also costs brain space. And we know from a lot of research that when you're in financial distress, your brain actually shrinks, not physically, but you're not really empowered to make good decisions at that moment. And so we do a lot of research in that area. That's one thing, because we've noted a lot of academics actually publish a lot on this topic. But how can you use those insights in offering financial products and services? How can you bring those insights also to a big field of fintechs in that area that all looking at how can we make the life of people better in offering financial solutions? So how can we bring those insights to these players? Because in the end, that is also benefiting our customers and consumers in countries where we operate. So that's one of the things that we are doing. We're also part of an initiative called the Think Forward Initiative, together with a few other companies working on this topic, getting all those insights in, and also making sure that we have empower the right players in this market. And usually those are startups, scale-ups, empower them with the right insights to really create an impact. It's absolutely as important field, I would say, as the climate part, but sometimes a bit overlooked or underestimated, and it shouldn't be that way.
Okay.
Thanks for asking the question.
Yeah, we also have.
Sorry.
Okay.
Go on.
So we also have maybe an example which is relevant here for this one, because we actually, BNP Group, created in 2018 actually a social business which is trying to combine the social element together with the climate part, which obviously is driving a lot of discussions here, rightly or wrongly. And it's called Climate Seed, and it's basically a startup within the BNP Group, but it has from day one been designed as a social business. And it has been created according to the guidelines of Professor Johannes, which is specialized in auditing and supporting social businesses. And the objective was here that we felt that the market for voluntary offset certificates for carbon is relatively intransparent. And therefore, it's very difficult for good projects to get access to buyers. Whereas on the other side, a number of projects which maybe are not so good have made basically inroads into the market. And we felt that as one of the objectives to kind of drive, if not decarbonization, because I think we all agree that net zero means that there will be still emissions being done. So we need to find a way to kind of certainly offset certain of the emissions which cannot be reduced. And therefore we have created what I would call kind of an eBay for voluntary offset certificates, with the objective to really focus on smaller projects, which are maybe mostly in Africa or Latin America, which by definition, once they basically are successfully in marketing their rights and been observed and validated according to certain standards, which there are a number of offers around, like Gold Standard, will also help local communities first on paying attention to biodiversity. So instead of cutting trees, you're basically planting trees, you're using them, but also mostly help local communities having a much more stable income or predictable income, which, as one of the speakers before said, is one of the main concern, that if you do not know how to make your means end, obviously the focus on sustainability is less of an issue. So I think, while not measurable yet in terms of impact, but we have decided as a group to invest money in there. It was a team of 5 initially, it's now 15. And I think it also serves as an example that you can do startups within the bigger group. Obviously it's challenging, and there was a lot of frustration as well, because it's a big animal here, but it has been proven successful. And I think it was also, from a management perspective, a way to show that yes, you can combine I think the strengths of a big organization with the agility of a smaller startup, and combining social business as well.
Maybe the question also.
So I was going to say, perhaps I can talk from an asset management point of view, on some of the hot topics that we're seeing at the moment. So for us, COVID has been an absolute game changer when it comes to really highlighting the potential social risks facing the portfolios that we're investing in. One of the big things is employment and labor. How do you treat your underlying employees? How are you making sure that they are safe in their working environment, but also treated with dignity and respect, and also given the flexibility, depending on which sector you're in, to be able to balance home life? We've got a number of people on this panel with children in other rooms homeschooling as we speak. So that's a perfect example of how we've had to adapt. There's a lot of adaptation going on here within business at the moment because of COVID, and that creates social challenge. And then for me, the second big thing here is diversity. This is a really big hot topic, and actually COVID and diversity are linked. So in my team, the people who are finding this the hardest are the working mothers who have husbands who work. I have other colleagues who are very fortunate in that they have stay-at-home partners or wives, and so the balance is different for different people. And COVID has also exacerbated the diversity, not just gender diversity issues within the context of our investments, but the issue around socioeconomic diversity. You know, the people at the poorest end of the spectrum are being hit the hardest. What this means for us as an economy in 5, 10, 15 years time, we just don't know, because we don't know what the current impact on those people who are finding it difficult to access schools. So technology being a really key piece here, but not everybody can access the same level of technological advances as other people. So what it's done is it's exacerbated that inequality divide. And for me, that inequality piece plays massive social implications on the underlying investments that we are managing.
Maybe also Catherine wants to add something to the social aspect too.
Yeah, I mean, in the end, I totally agree with all the interesting insights from the other speakers. So in the end, from my view, it's about a just transition. So when we talk about the ESG, first of all, we started with the E within the discussion, and now we see that the S is coming more and more important, because we know that the most vulnerable people are living in the countries where climate change is obviously already touching these economies and societies. So from an internal view, so what we are trying to improve, not only due to COVID, but due to a different labor market, due to digitalization, for example. So we are aware of that we need to be better in regard of future skills, meaning it's not about financial capability and financial employability, but it's about, and it's not probably about broken CVs. So we are trying to set up projects to help flourishing the economy. But in the end, from an internal perspective about our staff, in the end, we need to underline lifelong learning, so to say. So what we are trying to do at the moment is setting up a kind of learning HSBC University to help our staff to learn and to improve their knowledge, not only from a banking perspective, but we know that the world is getting more and more complicated, and for a client dialogue, you need to be aware of all the different aspects. So we think that it is our internal responsibility to help our staff to improve their knowledge. And I think the banking sector itself is moving very fastly at the moment, both from the risk perspective, from climate change, our role views, etc. But at the same time, we are most effective by digitalization, and we need to be better and to include these aspects as well.
As you all mentioned it, we are here at Plug and Play, and we hear a lot about startup business today here, and also how they can drive the topic of sustainability forward. So what do you think? Are these startups better capable to tackle sustainability challenges? And what can they do, what you can't do? What do you expect from them to do?
I kick off, Ulrike. So for me, I think startups have a fantastic ability to change the corporate and economic landscape that we have. We've got large companies out there already trying to address sustainability factors, have a lot of money to put behind it. But what they've never done is they've never plugged that in right from the start in terms of how do you structure yourself. And what's really amazed me is how much innovation and new business coming through has a social purpose or an environmental purpose. And it's part of what they do. So my encouragement to startups and to new businesses is think about your business holistically. What is the value you play in society? And how do you then capitalize on that value? Because I genuinely believe that social responsibility, environmental responsibility, and making money can all go hand in hand.
I would add that I think retention of good skilled people is maybe not the focus during the last 9 months here, but I think we clearly see that obviously big banks and asset managers, I don't know so much sure, but have had a challenge to explain why talented people should join them. So in a way, there is not only the technology threat from basically maybe outpacing bigger organizations in leapfrogging on technology-wise, but also do I always get the right people for the same challenges I'm also seeing inside the banks, because I need to also move up on the technology ladder. And there will be fight for talent. That has already been there, maybe less vocal in the last 9 months. But I think that's a big thing. And obviously we see very much even in our own shop here, which is a big shop, that whenever we have basically talented people, I mean, sustainability and the question, how do you position yourself, is a big topic, both for inside within the organization, but obviously less pronounced than if people want to join or we want them to join us. So I think it's also kind of selection of the right leaders, which will drive the discussion forward, and it will be a topic which will not be gone in 5 years. So I mean, that will drive over the next decade. I would say, how do we transform our societies here? So that is a big topic for myself.
Sandra, what do you think? What is the gap startups can fulfill?
Yeah, maybe looking at this from a different angle. A lot of push from regulatory side is coming our way. That goes for financial institutions, banks, asset managers alike. And I think we're very well positioned to take all of that regulatory stuff in. I mean, it's what we do on a day-to-day basis. Same would go for sustainability regulations coming in. But I think standardization is still a big challenge on sustainability. So what is green, what is greener, and what is not green or brown. And for that, we need a lot of data, for example. And I think fintechs or startups always have the ability to jump into a specific hole that is not easy to tackle by big corporates who maybe move a little bit more slow. And I think that's, if you would look at where is a viable business case to make now, if I start in this field, I would say data tooling to make your life easier, because we need to do even more reporting than we did before and even more standardized than it was before. So making the lives easier of people like myself as sustainability managers and offering services to me to make my life easier. I think that is going to be a huge gap, and I would be really happy if a lot of startups would jump in that field. I already see it happening, by the way, but I am pretty sure there's room for more. So that will be my my advice or my desire, maybe even, because I think this is a big pain.
Okay. So unfortunately, we're running out of time at this very interesting panel. So I'd like to invite you to some closing remarks, but if there aren't any, I give back to Felix with the insights we found.
Thank you so much, Ulrike, and welcome back to the next panel called Delivering a Seamless Customer Experience in Financial Services. Now, while omnichannel strategies have been discussed for more than a decade, delivering a seamless customer experience will be a requisite for success in 2021. Join us now to hear from industry experts, and please welcome the moderator of the panel, Managing Director and Publisher at Payments, Cards and Mobile, Alex Rolfe.
Okay, thanks, Felix. That's great. That's a really interesting presentation. Thanks very much for that. So my name's Alex Rolfe. I'm the Managing Director of Payments, Cards and Mobile. And it's a great honor to be here today on this panel, or to moderate this panel, the Customer Experience Panel, Delivering a Seamless CX in Financial Services. So firstly, I'd just like to introduce all the panelists. I have Fabiana Mingroni, who's the head of Consumer Business Germany for American Express. We have Julia Koch, Deputy WEU Leader, E2E Current Accounts and First Vice President at UniCredit. Thomas Keller, Business Development Manager, Content and Services at Samsung Pay. And Sam Edge, Head of FinTech EMEA for Amazon Web Services. So welcome to all of them. And we're going to jump straight into the customer experience panel. So Fabiana, why don't we start with you, please? Let's begin with talking about coronavirus, because I don't think we can really get past that. It's a good starting point. How do you see your customer needs having changed due to Corona, and what are the key elements that they're looking for now, please?
So no, thank you. I think there are two sides to this. Probably some of the expectations that our card members have today, that the customers have today, have just been expedited in a way by Corona. So they're just looking from us for faster, more seamless and secure way of paying. And what once came probably as a cumbersome process is now driven by new experiences that card members and customers are making outside, right, of the relationship that we have with us. So, for example, the very simple one-click checkout, voice shopping, self-checkouts, what have you, right? So what we've seen in particular, and that is indeed related to Corona, is the growth of contactless payments. So that was something that had quadrupled already from 2018 to 2019. And last year we saw another 40% increase in that. So for us, that means that over 60% of all of our transactions are made in a contactless way. So contactless obviously ranges from the very traditional NFC, right? We had where you do that with your physical card from our perspective. We've done that for years. We've done it at a higher limit than the benchmark. And that's benefiting, right, both the card member and the merchant in that respect. Mobile wallets like Apple Pay were the next thing. And I think looking into the future, I guess it's pointing towards fingerprint and face scan, something that our members will be looking for us to enable them to do, and also the hardware producers.
Thanks, Fabiana. I don't know if any of the other panelists, we've talked a little bit about contactless there. If anyone else has a comment to make, I mean, we can always come back to contactless later, but as it's been raised, anyone else like to bring up contactless as part of their user journey? No problem. So Julia, why don't we move on with you? Perhaps you could give us a brief overview of how UniCredit approaches their CX journey, please.
Yes, for sure. Thanks, Alex. Well, for us, there are three elements that are really important to understand our customers. First of all, we are thinking about our bank from a customer point of view. That means, especially in these extraordinary times, to understand how digital and self-directed all our journeys should be. For sure, when our customer requests and demanded also a virtual and a personal support. Based on these understanding, we permanently develop our customer journeys from a front-end to a back-end perspective. That means that it's not only the customer interface, and last but not least, more than the typical public website. For us, it's also important that the whole process behind to the back offices, to the operations are really seamless and hopefully fully digitalized. In a second perspective, we continuously measure the satisfaction of our customers to understand and to develop and evaluate the impulses for the further developments. And for sure, all these wishes and needs are really important for us to ensure a permanent increase of our customer satisfaction.
Okay, thank you, Julia. I think if I can stay with you just for a second, sure. You mentioned that journey, and I think you go a little stage deeper. How does that approach relate to the entire customer life cycle? You approach it slightly differently?
Well, we started a few years ago with a purely simple starting point to ensure a fully digitalization of our core processes. That means that we are looking, for example, for a fully digital account opening process in Western Europe. Now, a few years later, you can open a current account in less than 15 minutes in Western Europe. That means in Germany and Austria and Italy. This is last but not least the baseline for everything what we are doing around our customer. And in a typical account with dedicated services, with added values for our customers to increase the customer satisfaction and for sure the customer experience behind.
Okay, thanks, Julia. Thomas, let's come to you, please. Samsung Pay is going pretty well in Europe. I think it's live in 7 markets now, and Germany, your particular market of interest is I think it's live now, or if it's not live, it's coming live very soon. Perhaps you could just give us a flavor of how Samsung approaches its CX in market, please.
Yeah, thanks, Alex. So in general, it is a self-set goal that the customer experience is the same for everyone, and that Samsung's products are also made for everyone. When it comes to mobile phones, it is quite achievable, but when it comes to mobile payments, you have a very different flavor in the German market. So the banking structure is quite unique. It's very, very complex. So we decided in Samsung to go a different strategic part, and instead of allowing users, let's say, home banking cards, we decided with a partner, Solaris Bank, to become a card issuer. So we're facing totally new challenges in entering the financial services that go along, let's say, with what you said, a UX that is seamless and end-to-end achievable for every consumer in order to get a mobile wallet live. So the challenge we were facing is how can we build a onboarding process for a financial product with, let's say, all the regulatory requirements, KYC, that is also scalable to a Samsung device base of 15 million and more in the German market. So it was quite a challenge, but we achieved that and we are live. I'm very happy actually since 3 months, and onboarding Samsung Pay customers, providing Samsung Pay cards in Germany that are fully functional debit cards in the market, in the phone, on 15 million devices.
Well done, congratulations. I know that was quite a tough challenge. Let's put it that way. Okay, so Sam, I know that you obviously approach the customer experience from a slightly different perspective to the other 3 panelists. Let's kind of go back to this COVID conversation again. You know, from your perspective of supporting many of the other panelists' businesses, and obviously far broader, you know, are there any specific trends that you can see and talk about from the AWS side?
Yeah, so I think, you know, some of these have already been raised by the other panelists, but you know, my focus is financial services and fintechs. I think, you know, relevant to this conversation, one trend is the increased importance of having good digital customer engagement. Obviously, lockdowns have meant that everything has shifted to digital. If you look at financial services, you know, COVID, that's had a number of impacts. You know, branches have been shut. You know, everything's moved to online digital channels. Customers have become, you know, understandably anxious about their financial health, and they're awfully in need of greater support, you know, from their financial service providers. That applies also to business customers who are looking for different support. And then at the same time, you know, the ability for financial service institutions to respond through call centers, many of which are, you know, typically physical and have also been impacted by the lockdown, you know, has been impaired. You know, so this is you know, from our perspective, created an increased urgency to digitalize. I think a few of the other panelists have mentioned this already. A number of the customer engagement processes, you know, very, very rapidly to meet that changing customer requirements. Yeah, at AWS we help you know, FSIs and other customers with these challenges using some of our services. I just mentioned a couple of them. So Amazon Connect, which is our kind of call center in the cloud, Amazon Pinpoint, which is our multi-channel marketing communication service, and Amazon Lex, which is our conversational AI for chatbots. And you know, incidentally, I guess if you look at this from the fintech lens, you know, if we're looking at trends, this has actually created opportunities for some of our B2B fintech customers to kind of work with these financial institutions to help them to solve these challenges, you know, through partnerships, which, you know, many of which have been accelerated because of the lockdowns. But just coming back to digitalization, I do want to kind of cover that in a bit more detail. I think one of the trends that we've seen with some of our fintech customers is the use of artificial intelligence and machine learning to digitalize processes, because obviously fintechs often have smaller workforces. They have to be very efficient how they operate. I want to just use a customer story to illustrate this. And the customer I'm going to use is actually based in the US, a company called Kabbage. And for those of you who are not aware of Kabbage, Kabbage is one of the largest online lending platforms in the US. And amongst other things, they provide flexible lines of credit to small businesses. And in response to COVID, Kabbage became a member of the Paycheck Protection Program, the PPP program, which is a program in the US to support small businesses through lockdowns. Now, PPP quickly became the largest federal relief program in small business administration history in the US, so a massive amount of demand from customers, and Kabbage decided to use one of the AWS services, one of our AI services, Amazon Textract, which is our OCR, our optical character recognition service, to help to speed up the process at which they're able to review applications and approve them by extracting key values from forms. This reduced the approval times from days to just 4 hours. So as a result, Kabbage became the second largest PPP lender in the country, despite operating with a fraction of the workforce. So I think a really nice example of how AI and machine learning has been used by a fintech to better the customer experience in response to the COVID lockdown.
Sam, thank you. Okay, so you mentioned your partnerships there, and Fabiano, I come back to you on the partnership question. How is Amex, American Express, using partnerships to drive its CX? I know that I know it's not your area, but Kabbage is involved with American Express in the US. I don't know if you can add some flavor there, but I appreciate that you're always driving partnerships to try and be a better business.
Yeah, and thanks for your question. I was actually going to jump in because Kabbage is one of the later acquisitions that American Express did. I mean, we don't have these services yet in Europe, but I think it tells another story about how American Express these days is approaching things. And I think overall partnerships, in my view, are going to be crucial for us specifically. The customer is looking for more than just moving money from A to B, right? What is it that comes with this membership with American Express? What are the experiential benefits that come with that membership, and what are the things that we do for the communities and the businesses that we work with? So Sam, your example, we can't do it ourselves. Kabbage is brilliant at doing it. Do the two companies want to work together? And if they do, that is also one way of doing it. So obviously some things we can do ourselves, right? Julia, you were also talking about digital application journey. That is also something that American Express, we do for our card members. Clearly, we have looked into and offered extended payment periods during the COVID hit to address cash flow issues that card members might have faced as a consequence of that. And in other instances, like Sam pointed out, we actively look for partners who already have a solution for what we want to offer. So in Europe, for example, we work with the Swedish company Luti. They provide a mobile platform for the experiences that we bring, but didn't have a platform to put them on, which was user-friendly. So on this platform, we put the content. Luti provides the platform, and our card members find all the events, the benefits that they can sign up to 24/7 on this platform. Thomas, you were talking also about Solaris Bank. We're very proud to partner with Solaris Bank as well. This is a Germany-specific example, but we noticed that our card members are looking for the option to do installments sometimes, and we can't offer installments in Germany. So we looked for a partner who can do this with us, and so now we are partnering with Solaris Bank to offer the installments option to our card members. And I think in general, whether that's in payments or other industries, to meet the rising customer expectation and also what they're experiencing in some of the relationships that they enter, business relationships that they enter, it will be crucial to be on the move with new partnerships.
Sure, thanks. Thomas, I don't know if we discussed earlier on some partnerships. I don't know if you have anything that you want to comment on with the partnership side.
Yeah, I cannot agree more on Fabiana's statement. We come to a point where a customer expects more from the products, and if you want to add more flavor to your product, then yeah, you come to a point where you cannot do everything by yourself. And from our perspective, there was adding financial services to a mobile payment solution. So if you want to open bank accounts, if you want to issue cards, for example, you need a bank, and we found with Solaris Bank, very flexible partner that also offers lending and loans to Samsung Pay customers. So if you pay, in the past you just paid and then it's done. And the new product actually allows you to split this whole payment into an installment and decide for yourself when you want to settle the amount. And Solaris Bank is the partner of choice also for Samsung, similar to American Express, to offer such a feature as a product improvement. So yeah, I would fully agree on the statement. Partnerships are crucial to if it goes to further development and to provide a cutting-edge user experience.
Thomas, Julia, do you have anything from the UniCredit side that you'd like to add with regards to partnerships?
Yes, for sure. On the one hand, I cannot more agree to Fabiana and Thomas that partnerships and close cooperation with other fintechs or payment providers or something like this are really important to create additional value for our customers. On another hand, we saw in the last few months really a massive increase of a demand for sustainable finance and for sustainable finance services. That means we are looking for how we can handle it in our product offer, in our customer journeys for our customers. And so we decided, for example, for Germany, that we implemented in the last few months an innovative bio-based debit card in close cooperation with Visa. And so a similar approach we are following in Italy and Austria for sure. And there also, in addition to that, we developed and implemented a dedicated green account that is really focused on the zero to emissions to increase the sustainable value for our customers. And based on these innovative offers and services, we would like to increase the customer experience step by step.
Mm-hmm. Mm-hmm. Very interesting. Thank you, Julia. Okay, so I think now we move to regulation, and this is the point where a few years ago most people would have taken a deep breath and anyone listening would have turned off. But actually, I think that the regulatory environment at the moment, whilst it is moving around, seems to be more supportive of business at the moment. Fabiana, your views on the way that regulation is helping the customer, shall we say?
Ooh, the way you're asking the question, I'm not so sure. So I think, look, regulation is here to stay, right? Regulation is increasing, and it's a major topic for all of us. I think probably the way us businesses have adapted to dealing with it is what can bring the improvement in the customer experience, right? I mean, I never thought I would say this, but you know, when regulation comes in, the usual reaction is, oh my God, it's disrupting all my processes, and how do I make this fit with my business model, and how is this not going to disrupt what customers want from us? But there's also a positive side to it. So, I mean, for example, you know, an easy example, strong customer authentication just recently came into effect. And that could mean major disruption for the customers, but there are ways of doing it. So for the customer, it's important to know you adhere, obviously, and for us as a business, it's important to adhere because they want to do safe payments, but we can help them, right? So we've implemented something that is called Express List. You can choose your favorite online shops there, and by registering there and going through the notions of identifying yourself, then you won't have to have the additional code like every time you shop in this in this particular online store that you've added to your express list, for example. I think that also harmonizing European markets comes with huge opportunities. A few years ago, I'm not so sure I would have given this answer, but I've come around. Understanding that, for example, products and services we used to develop in every single market, we don't have to do that anymore, right? This can happen across markets, which is brilliant because it gives access for customers to the same product potentially across the EU. Open access, enormous opportunity for customer choice, and it could put, for example, payment providers with strong value propositions in a unique position to offer these services to customers in a much more seamless way without having to ask for the same information over and over again. So I think it's probably both ways. I do think that regulators, of course, I mean, their intention is not to destroy business, but also businesses we've learned to deal with it from a different angle.
Thank you, Fabiana. Any of the other panel? I appreciate that it's not the sexiest thing to talk about regulation, but I do believe that you know, now that the dust has settled on some of the latest stuff, you can clearly see how it's being implemented to support the end client, and that the businesses have to react to that. So I guess to Thomas, Julia, Sam, any of you want to make any further comments on how regulation has potentially helped you define part of your CX, I guess?
I could add something from a UniCredit perspective. If I'm looking to my dedicated Western Europe market, these regulations help us in close combination with the customer behavior that is more than less similar in all the 3 countries. If we are looking to the mass market products, then we can really leverage among all the developments cross-border. And this is last but not least one of our elements, how we can increase the synergies between the countries step by step.
Yeah, okay, thank you.
I would have jump in and mention open banking because it hasn't been mentioned, and I guess, you know, there's a benefit for the end customer through open banking, effectively being able to, you know, share data in a kind of regulated and compliant way with third parties, many of whom are innovating on the customer journey. And just to kind of, you know, mention a couple of AWS customers that are supporting in the open banking space, you know, Tink is a fintech based in Europe, you know, that is connecting banks, you know, and helping to aggregate data so these third-party providers can innovate on behalf of customers. So that, you know, they're doing some really powerful things in this space. And then a UK-based personal finance platform, Clio, which is effectively an AI-driven personal finance management chatbot, almost a personal assistant. You know, they use open banking to capture the data of their end customers, so that they can provide advice around spending habits, and they do that again, you know, by training models on AWS through our Amazon SageMaker product. So, you know, I think open banking has had some strong impacts on behalf of the end customer. An example of good regulation there for customer experience.
Yeah, thanks, Sam. Thanks for jumping in on that. Actually, I'm going to stick with you now that you mentioned data. You know, you work with a lot of financial institutions and the fintechs you mentioned. You know, is there anything? You know, I think all of us understand data. Data's the new gold. We've heard this a number of times. Is there anything particularly interesting that you're seeing your clients using data to help affect or change the way that they implement their CX strategy? Is there any insights on that you could give?
Yeah, I just kind of take this moment maybe just to kind of explain a little bit how AWS thinks about data and the importance of data in good customer experience. When we think about providing good customer experience on behalf of our customers, we look at it in kind of 3 layers of the stack, and data forms the bottom layer, and it forms the bottom layer because, you know, good customer data is really the foundation of good customer experience. So when we talk about kind of good customer data, we mean having a single 360-degree view of the customer, which enables you to then better understand them, kind of draw insights into how they're engaging with your product or service, and then ultimately create an immersive and personalized experience. You know, on the flip side, I guess, looking at financial services, you know, data silos, which has kind of been fairly commonplace in financial services due to legacy technology, makes it very difficult to kind of create that real-time and truly personalized experience, you know, often requiring customers to fill in the same details for different products at the same institution, which is obviously frustrating, you know, tiring, and kind of gives the impression that the financial service provider doesn't really know them. So I think, you know, having good data is important, and when you have good data, you're able then to activate the customer, which is the second layer of our hierarchy, by kind of translating that data to operationalize it into effective customer experiences through through omni-channel channels. You know, and I think the third layer, which I think is important to mention as well, because it relates very closely to data, is the ability to then personalize that data and that experience through the use of, you know, technologies such as AI and machine learning. And I think, you know, coming back to fintechs, you know, fintechs have been very effective, I guess, at you know, using data and kind of differentiating themselves from incumbents, you know, through good customer experience. So if I look at banking, you know, challenger banks have really redefined the banking experience. You know, they've done this by creating real-time and personalized features that customers want and expect and increasingly require. And we've got a number of customers that build an AWS who are providing these experiences, such as, you know, Monzo Bank, that has kind of built kind of from the ground up through their own core banking platform built on AWS, N26, Starling Bank, and a number of other ones. So yeah, I think, you know, data, you know, increasingly important. Like I said, really the foundation of good customer experience.
Thanks, Sam. And across to any of the other panelists who might like to make a comment on how they use data. Silence. Okay. No problem. So Thomas, let's come back to your experience as a business in launching in Germany. Obviously, I think you touched on it being quite a fragmented market in terms of the banks. You know, aside from that, or perhaps you could tell us a bit more about the challenge that you experienced there, please.
Sure, of course. So if you want to launch a wallet in a country, then of course you check out the banking structure as like one of your first tasks, because of course every bank has the right to decide if they want their cards in a wallet, yes or no. So that basically says if you want to reach 100% of your customers as Samsung with a wallet, then you obviously need to talk and get an approval from 100% of the banks. If you look, for example, at Sweden, they have like a not very fragmented banking structure that's like something around 10 very big banks. And if everybody is joining and working together, then you can offer this experience of mobile payments to all of your clients. So that is manageable. In the German market, we have, so BaFin registers, I think, over 1,200 banks. Of course, they are structured internally, but still it's a huge market. And on the other hand, Germany was very long time a very cash dominant market, so that people didn't even have the high traction. So we waited a bit of time and watched the market, but there is no easy way to offer a cutting edge product if you have to, let's say, do an acquisition cycle with more than, let's say, 100 banks. It is a very hard game to play. So coming from that difficulty, we thought, how could we actually offer mobile payments to all of our device holders with a Samsung device and bypass this this challenge that might actually keep us busy for a while. And the decision we made was actually that it is much easier to go into a collaboration with a banking partner that offers banking as a service. I mentioned Solaris Bank earlier, and issue these cards. So the problem you must solve at that point is not do acquisition cycles. The problem you must solve is how can we have a scalable, easy onboarding process for a mobile payment app. So this onboarding process then is, of course, it's a customer experience challenge, and it's a scalability challenge. Usually in Germany, you have a video ident, which is mandatory for KYC. So if you would let's assume you run on 15 million devices a video ident in the first month. I don't know any service provider who can actually handle the load. So we had to deal with other challenges because we didn't want to keep people waiting in the video ident lines. So fortunately, we could solve that problem with a new process. It's called Bank Ident, and Solaris Bank has offered that. It's basically an identification process coming from your bank account. That is quite new to the German market. And we utilize this to have an onboarding. So once you're in Germany, you onboard Samsung Pay on your Samsung device. You have the experience that you have a full-fledged bank account with a framework agreement for a loan and a virtual card in lower than 5 minutes. So that's the I think this is the real achievement we did in this fintech space, because Samsung as a big corporate has a lot of resources, but you need actually specialized knowledge, and you need to be very with an ear on the market, with a strong partner to be able to launch such a product. So it is quite new to Samsung because it's the first time, but we are actually very happy of the outcome, because we could solve that problem and launch Samsung Pay here, although we had quite big hurdles to take.
Sure. Okay, thanks, Thomas, very much. Okay, so we're reaching the end of our panel, I'm afraid. I don't know if anyone has any final comments that they want to make about the customer experience. Okay, well, in which case, it's for me to say thank you very much to Fabiana, to Julia, to Thomas, to Sam, and it's back to the studio. Thank you very much, everyone.
So before we get to the next part, please make sure you're still awake, you're still there, wake yourself up, stand up, loosen yourself, maybe type in a little hi, you're still there, into the chat. Let us know you're awake, because we have something very special prepared for you at the end of today. But now let's deep dive into another report video, and let's dive into the future of banking, including the next big trends and challenges.
Banking has played a key role in our societies since the 15th century. Back then, banks were merely seen as a safe place that customers trusted to store their money. With time, customers' expectations started to grow, and banks adapted to these expectations. Back in the 1950s, banks introduced check processing and account numbers. Then came self-servicing banking and ATMs. But these changes were nothing compared to what came next. During the last decade, users stopped considering banks as a physical place and started seeing them as a platform that you can access from anywhere at any time. Technology has now become the overarching mechanism for banking services delivery. We're seeking low friction and immediacy. We want immediate responses and stronger commerce connections that can scale up more rapidly. Within this framework, we can't expect banking and financial services to stay the same as they have been. But the future of banking is much more than just adding a layer of technology to old processes. We have asked 3 future-thinking startups what is, for them, the future of banking.
So when you say the words future of banking, what coming to my mind is that in the new world, fintechs are the marketing side or the marketing tools, and banks are the custodians for this market.
For me, when I hear the words future of banking, the first word that I think of is accessibility for consumers, things being faster and easier to use.
I think seamless.
For me comes adaptability.
When talking about the future of banking, the most repeated idea is that of a swift and convenient banking experience. About 2.5 to 3 billion people will come into the financial services space between 2010 and 2030. 95% of those will have never visited a bank branch. They'll get access to a basic value store on a mobile phone. Fintech market participants will contribute to this transition in different ways.
Modular Bank is next generation banking platform. It's cloud-based, API first, it's modular. And it means that whoever wants to start banking services, financial service to their customers, we can embed our capabilities to their ecosystem.
So that really the core idea is to make banking seamless.
So we're building the first marketplace for financial institutions to trade in cross-border transactions through empowering banks to become the ultimate beneficiaries of the fintech revolution. The company aims to redefine banking relationships within financial institutions and other fintech partners and allow all parties to protect and scale their international business.
Credit Kudos helps banks and lenders make faster and better credit decisions. Credit Kudos works with over 75 financial institutions to interpret financial behavior of borrowers using digital financial account information. Credit Kudos is authorized as a credit reference agency in the UK and as a PSD2 AISP provider across the EU. Credit Kudos helps lenders by accessing digital bank account information, the same data you'd find on your bank statement every month, to help borrowers prove their creditworthiness. This in turn helps lenders, banks, mortgage providers, credit card providers, car finance, retail finance, and more.
Even if the financial services industry has always been assisted by the use of technology, the fintech world is perceived by the wider public as the true innovative essence in the financial landscape. In the sector, fintechs enjoy three core advantages that incumbents do not. The first is implied in their technological endowment that allows them to run their operations virtually, like in the case of neobanks, while traditional banking is usually characterized by a heavy reliance on fixed assets. The second perk concerns the customer base. After the 2008 financial crisis, banking customers have started to become more and more demanding when it comes to the service quality and awareness they are expected to receive from a financial institution. Fintech now empowers consumers to be more mindful of their banking experience. The third advantage is related to the regulatory pressure that big banks have to comply with. Startups that are not banks as such benefit from a lower degree of oversight from authorities and can step in to offer appealing alternatives.
For financial institutions to succeed in today's world, it's important that they understand that they need to adapt to digital journeys and they need to make it faster and easier for consumers to access products. They will be challenged on all sides from digital providers that are offering younger people services that are more convenient, easier to use, faster, and that provide new and interesting financial products.
They need to change the way they see fintechs as threat or risk and start treating them as the next distribution arm of the bank. They need to stop looking on innovation as something they need to do for their clients and start treating it as must-have in order to survive.
Can financial institutions see fintech startups as an opportunity and not as a threat?
We actually do it all the time. Just this year, I have several topics for running pilots, like face recognition, anti-fraud and security, advanced digital product analytics, product growth hacking, and many more. And for every area, I was choosing from long list of 10 startups, and I cut them to 3 startups. And the startups that I work with actually get the insights of customer behavior and the new scenarios of their work and build a better technology.
COVID-19 is still impacting many fintech companies for good and for bad. Now, amid a global pandemic, trust has been moved at the core of the collaboration between banks and fintechs. Until recently, banks wanted total ownership of everything they worked with. Little by little, they are starting to realize that this is not always the best strategy. Now, banking institutions are starting to use solutions that support their business without owning them in the first place. Let's see an example of how startups are helping financial institutions deal with the pandemic.
So coronavirus has affected our business and lenders everywhere by making it more difficult for lenders to assess credit risk and understand the financial position of the individuals that they're lending to. We've seen in the UK, there's been a lot of turbulence in individuals' incomes. And we've even found that 3 in 10 credit users here in the UK have had to increase their borrowing due to the financial disruption of coronavirus. And for lenders, it puts them in a very difficult position to understand who's actually creditworthy and who can afford to pay back their loans. And Credit Kudos has really stepped up, and our technology has been instrumental in helping lenders use new data to understand who's still employed post-coronavirus and who can afford to pay back a loan that they take out.
And I think with the pandemic, our strategy holds perhaps even stronger, or it holds true and is perhaps even stronger. So lots of focus has been paid to the easy distribution models of in-demand services, like mentioned, the e-commerce financing products. Additional example could be a SME lending products for small businesses, where they could convert their outstanding balance of the cards as an installment loan to balance out the cash flow over the months.
From the digital technology point of view, it allowed us to make a huge jump ahead. And the situation forced us to focus on increasing efficiency of our digital channels and delivery. Right? You want it or not, that's it. You have to do it. Clients have less and less need to shop in the offices for daily banking needs, and they can make more available offline. And another very interesting jump that is not really visible to consumers, but actually it gave us the boost in speed of development. For example, I can now hire people in remote small cities I could never hire before. And it allowed me to build my teams way faster.
When talking about innovation, many questions arise. Where is finance going? And what role does innovation play in the fintech landscape of the future? If there's something that startups are good at, it's identifying the latest trends in the market, and that's why we have decided to ask them. Which will be the next hot topics and challenges in the financial sector?
We have to find the best-in-class user experience to resolve many problems that the market got before. We are living the automation of so many services that we have been using for the last 5 years with back offices, and all these kind of things are going to be automated. Of course, you have many examples on the market, like TransferWise, many others, like the switching, for example, switching account. I think that this is actual, but in the next 2-3 years, we are going to have a completely different market and bigger garden than we got before.
There is a very big pressure today on banks and financial institutions to create financial inclusion instead of financial exclusion. I think that financial inclusion is a topic that has to come to the forefront of all this industry. Till this day, banks are creating financial exclusion, which is damaging not just their revenues and their ability to stay relevant, but also, and much more importantly, create inequality and widening the gaps between people, communities, and countries.
Some of those fintechs who have been largely successful, it will be super interesting to see whether they are able to reinvent themselves, because there is a new wave of fintechs being launched basically on a daily basis. And some of the names we know out there who are super hot names, but if you look fast forward next 5, 6, 7 years, are they still out there on the market? Have they reinvented their existence, reinvented their positioning, reinvented their value props and so forth?
And that is one very important point more. I think it's related to the regulations. We are getting more and more regulations every day, and this regulatory space is getting really complex. And how fintechs and also banks can really innovate and live in this regulatory space we are getting. And I think there has to become solutions which are really solving that. It means RegTech and FinTech has to really play together.
The developments we see on the horizon that affects credit kudos is future opportunities is the generational shift that we see with the younger generation expecting products and services on their phones in a digital format and faster and easier than ever before. It's going to be a challenge for financial institutions to adapt their existing products and services and legacy systems to these new realities, but it's going to be necessary in order to compete for these younger consumers who are becoming an increasing portion of borrowers and users of financial products in the future.
Invisible, connected, insights-driven, purposeful. These are some of the adjectives that describe the bank of tomorrow. Now more than ever, banks can't do it alone. Fintechs have in their hands the possibility to shape the future of banking by taking significant steps towards its realization.
Our next step towards the future of banking and how we will impact that is that we're enabling fintechs to connect two banks without the risk of doing business together?
I think Modular Bank has a great role to play how to bridge the future of banking and traditional banking. The exchange of value and transfer of ownership aspects will never disappear from the society. There is someone owning a piece of real estate, the ownership will change. It really doesn't matter what kind of currencies that you're using. The core infrastructure for that is always needed. And that's why I think that Modular Bank is really the kind of bridge between the future of banking and also with the, let's say, more traditional aspects of banking.
We at Credit Kudos have found that PSD2 transaction data is incredibly valuable for understanding consumers' default rates and who's likely to default on a loan or not, or to pay back a loan. And what we found is that the transaction data can tell banks and financial institutions a lot about their customers. And using this data is imperative to offering customers lower priced financial products and better priced financial products that are more custom to the individual needs of younger consumers as well.
Now, the banking landscape is changing rapidly, with new market entrants putting pressure on financial institutions every day. It has become clear that the industry will change unrecognizably. Now, in the panel, The Future of Banking Tomorrow Will Be Different, we will discuss on how to exploit upcoming opportunities and how to master challenges linked to the arising industry shift. Please welcome the moderator of the panel, Fintech correspondent at Sifted, Isabel Woodford. Isabel, the virtual stage is all yours.
Thank you, Felix, and thank you everyone for joining us for the last session of the day. I am Isabel from Sifted. We are an FT-backed publication and I cover FinTech. It's great to have you here with us and of course our four panelists. I'll let them very quickly introduce themselves so that you know who's joining us today. So Alex, if you could kick us off and introduce yourself and quickly say who you are and what you do.
Thank you, Isabel. Very excited to be here. My name is Alex. I'm Chief Growth Officer at N26, responsible for international expansion and marketing here. Have been with the company from almost day one, so for 6.5 years now, and excited to be here today. Thank you.
Brilliant, thank you. And Jörg?
Hello, everybody. I'm Jörg, Chief Product Officer at Solaris Bank. Similar as Alex, been with the company since pretty much day one, which for us is more 4.5 years than 6.5 years. Looking forward to our discussion.
Brilliant. And Canel from Paris.
Yes, so I'm the founder and the CMO of Vibe, being a neobank for teenagers.
Brilliant. And last but not least, Jim.
Yeah, hi everybody, and thanks, Isabel. Jim Wadsworth, I'm at MasterCard, where I lead what we're doing on open banking.
Fantastic. So it's great, as you can see, we're spread across Europe, and to hopefully have a cross-continental perspective today to talk about the future of banking. Tomorrow will be different. So I guess to kick off, I want to talk about what in retail banking still needs to be different if we're going to talk about this future. Clearly, we've come a long way in terms of banks dying in the north, the global north, and a much changed UX. But what's the next frontier? What is possible now? Alex, if I could come to you first on this, please.
Sure, absolutely. So in general, I think last year, by now we can say last year to 2020 was really a catalyst for change and acceleration, also what the future of banking, what certain trends have been already indicating in the past have really been, I think, accelerated by what we've observed, driven by the pandemic, right? So in general, I tend to think about banking having two purposes. One is keeping customers' money safe, and two, enabling customers to live their lives and manage their finances to do that. I think we've seen through the pandemic really a focus on the second point. There has been very little or much less hesitancy with regard to trusting banks and also digital players in the banking space when it comes to keeping money safe. We've seen an increase of deposits across different digital platforms, and really the second aspect of how does the bank enable the customer's lifestyle that was really by external circumstances changed significantly last year. How is that enabled, right? And I think that is just an acceleration of this trend where you know, I strongly believe the future of banking is more about giving customers the ability to live their lives their way, to give them flexibility in their financial tools, to have confidence in understanding what their financial situation is and what their perspective is, what their opportunities are. And so I really think things like opening a bank account completely from home on your smartphone, things like online, you know, safe e-commerce transactions, things like mobile payments have just massively accelerated towards this very digital future that I think has been in the makes and in the coming for the last years, also with the rise of fintech, but really has been exacerbated and accelerated through the pandemic last year.
So maybe what you think will be different is not so much the features, but rather the level of adoption of what we have already seen. Sorry, Alex.
Yeah, no, I just wanted to clarify. I think the difference in how features and products are offered by digital players and what a digital experience of opening an account, getting a loan, paying for something looks like and feels like, this has also really changed, because that's the big difference between, you know, digital players and more traditional players. And so the shift towards really focusing on the consumer's needs, how they would like to receive a digital experience in terms of banking, that's sort of, I think, where the main change is, that has slowly been coming and now just really also extended to demographics that may have not been as open as before, but that were forced also to maybe adopt these technologies.
Yeah, I guess coming off of that, again, it sounds like, you know, we have already seen so much change by Alex's words that maybe the next 5 years will be less different. If you could compare the last 5 years to the next 5 years, which do you think will be most transformative in terms of this different world of banking?
It's always difficult to compare like what happened next 5 to compare to the last 5 years. I mean, if we look back, I would look back even more. Let's look back 10 years. 10 years back, every bank was pretty much similar and they all offered the same products, and the only differentiation was somewhere in the brand. So looking forward 10 years, I'm very sure that banking will be way more specialized. So every use case will have its own bank. So customers will not look for the brand or for the physical proximity of a bank. They will look for that bank which solves their problem the best, which is, by the way, completely what we are seeing using those type of devices, right? 10 years back, there was a new iPhone out and there was one mail app, and everybody was fine with that one mail app. If you look into the app stores today, you find dozens of different mail apps, because every customer uses that one which serves his need the best. Mm-hmm. Same will happen with banking, very much more specific bankings with more niche target groups catering for their use cases as good as possible. And in the background, there will be more providers which serve commodity baseline functions of banking into those different, potentially also smaller niche providers, which differentiate out towards customer groups. That's what we learned. We as people, we as consumers learned over the last 10 years with using our smartphones. We learned that there is one app for every problem. And in the future, we will have one bank for every problem.
Yeah, so we already have, by the latest data, nearly 300 neobanks, and then you add on top of that all the existing incumbent neobanks. So we're all the incumbent banks. So we're going to have, by that prediction, many more banks. Speaking of niche banking, I want to come to Gunnar, who is building a neobank just for teenagers. Gunnar, what sort of differences do you think still need to be made in terms of banking, and what are you trying to achieve with that?
So I think that today most of teenagers are coming to us because they don't have any services responding to their needs in terms mostly of marketing, because you've always had like services for teenagers, but what Gen Z wants is an engagement to identify with, and a purpose to be in the neobank. So for instance, we say that we're creating a neobank for our generation, and this is why they all coming in Vibe. Basically, I think that more than the service, because today you have multiple neobanks offering same services, but the difference remains, I think, in the identity of the brand and in the marketing you're communicating. because so what's the difference between, so basically the services are the same as other services for teenagers, but they're more accessible. Like for instance, so we're very transparent. The platforms is very easy. I think the main problem is also that platforms are very hard to understand. It's not clear, and especially for young people or even older generation that they don't have any, they're not familiar with online platforms. The rapidity, I think that our generation is used to instantness. They all want everything instantly. So for transfers, for money, for any kind of features. And I think that they need something, that a service that understands that their buying methods. So they really expect to handle their banking account like they would handle their social network accounts.
Yeah. So then we'll see again. So just to summarize that, a change in speed and a change in branding. Jim, I want to come to you. What else is missing? I mean, banking is still not perfect. So what do we want to be different? I mean, something that pops to mind is transparency. Speaking to Kunal's point about, young people, data shows that they want transparency. They want to know where their banks are investing. Aside from that, what else needs to be different? What are the problems that still need to be fixed here?
I agree with a lot of with a lot of what's already been said. I think I'd also say it's just an incredibly exciting time and space to be in. I think one area that continues to have both a lot of opportunity and a need for more to be done. Not just in the consumer side, but in the SME sector as well, particularly for small business. Clearly, small businesses have suffered through COVID, if I can mention that word for one and only time today. But they're a huge part of the economy in most markets. And, traditional banks, have often probably not served their needs brilliantly well. Some have for sure, but often you end up being provided with just a kind of slightly customized consumer service. And I think there's a big opportunity there. And we talking to the many tens and dozens of neobanks that are around, there are some who are specializing in serving the needs of that market, and that's great to see. And I think we will see more of that. I mean, we conducted some research fairly recently among small businesses, and one of the things that came out of that, and it's no surprise, over half of small businesses struggle to access the finance that they need to really drive their growth. I think that's only going to got worse over the last year or so with everything that's been going on globally. But we see, lots of opportunity there, and we see some really great innovation focusing on that segment. And I think kind of building on Kunal's point, that specialist approach, focusing really hard on the particular needs of particular segments. We've all talked about it for many years, but people are now starting to do it. And, we clearly see open banking from our perspective as being kind of part of the catalyst for that because of democratization of access to data.
Yeah, I want to talk a little bit then about sort of the reality and the challenge that comes with delivering this clear demand for this in terms of business models. So N26, for example, has had quite a far-reaching sort of mass adoption approach. Alex, if I come to you, how do you think the business model of a niche, more specialist sort of banking compares to your kind of mass market banking? Can we have business models that work if they are so niche? What do you think about that, Alex?
No, absolutely. I think also it very much ties to my perspective on the future of banking, also contrasting the role of the incumbents and the role of the, let's say, more neobanks and digital players. Is what you cannot forget is the incumbents really have over the years obviously built business models on the balance sheet. And so they have huge balance sheets, right? So in terms of specialization, I tend to think that traditional banks have two paths to go. One is really staying relevant on a consumer-facing side, really needing to innovate on and adjust sort of in terms of mobile proposition and availability and just usability kind of towards customers. Or if they sort of don't choose to disrupt themselves in that regard, then become more of a bank that actually acts to end consumers through maybe other players that are then also via open banking connected there, and really sort of get their USP through the size of the balance sheet, for example, specializing in offering the best savings rates or offering the best interest rates for specific credits, loans, mortgages. And so I do believe through open banking and this general development that there becomes more room and space also for different players to take on different niches and have different business models. Maybe also, like Jörg mentioned, these different segments that have different preferences, maybe those different preferences also build on different business models. So as we see this all unfold, I actually do see more niche business models being sustainable, because they can be, with the companies that have the business model that's more end consumer facing, they can contribute their part and also get a bigger reach, even if they're not specialized in, B2C tech and apps, for example.
Yeah, there have definitely been questions here about the neobank and the future of banking, if you like, the viability and sustainability of that business. Gunnar, could you give us a little bit of insight into how you expect to make money? Will it just be interchange, or will you be charging from the outset?
Yeah, so today we have a freemium plan because we truly think that education for financial services shouldn't be charged for parents or teenagers, mostly for teenagers, because they're all used to free access to all kinds of apps. And so today we're looking for a business plan that will be effective around next year. So there will be two kinds of ways for earning money. The first one will be with premium offers, with, for instance, more cashback on specific brands that are highly demanded in the market for Gen Z. And on the other hand, it will be with limited card editions with high figures for Gen Z. For instance, high influencers that are international or nationally well-known. Because today when you're talking to Gen Z, you're talking with icons that are mostly influencers. So for them, influencers that are nationally known and that have around 6 million followers are more credible than any other media. So by using their images and having them on cards, and that's a way for teenagers to support them and to be identified with them. It's something that they can pay for. You can see that with TikTok money, with Twitch, they all support their influencers with money.
So the customer will the customer will pay you though?
Yeah.
Yes.
Exactly. Yeah. But to be related to these influencers and icons. Yeah.
Maybe as a very concrete observation, right? Because I'm seeing so many different neobanking models running on our platform in the end. I think as a general rule, you can say something like, the more specific a banking offering becomes, the more are people willing to pay for this offering, because it suits their needs better, right? While the general, very broad model is more like cost-free, low price, or you go up to the whatever platinum card, metal card, N26, then you buy yourself into the higher plan. But the other option is be in a very specific model where the SME, the corporate, the consumer, the whatever, the young people get served the best. They're willing to pay for that.
Yeah, just to your point about influencers, we did a piece on how fintechs now all across Instagram and TikTok paying influencers to promote them. So definitely this change, you can even see it in the way that marketing budgets are being distributed, which I just think is fascinating. Jörg, just to come back to you there. So you said about specialization, and many of them run on your platform, obviously. If you think about how smaller neobanks are having to compete with the incumbents, and we think about this new world of perhaps more specialized banking, what do you see for the fate of incumbents? I mean, you're obviously servicing neobanks for relatively cheaply, and that's why they come to you rather than go for their own license. But what about the licensed big banks who perhaps can't pivot as quickly? Where do we see their future, or where do you see their future?
Yeah, it's definitely going to be more difficult for the incumbents. So what we are seeing is some incumbents even try to work with somebody like us to get quicker.
Oh, really?
But building the speedboat beside their old legacy tech by working with somebody who can accelerate them. For sure, we see some of them also trying to go into an API world, starting with open banking, extensions, standard open banking like PSD2, extensions of open banking, the first priced services beyond PSD2, And then even more, why this is a slow move, because if you're a standard universal bank on a legacy system infrastructure, that's not going to be very easy for you. And the business model, like everything based on APIs, is like, I mean, building the APIs is one thing, right? But change all your internal processes, change how your risk people, how your compliance people, etc., see the processes. That is maybe even a bigger task for those old world institutions to change. And that's why, yeah, it will become difficult for many of them to survive the next 10 or 20 years.
To survive. So perhaps the future of banking is fewer incumbents. Jim, I want to come to you. I mean, MasterCard generally is seen as an incumbent, an older player. So perhaps you want to speak for that older generation of financial services companies and provide some sort of defense that you won't become completely irrelevant and the future of banking does hold a place for you.
Well, thank you for that leading question. I mean, firstly, the history of MasterCard, I think, is one of continuous evolution as the market that we serve evolves. I mean, obviously, the core of the business remains, the core card traffic in terms of credit, debit, prepaid, and so on. But if you look at how MasterCard has evolved over time, we've complemented that with all sorts of services. For example, thinking about fraud prevention services or analytics services, helping our customers and their customers to improve their businesses. I joined the MasterCard organization through the Wuermeling acquisition, which was part of MasterCard branching out into our multi-rail approach today, where we're providing real-time account-to-account payments to all sorts of providers and players around the world. And now, obviously, with the stuff that I'm doing on open banking, I think you just see, any business operating in the sort of dynamic market that we exist in, who wants to stay relevant, clearly has to change. If you did nothing, then that would be a problem. But I don't think I see too many, if any, incumbent financial services organizations just kind of sitting and waiting to be made irrelevant. You see some great innovation happening from the larger players. They're seeking to learn from the neobanks and the fintechs. We ourselves are, very actively supporting the fintech world with programs like StartPath, helping our customers to see the best of breed fintech capability out there that they can potentially incorporate into their businesses. Yeah, absolutely. If you sat around and did nothing and watched your most valuable business be taken by some competitor, be they another incumbent or a neobank, of course you've got a problem. But I don't see too many players doing that, and I think we shouldn't underestimate the momentum and the value and the trust in incumbent bank brands. Absolutely, if there's complacency, they will struggle, but they can absolutely learn from and partner with the fintech community, and we see that happening all around the world all of the time.
Is there a view within MasterCard that open banking could disrupt MasterCard? I know that you're obviously working on that, but as a general thesis, is that a widely accepted threat?
Well, I think again, if you look at what has MasterCard done, what is MasterCard doing, there's a reason why MasterCard acquired Wuermeling, for example. We see the importance and the opportunity associated with account-to-account payments as a complement to the core card business. Account-to-account is relevant for other forms of transaction. Of course, at the margin, there's intersection. And frankly, if our customers want to transact with, method X, not method Y, it's for us to make sure we are relevant and adding as much value to those transaction types as we possibly can. And the same applies for open banking. I mean, open banking is mostly about data, of course, but it's also about payment initiation. And we have, live services, for example, working with Tesco Bank in the UK, helping Tesco Bank customers to repay their credit card every month using open banking and using real-time account-to-account. At the same time, we think probably the biggest single use case for open banking, the most valuable use case worldwide for open banking, is all about helping with the lending process. I touched earlier on small businesses struggling to get access to finance. Again, absolutely, there are many, many consumers or small businesses who perhaps today find it hard to get access to credit when they're actually perfectly creditworthy. There's a reason why we spent just under $1 billion recently on acquiring Finicity in the US. They are one of the major players in open banking in North America, but one of the things they are fabulous at is taking open banking data, analyzing it, and helping lenders to make decisions on whether to make an advance or not. And that we think is a hugely important opportunity that open banking unlocks for all market participants and, of course, our collective customers, and a big part of helping drive financial inclusion.
You are taking that seriously. Speaking of threats, Alex, I want to come to you on this idea, which is generally talked about as embedded finance. I know Solaris Bank also have spoken a lot about this in the past, and sort of the direction that banking is going. If that is true, and when we talk about embedded finance, we talk about big tech embedding lending. I would maybe make a loan through Amazon or Google or whatever it might be. So N26 obviously sits in that respect in an older version of finance and fintech. So how seriously do you take this thesis of embedded finance, and how can you play in a world if we accept that the future might be one of embedded finance?
No, I think in general, the question, or basically taking a step back, the differentiation you're referring to with N26 is that we operate on our own license and our own platform, right? And I think when I think back on 2015, 2016, when we got our own license and when we sort of moved to our own platform, it really was it's a non-negotiable to our business model. It is really thinking about the customer, thinking about this digital user experience on the smartphone to do your day-to-day banking, and then working back from there. And there are always certain limitations, or there have been for and probably still are until today, if you do not have control of the systems in the background and really kind of the core banking system, the infrastructure. So for us really to move to the latest technologies in the entire value chain just really meant that we were able to move at our own speed and with less dependencies, while also bringing the costs down significantly, which you can then also pass on to the consumer and ultimately sort of benefit the customer with better experience at a better price, which I think is something we've seen across different industries, right? Like when you think about Uber, Airbnb, Spotify, there's always this analogy to, okay, better service and better price, which typically it's one or the other, right? And so I think the embedded finance model with players like Solaris and others who build modern technology and really like that next level of technology that just wasn't really available for us anywhere, and we then decided to pioneer into and really take ownership, is enabling definitely more players, more of those specializations that we're also referring to, where just the business model of those maybe niche players is not really the core part of banking, but for N26 really offering that current account and wanting to be that primary financial partner. I think really also owning the core technology behind it, being directly connected to all the payment rails and so on, has just really been instrumental for our growth, for our scaling, and is something I don't see as kind of too, let's say, outdated anytime soon, as we also continue to make sure the platform is adopting latest technologies. Having said all of that, I do think for more niche players or for these kind of specializations, it's a great thing that we see more opportunities for them to just get started, right, on a modern platform. We also started like that in 2014, 2015 with the partner bank in the background, because just to get started in the finance space, where you need a lot of regulatory equity and you need a lot of infrastructure, it just takes a lot of time for propositions to be tested. And so more propositions reach the customers faster, and therefore service gets better. So I think it's definitely a good development.
And how seriously do you lend? Because that's obviously the other virtue of having your own banking license.
Yeah, so we think really about the use cases that are most close to the customer's daily financial life. So in terms of lending, the most relevant use case there is overdraft, which is something that we offer to our customers as well, like based on our own books, own logic, and just helps customers, right, to have that flexibility when there's some liquidity gaps and these kind of things. We are not yet heavily in other more kind of once in a lifetime type of mortgage products, which I think is something also we, for now, is not the expertise or the key focus for N26, and is also an opportunity for us to partner then with other fintechs, right, who offer that very, very specific and have more of a partnership cooperation on some of those. But regarding overdraft, it's definitely something that has helped us to just offer that proposition as well to our customers with our own license.
Jörg, I know you're itching to get him.
Maybe that's a very nice handover, right? Because as Alex is saying, yes, N26 is on the everyday banking, the overdraft which you use here and there a little bit, that completely makes sense. While embedded finance is the other side of banking as well. It also partially like everyday around payments, but the lending side of embedded finance is coming into place more with the not once in a lifetime, but like bigger purchases. Let's look back. Also, embedded finance is a super old thing. One of the first embedded finance offerings in the US actually was Ford bringing out the Model T in the 1920s and offering a purchase plan for a Model T. So one-time effort, buy a car, a Model T, I guess, served you a couple of years, and buy that with an embedded finance model with a loan from Ford. And still in 2020, we're seeing the big techs moving in that direction as well, right? Get your payment, get your loan, etc., with your company where you're handling your business or your social life.
Well, exactly. And so I guess to summarize the point, Alex, if embedded finance allows anyone to offer loans, then the banks, including you guys, even if you're a newer bank, become this sort of back end plumbing, which means that I don't think I need to go to N26 to get my loan. I just think I want to buy this. I'll just do my loan using someone like Solaris as the back end, and I can get my loan directly. Does that not make you somewhat a secondary, less important player in this longer version of embedded finance?
I mean, I think for a customer, and that's, I think, one of the things that we've also seen to some extent with the unbundling of financial services over time. At some point, it's also a little bit, I wouldn't say confusing, but let's imagine a customer has 20 different service providers for all the different use cases, which I see today a lot. Yeah, people say, oh, I have a little bit of robo advising here, and I have this over there, and then I have a gold plan over here, and so they have 5, 6, 7 different apps, right? Which at the end of the day is something that, you know, people that are really very much invested and want to optimize everything, that fine, but it's still to some extent a burden, right? And what we see when doing our user research and just trying to provide the best and most simple banking experience, it's also giving this sort of peace of mind to some extent, building a brand that customers can trust, relate to, you know, that always, and that can to some extent give this full picture, right? Mm-hmm. So I do believe that if you have an N26 account that you're happy with, and they provide an overdraft that just lets you also do your purchase or do other things, to some extent that gives you peace of mind, then sort of, oh, here's a, you know, some niche brand I maybe haven't heard of that offers me a overdraft over here, and then for the next purchase it's another brand. And so I think just filtering out some of that noise as well is also valued by customers who maybe just by, let's say, the more everyday customer, right? So I think there's an interesting, because, you know, always on in these forums and in our bubbles, we tend to think, oh, you know, digital banking is already the standard, but you go somewhere, you know, outside of the main cities, and people just a year ago or 6 months ago stopped going to the bank branch, right? And so then I think there are always these couple of steps where we need to differentiate, okay, mass market and really kind of, okay, early adopters in our bubble, people listening to this conference probably, right? But there's always these two realities to some extent.
Yeah, that's probably a fair point. So just to finish off on a slightly optimistic note then, what do we think the single biggest opportunity is for banking of tomorrow? Kunal, if I could come to you, you could say the geographically, demographic, thematic, what is the biggest opportunity here that you see?
Well, I think that the global opportunity will be when touching and targeting a niche. So, for instance, you see ecological neobanks coming to the market. You see neobank for teenagers coming more and more to the market. But I think that you have everywhere when the target is not properly addressed, very place to be on the market. So, you know, for instance, the banking for teenagers has been here for ages, but has never achieved to reach and to acquire lots of teenagers. So I think when you enter a market that is not properly addressed, you can always take like a big part of the market by addressing this target very well. For instance, when we came to the market 1 year ago, so we had like around more than 3 players, and we did acquisition with 3 times what they did in less than a year. So I think that when you address very well the market and the target, you will have effect on the acquisition and the growth of your company.
So that's the opportunity. So in a year's time, we'll check in with you and see how that opportunity is developing. So very quickly to finish, I want to play a quick game of overrated or underrated. So I'll say a term or a theme, and you guys say whether you think it's overrated or underrated. So the first one is Facebook Libra. Jim, I'll start with you, and then we'll go Jim, Canel, Jorg, and Alex. Jim, Facebook Libra.
Well, I guess you could have an interesting debate about kind of what is it this week, but I mean, that whole topic is an important one. You know, I won't comment on particular provider solutions, but, you know,
oh, yeah, you guys were one of the founding members.
The whole topic of, you know, digital currency and blockchain clearly has a role to play. I think there's plenty of hype, but there's plenty of reality as well.
So you're saying?
I'm sitting on the fence.
All right, on the fence. Canal, underrated, overrated?
I would say underrated because it's not, I think most of for young people and even teenagers, it's not something that's very exploited.
Okay, and Jorg?
Digital currency is underrated, Facebook overrated.
Brilliant. Alex?
I think underrated. I think too less people are informed and knowledgeable about it. So I think overall still underrated.
Interesting. Okay, and the final one is green banking. So this idea that banking will be more ecological, but can also work as a business model. Jim, green banking?
Huge opportunity, underrated. I mean, I think you made a point earlier about people are looking for greater transparency, and that's certainly true for many people. I think big opportunity, people have hardly touched that yet.
Canal?
Yeah, I think too, and even with Gen Z, who is a generation very engaged in ecological, yeah, I think it's underrated. No.
Jorg?
What is underrated is being close to your business, close to your customers. And if you're close to your customers, you fulfill their needs. And if that is their need, then it's underrated.
Brilliant, Alex.
Maybe a bit of a controversial statement. I think it's maybe overrated in the context of looking at what is the main contributor to ecological challenges. You can say who is financed in the background by which monies and what is supported. But if you look at the actual sort of customer part of banking, I think the digital move in general is a very green or ecological move anyway, away from plastic, away from cards, bank branches, cash, and these things. So I'll stick with overrated here.
I always enjoy a controversial opinion, so that's a brilliant one to end on. Well, thank you to the 4 of you for joining me, and to our audience for watching, and I'll hand back over to Plug and Play. Thank you so much.
Thank you very much, Isabel. Definitely retail banking has much more space for innovation, and of course, Plug and Play will always be there to support any financial institutions. And we're slowly coming to an end of Fintech Europe Expo 2021. And with that being said, it's my great pleasure, great honor to welcome back here on stage, we've seen him yesterday, our director, Fernando.
Thank you, Felix.
Great to have you back, Fernando. Like, how amazing were those past 2 days?
It's been 2 amazing days, a lot of information. We're seeing a lot of different things that are going to be happening this year or happened last year. And we still have a lot of work to go through in 2021.
Well, we've just started the year, so there's enough time for a lot of work, right?
Yes, that's correct. A lot of innovation will come, and I see that the financial industry will definitely change this year.
It will definitely change. And we're actually looking forward to something very, very special, because you and your team have prepared a little, it's not a little something really big, because as this event evolves, we're getting more highlights towards the end, right?
That's correct.
Now, we're talking about the Fintech Europe Innovation Award 2021, a big title. What is it all about?
Yeah, so Plug and Play wanted to honor this year the Fintech Europe partners, those that have shown great efforts and collaborations between them and the fintechs that have gone through the program this year. Both institutions have proved that the motivation and passion, especially in a difficult year that has been 2020.
It's been difficult, and this award will, well, honor the most honorable partners you have in 2021. And I think we're ready for the first recipient, right?
Yes, that's correct.
We don't have a drum roll.
No.
I can give you like a virtual drum roll.
Okay.
Just imagine a drum roll. Who is the first recipient?
So the first recipient of this year's Global Innovation Award is UniCredit.
UniCredit, congratulations.
And with that, we have Marco Postella here with us.
Buongiorno a tutti from beautiful Milan. It's a real pleasure for me to represent UniCredit and all the colleagues that help us on a daily basis to the event. So I would like to use this opportunity to thank really Plug and Play team for recognizing UniCredit Group as their available partner. Together, we are working to create a new and better ways for us as a bank to serve our clients, which is also helping us in constantly evolve and improve as a company. Innovation means getting out of your comfort zone in order to make an organization resilient and ready for any challenge. Accordingly to Darwin, it's not the strongest that survives, nor the most intelligent. It is the one most adaptable to change. So the purpose of our central function is really to support the entire group on its transformation journey. To generate sound results, we have capitalized on the importance of orchestrating various different levers where fintechs represent just a part of the story. We have put a lot of effort into making our processes more flexible and adapting our services to meet changing client needs. And in these chaotic times where pandemic deeply affecting our habits with severe consequences on our lives and economies, our innovation strategy helped us to respond quickly to the crisis. And we also learned that we can be even more responsive and even more efficient when we focus on our efforts. We know there's still a long way to go, but we feel we are on the right path, and this award really means a lot to us. So thanks again to Plug and Play for the award and for the pragmatic support we are getting from you as your partners, which is strengthening our relationship more and more each day. So thank you again, Plug and Play, for this award.
Thank you, Marco. This award goes straight to UniCredit's headquarters in Milan.
All right, Fernando, this was award number 1.
That's correct.
I think you mentioned 2 awards, right?
Yes. So the second recipient of Global Innovation Award is Raiffeisen Bank International.
Raiffeisen Bank International AG, congratulations.
And we also have with us Christian Wolf and his team.
Thank you very much for awarding us this prestigious award, and we are super happy to receive that. And I think it shows the value of our cooperation over the last year, and certainly we are looking very much forward to a fruitful 2021. Thank you again.
Thank you, Christian and team. We're also looking forward to working with you in 2021. This award is going straight to Vienna.
So Fernando, we have 2 incredible awards, 2 incredible days of Fintech Europe Expo 2021, which would not have been possible without a big team behind the scenes. I think we should welcome them on stage, right?
That's correct. So I would like to welcome the whole team of Fintech Europe on stage. Welcome Alfredo, Hannah, Clara, Marta, Bob, and Peter. Welcome, guys.
Thank you to all the corporate partners for your continued efforts, and I'm looking forward to more success stories in 2021.
We're really fortunate to have worked with so many amazing startups in 2020.
And we're looking forward to continuing this incredible journey in 2021.
And for all of those partners that are interested in learning more about what we do at Plug and Play and how we support our corporate partners on their innovation strategies, you know where to find us and you know how to reach us.
So we hope you had a great FinTech Expo, and we also want to say a big thank you to all of our great speakers.
All right, guys, thank you so much. 2 incredible days of FinTech Europe Expo 2021. And I just said it, we're getting more highlights towards the end. We've prepared a big surprise in just a few moments. So that's it for FinTech Europe Expo 2021. It's been exciting 2 days and we cannot be more satisfied. I hope you're satisfied as well. We would have loved to have you here in person the last 2 days. And we're actually looking forward to next year when maybe we'll have you back here in person or maybe even having a hybrid event. Now for this exciting end of the 2 days, we've invited 3 guys and they're ready to turn down the house, take down the house and smash the instruments and smash the microphone. Please don't smash anything, guys. Okay. Please get ready for the K13 project. Guys, take it away.
Hey guys, this song's called 661. You hit me with another shot, I know you're at it again. Drunk, busy, in love with the pretend. You call me up, you tell me you don't wanna be my friend. And I was unaware, lost in my defense. Now I'm burning the pictures in shame, 'cause I can't forgive you. Try to forget, it's too late. I'll be begging you to pray for me, try, and I know you'll find solace in the words. There in the truth and lies, and old best songs will help you understand. I must confess, I've been so alone, wanna be myself. Oh no, I lose my way, I lose your life. Think you found the truth, but nothing that I understand. If I'm innocent in your eyes, I think I can feel a little better if you keep folding your hands. I think he's still waiting for another chance. I'm still burning the pictures in shame, 'cause I can't forgive you. Try to forget, it's too late. When I got no regrets, killing my voice in this place. I might get fucked up, but try hard to recall your name. Begging you to pray for me, try, and I know you'll find solace in the words. There in the truth in my eyes, I don't pass songs well. Help you understand, I must confess. I've been so alone, wanna be myself. Oh no, I lose my way, I lose your life. Nobody in a true outline. I'm a boxcar and a juggle, one little too close in a lethal dose, and a razor if you get too close. I'm a nobody in a true outline. I'm a boxcar and a juggle, one little too close in a lethal dose, and a razor if you get too close. Thank you. We are K13 Project. We came up with that name 5 minutes ago. Cool. This next song is called Hit Me. Wrote another song about you. Give it time and think it all through. I think you know, so if you give in to me, if I promise that I'll set you free, I think you know, so put on your dancing shoes, cause you got plenty of time to lose. Getting hard now to find my way out of this one now. But you find it really hard to complain. Everybody here knows your name. And to see I'm still feeling pain, it's the same. Try to run away from it all, but don't wanna jump out my fall. Of the way you lose control. Oh, if I come home to you again, if I'm bleeding out, hit me. Don't you see, the fantasy's so much better than the real thing. Long and cheap, but she leaves me weak, keeps me begging for it, my king. Don't you see, the fantasy's so much better than the goddamn. So much better than the goddamn truth. La 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 la. Swimming in a cloud out my mind, still I feel it crawling inside. Still on close, so running from the income inside. Feel like everything I am wants to fly. Still on close, so leave it alone, no excuse. She got plenty of time to lose. Getting hard now to find my way out of this one now. You find it really hard to complain. Everybody here knows your name. Ecstasy, I'm still feeling pain, it's the same. Try to run away from it all, but don't wanna jump out my fall. Love the way you lose control. Oh, if I come home again, come on, let's just pretend. If I'm bleeding out, hit me. Don't you see, the fantasy's so much better than the real thing. Tongue in cheek, but she leaves me weak, begging for my cake. Don't you see, the fantasy's so much better than the goddamn truth. About it again. Now you know I'm just a lost soul. It's easy to pretend that I'm glad it's the end. Cause I'm shaking, bleeding cold, and I'd rather be dead. Now I'm stuck in my head. Still love is taking in the lies I regret, praying that I forget. Giving in to my demons when I lost that bet. I got a feeling it might be real, I hope I'm dreaming. It's like I'm running out of time, busy still believing. Nothing ever feels alright when this will always reason. Another try, so let me take you for a ride. Catching bullets in my teeth, you know I'm so defensive. Giving me some room to breathe before it breathes your senses. Now I'm seeing you and me, killing the past reflections. Now it's too late to go, didn't matter at all. If I come home to you again, if I'm bleeding out, hit me. Don't you see, fantasy, so much better than the real thing. Tongue in cheek, but she was me weak, keep begging for my kid. Don't you see, the fantasy, so much better than nothing. Thank you. This next song is not really written, it's sort of just a jam, but it'll be fun, I think. So hope you guys enjoy it. can't quite decide. You and I push it away, you can't stay. I've been talking to myself, gotta get out of this tragic state of mind. Walking blind, play it louder. Someone's daughter feels the need to cry and tell a lie. Oh, you question me like a Mustang. Would you love me if I can be straight? Oh, this place can't quite decide. Future, you and I. Push it away, you can't save them. Thank you.